knuckleheads. Happy Wednesday to you both.
Hello.
How's everybody this morning? You guys just like the market this morning? Meaning not up, choppy. Not down, big range all day long.
I'm a hot mess.
Are you a hot mess?
Yes, I'm a hot mess.
The market is too a little bit.
Yeah.
Yeah, you a hot mess?
No, not so much.
Oh?
Not so much.
Oh, you're okay today?
Well rested.
Are you packed?
No, I have to do that today.
Uh-oh.
I'm like sort of packed. I'm ready to go.
You're leaving for Thursday and Friday. This snuck up on you? Like it snuck up on you? Like,
well, I had golf.
You didn't know it was happening?
I had golf last night, so I had to.
Oh.
I was concerned with the shipping of golf clubs because I have some very nice golf clubs.
Oh, you're shipping. You're using chipsticks.
Tony from Mexico, not this Tony.
Yes. No, the good Tony.
Good Tony. Uncle Tony.
The billionaire, the Mexican billionaire.
Shout out to Uncle Tony.
Yeah, shout out to you, Uncle Tony.
That helped me I just have this great set of clubs. I'm like, do I get the hardcover bag? Everybody's like, the hardcover bag stinks because you can't, it doesn't fold up and it's like too big. And
you have to store it somewhere.
Oh, that would be
right.
That would be a disaster.
But it is more protection because I have the same thing with my snowboard because it's like, but I have a hard-sided
rich girl problems we're talking about this morning. Go ahead, keep going, guys.
Snowboard case.
Yeah.
See, it doesn't hit when you say it. Like it just doesn't hit. Like it just doesn't hit. Like when you say it.
Too high
but I have like a hard-sided snowboard case, and that thing has like saved all of my gear. But it comes in half though.
Oh, so you can like fold it up.
Yeah.
That's better because the big golf ones, like
I know,
I would need a new condo.
I rent them.
Rent the clubs there.
Wherever you're going.
I would rather just bring my club. I mean, the rentals are $100 a pop.
Oh,
it costs you twice what it is.
I mean, you're going to Vegas. What's $100? I mean,
I'd rather have I want my club.
I'm with you, Nikki. Like, I'd rather have my own snowboard and my own clubs.
Strange clubs are good sometimes. You know what I mean? Different swing and different action.
How unmedicated are you today?
So I settled on I'm borrowing a friend's half hard shell, half soft shell. So the top, by where the clubs are, club heads is a hard shell.
Right.
And the bottom is a soft.
We call that a Crunchwrap Supreme.
Yep. Basically. I bought a soft one, but I was just like, oh god.
What's gonna happen? It happened to my friend. Got his clubs. We know the friend too. Shipped his clubs and half hard, half soft, and right down the middle of his bag was like somebody ran it over with a truck.
What airline?
I don't remember.
Okay, so you should be good.
And I've already put it in like my checked bag.
Yeah.
Knowing him, it was probably Southwest at the time, but I don't know.
Yeah. So but I've done all the necessary precautions.
That's good.
I've taken all the heads off the woods in the driver.
I don't know how you've been sleeping well.
So those are going.
Problem that you have.
Those are going into my carry-on. So I have you can take the head.
Oh, I didn't. So you're literally just shipping the shafts.
Well, the
and your irons.
And then the irons. The irons, I got some bubble wrap. So I bubble wrap the irons. And then
is your girlfriend like, what are you doing?
she's like, yeah, I wish you cared about me like you cared.
I mean, all this to shoot 104? I mean, really, honestly.
I've been playing really good.
Yeah.
But then I bubble wrapped it and I put some shirts in there and stuff, just to give it extra padding.
Sure.
Did you kiss it when you put it in there?
When I drop it off, I'll be like, please be safe.
Put AirTag in there.
Ooh, I don't have an AirTag.
Oh, you should get an AirTag. There's that extra layer of insurance is for your next time, your next trip. Yeah.
That would have been a smart call.
Yeah, but that's okay. Yeah. Next Prime Day, you get hooked up. Yeah. So what can you divulge? What courses you're gonna play or where?
So we've got Black Desert Mountain.
Okay.
Sand Hollow.
Okay, I know what these are.
Creek.
Oh, okay.
Yes.
Ooh.
Big names. Should be fun.
I'm excited for you.
I'm playing from the whites. I will not play from the blues. I'm playing from the whites.
Good for you.
It's called growth.
I always get baited into play the blues. I'm playing the blues because my buddy is much better than I am. Golfer.
Well,
you haven't seen the animals throw those bags around. And that comes from my sister who works for an airline. No, I'm just kidding. It doesn't come from my sister, but
I know. Well, that's why I'm so concerned.
Yeah.
Oh, man. I'm telling you, you should just rented them. Strange clubs are better than no clubs at all.
I don't know. Then my buddies, my golf buddies are like, oh, it's fine. It's totally fine. No big deal. Chip clubs all the time.
Yeah.
No problem. So
I think you'll be okay. How's the weather looking?
Kind of cold. Maybe like high 50s, low 60s.
Oh, that's not bad.
Yeah, not too bad.
That's fine.
Yeah.
See, everything is relative.
Yeah.
Right. When you come from 20s, 30s, and 40s.
It'll be perfect
Yeah.
for us.
That sounds beautiful.
No problem for us.
Yeah.
But like, it's not, I want to wear like pants.
You don't want to wear pants?
I never want to wear pants.
Oh, okay.
No.
You're a booty short kind of guy?
Yeah. So, but it should be good. It should be good. I'm excited.
Well, that is good.
Yeah.
That is good. And then, yes, some programming changes. I will be hosting the show tomorrow with Liz and Jenny.
That will be
Iconic Electric.
electric. It'll be iconic and electric.
And then Friday, Mike and Jamal, I'm hosting with them. So where are you going? So just because he's gone, you can't be here?
I have special plans. I have to carry his clubs to Vegas.
No, because I was talking to my parents because I was telling them about the schedule, and my mom was like, "Oh, well, where's Bat going?" And I'm like, "Nowhere." I'm like, "He just gets to go home."
What do your parents think? Like, are they more of a Big Bad fan or a little?
Don't
They like you guys together, actually.
Okay.
Yeah.
We-
They like the dynamic. They like the dynamic.
Parents and I have history together. I mean,
I know.
we have like a decade together. You're like a newcomer on
know.
here.
Yeah.
You're making headway. Don't get me wrong. I don't think they were ever too fond of me to begin with, but you're making headway.
So wait, you're really not going anywhere? You're not going down to Florida, or?
I might be. I don't know. I haven't decided yet.
Okay.
I'll keep it like that right now. I am leaving for spring break to Florida.
When?
March 21st-ish, Saturday to Saturday.
Oh, so you haven't taken enough vacation.
That's correct.
Yes.
Nobody wants to work anymore. Okay,
Right.
cool.
Yeah.
Cool.
Right.
Well, I got a trick for y'all.
Catching up to you, sister.
I got a trick for y'all. Work day here. Hold on. Request time off.
Yeah.
Go ahead.
Yeah,
Talk amongst yourselves.
Yeah. He.
Poop rolls downhill.
Yeah. We give him his credit. He did 10 years without a.
15 years. I served my time.
He did service.
Okay. Well, something like that. Well, I'm excited for you both.
It didn't sound like it. I'm not gonna lie.
Did it jump up and down?
But I'll be at Zion too.
I know. I'm so excited for you. It is. It is one of my favorite national parks, and I got to get back there. Like, there's more trails I want to hike and more pictures I want to take. And
I wanted to ask you too, the hiking, like, scale.
yeah.
What would you put it at?
Difficulty,
like.
So if you can get a permit for Angel's Landing, I couldn't hike Angel's Landing. Like, that's like the most extreme, but it's also like the most beautiful, but it's a permit only. And so
Why?
you can do,
Just
because just the Park Service can like regulate the people, because it is kind of a dicey trail. So you can do the day
ask for
before.
forgiveness than permission.
So there's a lottery. So you go recreation.gov, download the app or go online, recreation.gov, go to Zion Park, look for Angel's Landing. So the day before, you put in your name to a lottery. I think it's like $3 you put in. And then they'll tell you if you get the permit for the hike. So I didn't get to hike it because I didn't. So now the permit is open, like if you want to go out maybe like 6 months. But for your situation, you've got to do the day before lottery.
Okay.
So.
And then the other ones are.
Other trails are really good. There's some really nice, like very mild, like we're talking like toddlers and Crocs, or they're fine.
Okay.
Like, yeah.
All right. So for the most part, I
Yes.
can get away with just like normal gym shoes. We're not talking.
I think so. It depends. Like if it's like, it might still be a little slick because it's a little bit higher up. So I don't know, because they did get snow when the snow came through the Sierra Nevada. So I don't know, but you can check the National Park Service sites. They will tell you the trail conditions of the trails. So
This is good. This is the difference between male and female.
But then you would need like micro
Never been
spikes.
more lucky than when she's
Then you would be
prepared.
like micro spikes, but you could check trail conditions.
I don't know if I would do like the micro spikes, but
Those they just go over your shoes.
Yeah.
You just wear them over your shoes. They're not.
But I would think like I don't know, like the Arizona type hiking. You want like kind of like a boot.
Yeah,
Like,
yeah.
Like
I would just check the conditions. I would just check because I know like Bryce Canyon, which is near Zion, but Bryce is a higher elevation. They got a lot of snow.
Okay.
From the storm like the last week or two.
Okay.
But I'm not sure about Zion itself. So
All right. I'll do my preparation
as
I didn't do it 6 hours before.
You should have.
Yes, I probably should have done this over the last.
You can do it on the plane too. You got Wi-Fi on the plane,
That's
so
true.
do it on the plane.
T-Mobile, shout out.
Hey.
Yeah, T-Mobile free.
Free 99.
Good.
I love that for you.
Yeah, thank you.
What'd you get up to last night, Pat?
Tough conversation with the kid about spring hockey or not.
Oh.
Yeah. And his job this summer.
You got to get him that. Did you tell him?
I did. I talked to him about it.
What did he say?
He was open. He was open to it. A job that my son had
delivered pizza.
I thought this was the car salesman.
No.
He's not ready for that yet. Maybe he can wash cars.
This was my second job. I did Best Buy.
Okay.
That was salesperson at Best Buy, and then I delivered pizzas on Fridays.
Ooh, that's pretty good.
Pizza, chicken,
ribs, some good food.
Mm-hmm.
I mean, when I was in high school, my enterprising job was I worked at Office Depot. Because I got a 10% discount on a computer and I needed a computer for college. So I worked all summer and then I got like a discount on like a Gateway or like a Dell or some sort of computer.
Just download a code somewhere on the internet and save yourself all that work.
Back then, there was no code on the internet.
I guess. There was no internet.
I know.
No computer.
We're talking Gateway computer. The cow-looking ones.
Yeah, you're getting a Dell. Yeah. I got that sweet 486.
Yeah.
Woo!
External hard drive.
Yeah, catch me outside.
All your downloads.
Catch me outside.
Like music.
But no, he can find a good job.
No.
But he doesn't know if he's going to play spring hockey, or you don't know if he's going to play spring hockey.
His decision.
I see. Okay.
And he's on a fence. He wavers back and forth. I think he's at the point.
Like, it's a lot. He's like, look, I got a
lot
license.
of commitment. Mom and Dad, I think, are okay with whatever decision comes up. But no spring hockey would be nice for us.
You'd save $6,000.
No, that's only like $1,000 or something like that. But it's just, It's a
lot of time and nights and weekends.
Yeah, and it's a lot of he's getting into wrestling now a little bit.
Oh, okay.
Yeah.
Okay, that's good.
Yeah, he's been working out for the last couple of weeks.
How much does he weigh?
Maybe $138 or 40 something.
Oh, okay.
I'm not 100% sure.
Okay.
Yeah.
I don't know how wrestling works.
He dropped about 10 pounds. Yeah, I don't know. So he's been getting into wrestling. He's been hanging out with some wrestling guys, and they've been taking him working out. So he's been kind of going in that direction.
But it's good if you could do like a school sport. So
that's what he wants to do.
Right. Like instead of like a travel.
He wants to take
a
wrestling class, and he doesn't, know if he can do both and work. He wants to work, but he wants to work with his friends. That's the problem that I'm having. I know. He'd rather work from 5, 6 o'clock at night till 11 o'clock at night than work from 5 to 8 and make the same amount of money. In the other job. But
silly.
Wants to be with his friends. He's social.
Too, no taxes.
And no taxes. I know. Shh.
Like doubles your
30% at the very least.
Great. Great.
Mm-hmm.
I mean, they have annihilated the IRS. No one's going to get in trouble. It's fine. Like, shoot your shot.
I always wonder that.
Shoot your shot, everybody. Like, it's bare bones crew. I mean, I paid my taxes, so I'm good. But shoot your shot. I'm also looking for a wrestling partner. If no,
ooh,
okay.
Yeah.
See, it hits when you say it.
Yeah. See, that hits. I will tell you though, Nikki, suffering this morning. First of all, traffic was just a nightmare. Got right on the interstate at my house, which is, decent amount. I'm close to the sea, but already just like backed up. So had to call an audible, take the Chinatown feeder. I'm like, I'm in Chinatown. Then I'm in Greek town. So I just made myself hungry. City's beautiful in the morning. It wasn't as much traffic, but I was had to.
What's happening?
It was just traffic was just backed up past where I live, which is pretty far from the junction. And so then when I got here, racing in here, then I get stuck in the elevator with who? The Chick-fil-A delivery lady.
Ooh,
she's back again.
Oh.
Skinder, who's whatever Skinder does. I think it's some architecture firm, construction or whatever. They're on the second floor of this building. And they're getting Chick-fil-A on the reg. And
every single day.
Right. And I had to hold the elevator for her. And she's like, thank you so much. And I'm like, I hate you. I know, it smelled so good. Anyway.
Good for them.
I'm on the struggle bus. Yeah.
Maybe we'll get bagels one day. Who knows?
No, I want Chick-fil-A.
People are writing into me that there's a higher delta for a college wrestling scholarship than hockey, as more schools.
Do you know what the best golf?
I think we're getting a little ahead of our skis here. Okay, I don't think he's.
Yeah, he picked up wrestling about 2 weeks ago.
No, but I'm saying, golf. But if he likes golf, but if he could get good at golf,
street corner material yet.
No, but you could get a scholar no concussion, get some. But if he can be good,
big ears though, you got to wear the ear cups or whatever.
No, golf.
Oh, golf. Yeah, we're a little ahead of our skis there too. He has his talents.
Right, but I'm saying if he can play golf, that
was there for a moment too. Yeah. Trying to do the golf team. They only have 7 kids or something like that on the golf team. And so you're not
by design
not a walk-on material.
Oh, okay.
Yeah, without But
isn't there's not a JV and a varsity?
I don't know to be.
Oh, because even my school had JV varsity golf,
Yeah.
But my friend, he ended up going to Clemson for golf. So it's not bad.
And you just learn a sport that you can play forever.
Right.
That'd be awesome.
Right. Yeah. Anyway, pretty good. Hey, we got a great show. We got a great show for you today. Welcome to Vinny's career hotline.
Yeah.
I don't know what's happening. I don't know what the show is. Just got away from me today. Just got away from me today. But we got a great show on this wonderful Wednesday. Happy Hump Day to you all on this Assume the Position Wednesday at the top of the 8 o'clock hour. And Options Jive, the 3 decisions that make or break a trade. Nikki, break it down.
Ooh. I mean, we're talking through just starting out a trade. I like it. A couple of decisions that you want to take into consideration.
Okay.
Talking about rolling positions, like when you roll, why you roll, that sort of thing.
This is how we do it. Yes. And then at 8:40, Assume the Position Wednesday. So we got What's Your Assumption? Headed your way at 8:40. The Bats doing viewer-submitted trades. So reviewers write in with an underlying and a directional bias. The market is crazy. Volatility is crazy. Massive reversal yesterday. Crazy move. We're up this morning. I don't know what's happening, but our viewers are very smart. So they're going to have some trade ideas. That's at 8:40. And then at 9 o'clock, got a little tasty extra TP in the house.
TP, cherry picks.
Cherry picks.
He's got a little a look at S&P versus RSP, which is the equal weighted. So we're going to talk a little bit about that.
Interesting.
Right. Should be an interesting take.
Okay.
TP, anytime he's on, the crowd goes wild. He's got.
I saw when he's upright. He's upright. He's on with Liz. He's got new shirts.
Yeah.
I think this one had lightning on it. Yeah. I love a glow up.
Yeah. He's glow up.
Yeah. I love a glow up for TP. Yeah. And then we got live from the trade desk at around 9:20. We got Quentin in the house counting down the top trending tickers over at Tasty Trade, and Glenn G Money in the house. And then Liz and Jenny will be back together, reunited, and it feels so good. Live from the floor, the SIBO. It's always electric. When it is alive.
No.
Also, Liz and Jenny are going to be in with me tomorrow. So there's that. But that's our run of show for today. In the meantime, in between time, you want your daily dose?
Sure.
Yeah, let's go.
Do it.
Our leading story. Breaking news.
Coming
across the wire. Our leading story. Top stories. Jump in.
In today's headlines.
This just in.
Breaking news.
All right, everybody. Today is a wonderful Wednesday. It's March the 4th. It's the part of the show we like to call the Daily Dose, where we talk about today's financial news and headlines. My name's Vanetta. Are you ready for the news?
Ready for the news.
Earnings.
Crowd was up. Well, yesterday, Crowd was the only thing. It was a hard trade, way too wide markets in my eyes.
I guess you got.
I got it. Yeah,
well inside
about that. Yeah.
AVGO for today.
Okay, Broadcom.
We have a position in it.
Broadcom.
EVGO, you got Rigetti.
Rigetti.
Closed today as well.
Is it little Rigetti?
They're not really that interesting. Yeah, it's really just AVGO.
Okay.
And Rigetti.
Rigetti.
And Rigetti's AVGO is up $3 or $4. Sorry.
Also, just as a note, I knew things couldn't be this good for this long. Because you know how we were talking about it's so nice and bright outside when we leave to come here very early in the morning. We got to move our clocks forward on Sunday. So we lose an hour of sleep Sunday. So don't miss your flight. Don't, whatever.
Sunday night into Monday?
Yeah. No, Saturday into Sunday.
Oh.
Yeah. So you're gonna lose an hour of sleep in Vegas. I'm sorry, Nikki.
No, I'm outside Vegas.
Okay.
Anyway.
Yeah. So, that sucks. That hit me hard. I was like, can we stop doing this?
I don't like that.
I don't like that either. Because there's not enough Celsius in the world. Anyway, first headline of the day, Fed's Williams says rate cuts are still possible, but he did not address the war in Iran. He says inflation should ease and hit its 2% target next year. He says rate cuts eventually possible if inflation follows this expected path. But he says monetary policy is well positioned
Not a panacea.
for risks. Let's talk about bonds because they are doing bond things. Yeah.
They're doing their thing. Yeah. Bonds have been kind of
bad 3 days if you were a bull in bonds. Traded almost up to 119 and change. Now trading under 117, 116.28.
Well, that's not that bad.
Well, a week or so ago, they had a nice 4-5 up day. Today we've had a nice 3-4 down day in bonds. IB rank's only 14, but you could place your bets. Much like the market. I mean, here we are, 68.50. I'm rounding up by 5 handles on the E-mini S&Ps, which was the old kind of midline. Bonds, same thing. I mean, they've been down around 114 up to around 119. They're 117. Place your bets.
Yeah, bond volatility has been low, but we're at like kind of the high of this year so far in terms of volatility, which is
Baby Shark has a hard cover case.
full hard cover.
Yeah, if you want to borrow it.
Oh, Baby Shark has it.
Baby Shark.
But he already shipped. Like they're picking it up today, right?
No, I'm shipping it on the plane.
Oh, you're going to carry on. That's right. We discussed that. Cash became king in the global markets yesterday as that escalation in the Middle East continues to go on, dragging down other things. But first, I just want to talk about cash. Let's talk about the dollar here and the moves that currencies are making.
Over the last couple sessions, we've gotten back to, like, if you use DXY as your proxy, we're basically back to where we started the year, which was very, very low. So we've had a nice rally in the dollar. It's not
no high fives.
No high fives.
Sure.
Been good.
So what do you do now with your dollar position?
I'm still long because I was getting long at the end of last year, which is where we're kind of at right now.
Right. So you got to reset.
Yeah. So you got to reset.
If you want to.
Yeah. Yeah.
But you stay in the course.
Stay in the course, yeah. Missed some of the trading in the euro. The euro had some...
Euro's up small after making a recent low. I mean, a low that it really hadn't seen since November of last year. And it was a quick 4 or 5 day
It had
sell-off.
a 1% move yesterday.
Yes.
Right.
Oh, wow.
Which is
pretty big move.
That is a pretty big move. How about our friends in Japan? What's the yen doing this morning?
See, he's abstained from that, and right, the yen has no rhyme, no reason to it.
It's up small, but
it is up
low.
small, but it's near its lows.
Yeah.
It does what it wants?
It does what it
A skosh off.
Well, all the investors making a dash for cash sent the momentum trades down the crapper. Gold, silver, and South Korea were down big yesterday. I'm on the next story here. They amid fears that the war in Iran could go on for longer than expected. Each of these trades were have been huge momentum plays in 2026. Of course, gold, silver, and South Korea. Nikki, what did you do?
So we have a little bit of long delta in South Korea just with this move. We did a strangle. I think this was
In EWY?
EWY.
Okay.
We did that last week. You had a huge move over the last 2 sessions in South Korea.
Oh, yeah, going
Massive.
from around 150, 145 down to around 125 on its lows. It's sitting around 130 right now, down $2.
So I scalped out of the calls, and so I'm just short the puts, long delta in small. It's not like the markets there are okay, and I think
And you covered the call because it got down to dimes.
yeah,
I
it
mean,
was like $1.
yeah, relatively speaking.
$4, buy
Yep.
back at $1. Gold and silver, I took yesterday's move as a prime time to roll out to April. So I rolled out to April, kind of flattened my delta a little bit, moved the strikes a little bit when I did that roll. So just kind of flattening out the delta a little bit. I'm net long in both. I also added some calendar spreads. I think upside calendar spreads are interesting because of how high volatility is across the curve, but the front being the highest volatility. So selling some sort of upside volatility with calendar spreads.
Okay. How about for you, Bat? I know you're not super big into these commodities. But
Yeah. Although I'm not going to manifest that anymore, I actually tried to. Gold traded down to 5,100 again overnight last night. I was wasn't really doing much in the futures part of it, hopefully looking and preparing this morning, thinking that gold was going to be down around 5,100. I was going to try to sell some puts in GLD or something like that. Now it's 5,200, up 75 cents. So I didn't get a chance to do anything in gold. So I'm not manifesting the bad stuff about commodities anymore. I'm just going to trade them small.
I love that. I love that journey for you.
Thank you. I'm growing. I'm growing. Yes.
The U.S. Treasury Department and bank regulators are eyeing a comprehensive review of bank liquidity rules, arguing existing rules are ineffective and impede lending. Senior Treasury and Fed Reserve officials discussed changes to the rules yesterday, saying the revised requirements could ensure banks utilize tools meant to keep them afloat. I'm not sure if there's anything going on. Mainly, I wanted to ask about the Russell.
Well, the Russell was real weak yesterday. I mean,
after being the strongest of the group on the rally back,
almost by a 2-to-1 margin. It's pretty much in line right now. Maybe a skosh more strong or more, I should say, higher than the rest of the market. Almost 5/8 of a percentage point to maybe 0.5 to 1/4% for the rest of the market. But the market was unchanged just an hour ago, and it was right here an hour before that. So it's been oscillating back and forth.
The Russell and the NASDAQ have been the most volatile. In either direction.
Yep.
Makes sense. Interesting news from the ECB. The spread of stable coins in the Eurozone could weaken the effectiveness of monetary policy and siphon, deposits away from banks and reduce lending to the real economy. That is all according to a study published by the ECB on Tuesday. Stable coins, which are crypto assets designed to maintain a stable value, remain niche, but governments are exploring them. But according to the ECB, it would be negative. Sacre bleu.
Oh, no.
I just want to talk about crypto.
Yeah, I will say Circle, which had earnings, I think last week or maybe the week prior, had a big move off of, granted, it's much lower than even where it IPO'd. I think it IPO'd, maybe it's more around here.
Oh, okay.
But I mean, it IPO'd and went up to like 200. Like,
Gotcha.
It was one of those that had massive.
Look at Bitcoin, though, up to 72,000. Traded down to 68,000, up to 72,000. It's 71.5 right now, up around 3,000. That's one of the first moves of that magnitude to the upside that we've seen in Bitcoin in what, eternity?
Yes.
Seems like.
We have not stayed above 70 for very much, if any time in the last month or so. But where I was going with this is that, Circle is kind of it's bucking the trend. Like even when we were down huge, Circle was up like $7, $8. And it's having a nice little bounce here. And Circle is like one of the, bigger of the stable coin providers. And it's kind of showing that, maybe there's a little bit of something here.
Okay.
Not only with the banking stuff, but also with like the AI transactions. People are thinking about that a little bit more. You haven't really seen a bounce back in any of the like Visas or AXPs or any of those stocks. So maybe there's a little something there. Like when there's smoke, there's fire.
Okay.
So.
All right. Well, keep an eye on the crypto skies. Crowdstrike gives upbeat earnings outlook as AI raises the stakes around cyber threats. The CEO cites elevated demand for Crowdstrike's Falcon cybersecurity platform in the AI era. The company expects fiscal quarter revenue of $1.36 billion to $1.364, and adjusted earnings per share of $1.06 to $1.07. So that's right in line with analysts' estimates. Crowdstrike.
Yeah, CRWD going well inside the expected move, up or down $2. I mean, on a $390 stock with a 60 IV rank, it's going to be a home run. Whoever sold
$30
premium.
expected move.
Yeah, if we stay here.
Yeah,
the opening.
I had some short premium, which should work very, very nicely, far out of the money.
Nice.
Given the non-move here. I also added a little bit of long delta with the call diagonal spread. So I'm probably net going to be maybe up small, depending on where it being kind of flat here after all the SaaS stocks have just been murdered. I think you probably get a bid here into the open, but we'll see.
We'll see.
We will see.
Only time will tell.
Yes.
You guys were talking about this before the show, and I'm glad we saved it. But Micron, another memory stock, see outsized losses. What's behind the big moves? Memory stocks fell sharply yesterday in sympathy with their South Korean counterparts. What's going on in memory?
They're back.
Like the corners of my mind,
misty watercolored memories of the way we were.
Is that Barry?
Is that Barbara Streisand? I don't know. Hold on.
Oh, Barbara Streisand sang that. Yeah, the way we were. Yeah, sure. That's the
it's from the movie. Yeah, Robert Redford, Barbara Streisand.
Yeah,
Put some respect on my name. The way we were.
Sorry.
It's a iconic romance.
Oh, I don't know it.
It's okay.
It's okay.
It's okay. Before my time.
You are right, but MU's not. Closed at 380. Looks like it's going to open around 390, up around $10. Doesn't tell you the whole story. Down from around 440 or so.
But you got to buy those dips.
Ivy rank of 78 now. That was a hard
that's
one to buy.
high.
March 18th has earnings, so just
Volatility is through the roof in all
2 weeks.
in the SanDisk, Seagate, Western Digital, Micron,
SanDisk was down huge
EWI. They're all
yesterday.
in the memory game right now, so it's
SanDisk down from around 650 down to around 560, and so now it's back up to about 580.
Yeah.
But SanDisk options are untradeable.
Yeah.
What about STX?
same thing. It's in that same bucket. I mean, they're all, a lot of them are news driven, momentum driven.
Sure.
Micron has earnings coming up here, I think, in early
2 weeks.
March. Yeah, middle of March, actually. That'll probably be.
You listen just as much as the creator used to. Said that to you, but yeah.
I heard you. I got you. Hey, facing backlash, OpenAI's Sam Altman says he made a sloppy mistake in the Pentagon deal when Anthropic would not meet the Department of Defense's demands to unleash all the guardrails, and they closed their $200 million contract. OpenAI was like, yeah, we'll do that. But then people got mad because they're like, why are you pandering to the government that wants to use you to maybe surveil on all of us? So uninstalls of OpenAI went like this, but installs of Anthropic went like this. I don't know who the winner of this will actually be, but at least the CEO did admit that he came off as opportunistic in how he announced the company's new government deal. So,
Is this part of OpenClaw too? I got a buddy of mine.
no, that's different. Yeah.
Oh, I don't understand all this stuff. I have
There's Claude bots, and the OpenClaw and all the agent. Yeah, I can't. I know. Every day it's like just
Things
it's too
are
much happening.
moving.
Every day we're hustling.
I know
Hustling.
things are moving, and it's fast.
Yeah.
But Palantir stock could surge almost 40% if the Iranian conflict continues. It dispels a big concern, and Palantir should be able to prove its growing value to the military and quell fears that it's merely just an AI wrapper.
Such a clickbait headline. It's so stupid.
But what can you do that's actionable in Palantir?
We have to have a little bit of long delta in Palantir.
Okay.
Not anymore with this move. We're kind of short delta. I have a inverted strangle here, but
Yeah, we were long it down at 130, and so now it's back to 149 or so. But I mean, it's such 40%. I mean, yeah, when? In your lifetime? Like you expect? I mean, like.
See, that's the beauty of this job. Like, how do I
you
become an analyst?
Yeah.
Like,
put a number.
right?
Anything you want. Anything you
Awesome.
want. Yeah. I don't know. Anyway, 149, Ivy rank at 23. Expected move for the whole year, let's just go to December is about $58-$60. So you're not too far off his 40%, but maybe more like 25%.
Well, staying in that defense and is everyone spying on me space, U.S. defense firm Anduril is set to double their valuation. They just announced $4 billion. They're seeking to raise $4 billion from venture capital firms, but it would see the defense startup's valuation almost double. Anduril was valued at $30 billion in a funding round in June. So now with this $4 billion raise or line of investment, they could be worth $60 billion. Did you invest in them?
I did.
Oh, so now you're buying me Chick-fil-A.
Who got you in this one?
Cannot
This is like
reveal
an
my source.
anti-Sosnoff thing.
I cannot reveal my sources. Yeah, let me tell you something.
I didn't know you had it like that, okay?
When money's on the line, everybody does what they want to do. Not necessarily what they say they're going to do.
Okay.
You got a good memory, Vanetta.
Yeah, of course.
It's going to hurt
flawless.
you in the searching department if you're going to keep that memory so good.
How is it like? But nothing I'm saying is false, though.
No, it's the truth.
Like, okay.
No, it's the truth, and the
Okay.
truth hurts more than fiction a lot of times.
Listen, I want chicken biscuits. I
I
want the
tried to
hash
tell
browns.
the truth to somebody who sent me an email last night who works in the company. They didn't take it very, very well, and from now on, I'm going to have to play the game like everybody else. How can I help you?
I want chicken.
Let me
biscuit.
know how I can help.
I want chicken biscuit. I want hash browns, and I want the fruit cup.
All right.
In other news, Apple is raising MacBook prices across the board as MI5 chips and new displays are signaling Apple's AI-first strategy. Apple rolled out new MacBook Pro and MacBook Air models with M5 chips and a revamped Studio display lineup. But it's good. The base storage of the new MacBooks, it's going to be a lot higher. So I think starting at like 516 gigabytes. And then I think the MacBook Pro is going to start at 1 terabyte. So that's at least nice. But you are going to pay more. But obviously chips are hella expensive right now. The MacBook Pro will start at $38.99 for the 16-inch M5.
Maybe this is why Apple's been hanging in there and really not having the huge volatility that the rest of the markets had.
$4,000 for a laptop is crazy work.
No inflation.
Yeah, right?
Well, inflation's 2%. It was prior. It went from 0 to 30%.
Yeah. So
it's now 32%.
My guy Sergio in the chat, he's saying, "Damn, Tony, taking us all the bonefish."
They closed the Bonefish. I didn't want to tell Dr. Jim that the one that he used to go to for his love dates is closed.
Really?
I think they're still open in Florida.
Yeah, maybe in Florida, but
Yeah.
the one that he would go to here in Illinois, yeah, it was closed.
In
Yeah.
Florida, it's like an institution.
Sure, of course. Of course. What are you guys doing in Apple, if anything?
263 and change, unchanged, actually maybe down 50 cents.
Apple's been a tough trade because there isn't, Apple has 31% implied volatility.
Sure.
Ivy rank of 24, and it really hasn't. It just hasn't been like kind of in the spotlight. Hasn't been a mover.
I gotcha.
Mover and a shaker, and volatility isn't that high. So it's
Yeah.
what do you do?
Well, how about this? Pinterest shares popped 9% yesterday as activist Elliott Management announced they are taking a $1 billion stake. The company plans to use the investment to buy back stock as part of a $3.5 billion share repurchase program. Pinterest said last month it is seeing pullback in advertising spending due to tariffs.
I mean, yeah, it's off its lows of 15, well off its highs of 40. If you're going to go back a calendar year or less, I'm talking about August of last year, up to $19. I'm looking at the markets here in pins. They're not bad.
Okay.
For a teen size stock here, meaning 19.
Cover
18.
calls, short put.
Yeah. If you're looking to do something in there, good implied volatility, 58%, which means it's basically going to be cut in half. Or be a $30 stock for the year, so you get some play there, especially maybe in a smaller size account.
Come on, Pinterest.
Have you used Pinterest in a long time?
I do use it. It's just, it gets frustrating because the sites that you want to go to, it's so much just
A lot
like
of times-
pop-up ads and stuff. And
Well, you
and then,
can't find the site, like the site's dead.
yeah. Or the pins are like AI generated and it
Yeah.
like doesn't even, it doesn't even exist. You're like, oh, this is cute. Not even real.
Yeah, that's starting to get annoying.
Yeah.
Like you'll watch something and say, oh man, that's pretty cool. How'd they do that? And you go to it and you realize,
Right. I wish there were things that were AI were more clearly labeled. There's my boomer rant of the day.
I
guess.
agree. I hear you.
It's hard.
You'll all come around eventually.
Yeah. Yeah. Qualcomm CEO said that robotics will become a larger opportunity for the company within the next 2 years. In January, Qualcomm launched a processor under the Dragonwing brand. I love all these names. Designed for robots. What? Qualcomm's going to make me robots? Yeah.
I don't know. Qualcomm has not participated in any part of the AI move.
Yeah.
I know they got the whole Apple moving on from Qualcomm chips.
Yeah.
Right.
They were using those, like a year or 2 years ago, maybe?
No, Apple's been on its own silicon for a while now.
For a couple years?
Yeah, because they're on the M5 chip. So all these M chips are pure Apple
Or just their
silicon.
own. I thought they were using them like in conjunction.
They might be. They
There
might
was
be.
like a period. Either way, ever since that happened, which was maybe it was 5 years ago, because
Sure.
everything just blends together now. And like,
What is time? Time's a flat circle.
Good job out of you. But Qualcomm has not seen any sort of upside in the AI narrative. There is nothing that has the stock's been 140 for a million years.
Also, their CEO looks like every dude that swipes on me on Hinge. So there's that. Yeah, nice.
Like a nice guy, though.
Yeah.
Oh, I mean, he's the CEO of Qualcomm. So
Hey, I'm mad at it. I'm mad at it. The dudes that are swiping on me are not the CEO of Qualcomm.
That's what I'm saying.
Open Door CEO. This is crazy. He says his firm is offering mortgages at 4.99%. Well, people are like, how? Especially as mortgage rates are surging as the war in Iran gets launched and bonds are getting crazy. And so mortgage rates had ticked below that 6% that was last week. But now the CEO of Open, he says his company is offering mortgage a full percentage point below the national average. And yeah, people are still like, again, how?
Yeah, I don't know. I don't know how that's possible.
But Open.
Yeah, we've dabbled in this. I traded stock for its earnings and sold the stock in the after hours section,
Which was a good sale.
Tiny.
Sure. But you only had $5 in risk in the trade, right?
Yeah.
Right. Yeah.
So, I don't know. Some of these things they get it like, this AMC, GME. I don't know how the CEOs can just say something.
Yeah, I know.
It's just like clearly, I don't know how this is possible.
Right.
Yeah.
But hey, if you need a mortgage, sign up, lock it in. I guess I don't know. Walt Disney.
Aren't rates about as low as they've been in a couple of years?
Well, they were. They were. Since 2022. Yeah. They were.
Yeah. Not anymore.
Bonds have gone from 119 to 170. So now they've moved probably what 8% to a quarter percentage point, maybe. Yeah. I know relatively speaking, it's a lot, but about what $10 per 100,000 or so, maybe a little bit less.
I don't know.
You got to keep it in perspective.
Yeah.
Walt Disney said yesterday
don't buy your Starbucks.
Walt Disney said they'd secured $5.25 billion credit agreement that will mature in less than a year and replace its prior facility of the same amount. So Disney has secured a new short-term credit line. But again, a guy has gone viral. He said he took his entire family, flew business class to France, went to a ski resort, all the food, all the lift tickets, all the chalets, and it was less than going to Disney.
That's wild.
But then that's why does Disney need
$5
billion?
Better experience. Let's forget about the price for a quick second.
Well, listen, if they get to a price that's too much, people aren't going to go, and people seem to be going.
You haven't reached that. He's right. You know what I mean? That threshold yet.
Tracy's going next week.
Yeah.
It's just
I don't get it. I've been multiple times. I still don't get it. I don't get Liz and Janet.
I get it at a certain price. I would be like I like
what would
Disney.
that price be from today's number?
It would be $99 entry ticket, $100 entry ticket.
So what's the entry ticket now? I missed that.
I have no idea. It's dynamic pricing too.
Really?
So based on park school holidays off, then they
spring break.
Uber model here.
Yeah.
But then it's also the hotels.
Disney Paris, you go to Disney Paris for the $100.
Probably.
Yeah.
Disney Tokyo too. But it's just I don't even know what it cost. I don't know what things cost. It's crazy. But anything in Disney's DIS stock that you can do.
Trades at 100. It was the same 100 it traded at 5 years ago.
Yeah.
Okay.
Disney's about $140-$150.
Well, you're going to need about 10 shares of Disney stock for your ticket now.
Just one ticket.
That's crazy. Moderna stock ticked up yesterday after the company agreed to pay up to $2.25 billion to settle a COVID vaccine patent dispute. They agreed to pay Genevant Sciences of $2.25 billion to settle a long-running legal fight over the technology that made the COVID-19 vaccine possible. But now that they've gotten this out of the way, they can be free to do more R&D and develop more, more vaccines, drugs, treatments.
This has been recently. This has been a mover. Markets can be a little bit wide in there for what's going to be a over $50 stock this morning. $54 actually, up around $4 or $5. Market's about 40-ish cents wide, but just this year alone, it's gone from about $40 up to about $55, back down to around $40, back up to around $55, where it's going to be right now. So it's been in a very, very wide range here of about $15. It's now going to be at the high end of that range.
Anything happening in Lilly or Pfizer or XLV? I know. Okay,
Lilly's tough. Lilly's been hovering around 1,000. But it moves, some days it'll be up
1,000 to 1,100. I mean,
Sure.
It's a big 10% move all year.
The markets are just not that liquid. So you're getting, the bid-ask spread even on the stock is like $2 wide.
Yeah.
Wow.
It's a tough one. Mm-hmm. It's a tough one to trade. Not a ton you can do there.
Yeah.
I got something for you, Bat. How is Lady Bat doing in her reading quest?
It's funny. You see, your memory is too good. Now you're being honest. You're saying,
Yeah, I'm being sincere. I'm asking.
no, I know. I know you're asking, and it's truthful, and we're always truthful here. I told you about 2 weeks ago. She was what?
4 pages in.
No, 4 pages in, and she got to
chapters?
chapter 6.
Oh, okay, good.
She's stuck at chapter 6.
Okay.
So in the 2-week update, week and a half update or so, and she just mentioned it last night. She was like, I have to get back to my book. And I'm like, sure you do, baby.
But I will tell her this, because there's an audio version of the book that she
The
can
whole
listen
thing is
to.
she wants to read.
Well, that's good. It is good. Then to keep
Wants to
reading,
exercise
keep at
her
it.
brain.
Just keep at it.
Yeah.
But
I
Audible.
said she needs to get blonder. I mean,
Audible
redhead.
yesterday announced they are launching a standard subscription plan, and I switched to this yesterday. So I had the premium plan, and they're like, yeah, we're going to have a cheaper plan. I'm like, what do I lose? They're like, oh, you just won't own the book forever. And I'm like, fine, I don't care. And now also you get access to Wondery podcasts, ad free. So they're going for Spotify. I signed up for this yesterday. It's great. It's $6 cheaper. It's gonna save me $60 this year. So go me.
Oh,
go me.
yeah.
Go me.
You're getting the appetizer now too.
What is Spotify doing? Because you can also listen to audiobooks on Spotify. But
Spotify.
Maybe that was why Spotify's at 500 again.
Yeah, it's back up to 500. Traded down around 420 or so. It's up about $100 in the last, let's just call it month or so.
Yeah.
It's up another $2, but it's well off its highs of, in the 700.
Last week it made it on the top 20.
Yeah,
Just like a random day.
oh, weird.
Yeah, I couldn't. I
That
couldn't
is
believe
weird.
it.
Yeah.
So maybe this is kind of in that,
Maybe.
Because the markets in there are not
no.
where you should be, in my opinion.
Sure.
They're $3-4 wide. I mean, maybe a vertical spread, but
Audible owned by Amazon. So so you do that.
maybe
my bag.
that'll help Nikki out a little bit. Amazon up about $1 this morning.
Hey.
209 or so, but Amazon
You like
been
it.
languaging, right? It almost pierced 200, back up to 208 off its highs of around 240.50. But room to grow.
Crazy news that hits us here at home. ESPN announced that the Bears Pro Bowl center Drew Dahlman has informed the team that he's retiring at the age of 27. I think he just signed like a $42 million contract, and he was a really good center. Caleb Williams even tweeted just like a crying emoji, and it was like Hulk. I guess he called him Hulk or something. I don't know. But it's sad. Blows a hole in our line.
Yeah.
That sucks. But obviously, you got to take care of whatever's going on with you. And
Yeah, I figure there's got. I mean, the Stanford guys, they're smart.
They are smart.
He's probably gonna if he wants to, go to iBanking or
sure, like a hedge fund.
He'll have his own hedge fund,
Right.
Something like that. So he'll be okay.
Yeah.
He got the seed money that he needed,
I'm sure. I mean,
squirreled it away.
yeah. So but it is kind of shocking to me. So.
It is.
He was great. So
Yeah, he was.
So yeah, well now we got to fill the left tackle and center. So gotta work on that. So Hey, finally today for my viral video of the day. I don't know. I know, Bat, you're a grandpa, but I didn't know 2 times. But I didn't know if your daughter, if she also had a dog.
She's got 2 dogs and a cat.
So that's a full house, and that's
like
a small house. That's
It's like a.
it's up for grabs.
I'm like this was the dumbest mistake you guys ever made. I mean, this was.
And they're not
borderline.
small dogs. They're big dogs. Not the greatest trained dogs. Little right.
No, they're house trained well.
House trained.
They're a little barky.
Yeah, barky. The junkyard dog.
Well, this viral video says nobody's more excited about babies starting solid foods than the dog. Watch this.
Do you want to form an alliance with me? Absolutely, I do. Good.
So then people in the comments were like, when my toddler started solids, my dog gained 20 pounds.
Absolutely.
Oh, they're so cute.
Good.
Oh, so cute. Anyway.
Yeah, that's a good dog.
Yeah. He's so patient, though. He's not being, like, pushy.
Very cute. Very cute.
Anyway.
Good
They're
job.
good. They're better than a Roomba. The dogs, like, getting the crumbs up. Yeah.
Yeah, you can't walk around with a cake pop with their dogs around.
No.
Yeah. Very quickly. Yeah. We're going to take a quick 90-second break as even the S&Ps are trading near their highs, up almost 30. We'll be back in 90 seconds. We've got more Tasty Live after this. Confirm and send, and we'll talk about this market. We'll be back in 90 seconds. Good job, Eddie. Gonna go to Florida. I got Rob. Rob in Florida. What's up?
Hello, Tony and Nick. I am a big fan. My wife and I watch you guys for hours and hours every day. You can be very, very proud of your son. He is doing a great job. I really didn't know anything about stock prices or options or anything until I started watching probably 500 hours of Mike and his whiteboard from years and years and years ago, and learned all about it. And we've been trading actively since February and just couldn't be more pleased.
Awesome, man. Thank you so much for the kind words.
Thank
really
you,
do
Rob.
appreciate it.
Global markets never sleep. Explore them with Forex on Tasty Trade. Get in on 80-plus Forex pairs, 24 hours a day, 5 days a week. FX marks the spot. Trade it on Tasty Trade.
When the market moves, traders need to move faster. Tasty Trade Active Trader Tool offers full depth of market visibility, one-click order entry, and instant position management so traders can react in real time. While others charge for professional tools, Tasty Trade provides them for free. Opportunity can move fast. Seize it with Active Trader. Try it now on Tasty Trade.
You hear it all the time. Spoos up or spoos down. What exactly does that mean? Spoos is a slang term for the S&P 500, specifically the S&P 500 futures contract /ES. It's the world's most liquid asset. In the S&P 500, billions and billions of dollars trade hands each day. The S&P 500 represents the top US stocks, all in one basket, traded through one contract. The S&P 500's movement day to day gives you a good overview of the market as a whole and what it's doing.
Tasty Trade is now on TradingView. Trade stocks and futures directly on TradingView charts with Tasty Trade's low commissions. Try it out and leave us a review.
Diversify your portfolio with stocks, options, futures, crypto, and more. Focus on the markets that matter to you. See the odds before you trade using curve analysis, IV rank, and more tools. Tasty Trade. Download today.
There's a beast in the financial world, and it's not the bull. If that's you, join us on Tasty Trade. Genius loves company.
Nikki, we are back, son. And you know what that means? Time for a little bit more Tasty Live with Confirm and Send. But before we do, let's take a look at this market. It's been all over the place, actually, for going nowhere right now. Even the S&P's up 22. One of the first green openings that we're going to see if we make it to 8:30 Central Standard Time in the green handle here, up around 1/3 of a percentage point. Even the S&P's 68.50.
Here we are.
We've talked about 68.50. For what seems like all of 2026, right? Now we're coming from the low end, though, right? We were coming from the high end. 6,900 and change down to 6,850 and bouncing back. Now it seems like we're on the low end of that.
For sure.
Talked a lot about this on last call with Liz yesterday, and be on last call again today. So we'll see what this market brings us on the close. NASDAQ up 120, about a half a percentage point. Russell up 17. But you can see here, even the S&P's had a 70 handle move top to bottom. I did not trade them at all last night, but they were definitely at a top to bottom big move. Big move in volatility too. I mean, almost 2 points, $2,000 on the big future. I know we trade more the /VXM, like 100 shares of stock. We were selling volatility yesterday when it was in the 23.5 to 24.5 on its way to 25.5 level. Finally caught a little rally in the market. We're able to get those back in. Volatility is still high, which leaves, you can get away from the individual stocks when you've got SPY volatility, almost double what it was just a moment ago. And by a moment ago, I mean just a week or two ago. As you can see here, IB rank is good. I did a Q trade for option trades today that you can look to. I mean, in my opinion, you can get an equal weighted portfolio when you've got volatility here in play these moves in the ETFs just as easily as you can some of these stocks with probably a lot less volatility than some of these stocks that we trade in the NASDAQ. So you can definitely look at that. Bonds 117 again. I don't know, been down to 114 up to 119, sitting at 117. IB rank in there is 14, which makes them less interesting to me. But this is interesting. Bitcoin over 71,000, traded up to almost 73,000, 71.2 right now, up 4.5%. It was just yesterday, literally just yesterday, when it was $60,000 or close enough to it there. Ethereum also up around the same percentage, back over 2,000, 2,050 and change, got up to almost 2,100. Oil, been all over the place. $4 move in oil. IB ranks 125, which means it's never been higher. USO, others. I mean, I put a USO trade on when I thought oil had capitulated to the upside 2 or 3 days ago. 1/2 ratio spread, made it a little bit smaller going to USO instead of /CL, which would be a lot bigger. That has not come in yet, as volatility at 125%. Means that it's never been higher and it's gone higher each day. Matter of fact, when it gets under 100, that will be the first time that oil's had a downtick in the last couple of days when it opens at under 100 in /CL or USO, whatever you're looking at to trade there. Gold up $63 to just under 5,200. $100 move, almost a little over $100 move, 1% right now in gold. Silver back higher. I know you scalped out of a lot of your silver and
I rolled my positions yesterday. So I was leaning in both gold and silver, short vol, short delta. And so I had, like one put to every 2 calls, basically. You had a pretty decent sized down move yesterday.
Yes.
And so I took that position from March and rolled it out to April, more neutral, but still playing the upside volatility here. And then I added those calendar spreads, which are slightly long delta, but short-term vol. You're like trying to finance buying a longer duration option.
Yep. And a lot of those diagonal spreads have paid off real well for you. We've been taking those off and not necessarily directionally correct on day one, right? Like, I mean, sometimes we get lucky. You're going to get the direction that you want immediately and it works out real nice. But some of them you've waited 2-3 days and they've paid off by dollars on a defined risk trade.
Yeah. And the short,
because we've had two-sided action. You bulls and bears have been correct here.
And I was going to ask you that because I'm looking at the minis and I'm like, what if we have just a chop year? Like, what if this year is just maybe not this tight of a range? But because we haven't had a, year ending in up 2%.
No.
Or down 2% or like something where it's like a nothing move. Maybe you have the big swings in between, but would you project that to be a good year for trading? If you go
what's the question?
So if you go for the last let's call it 8 to 10 years, it's been pretty much up every year.
Yes.
Right? I mean, I don't think we've had a down year.
Right.
And it's been up, 7 to 25% depending on the year. How would you feel in the future, you're trying to project in the future.
Okay.
I tell you, the end of this year, the market is unchanged. We're at 7,000.
Okay.
How do you think the trading would be for you on a year like that?
I would think it would be quite good, but
If you
not
have two-sided action.
yes, but not as good as it would have been if it happened in years past. Because I think I was more playing for that more when we had a big up move in the market, which made me scramble a lot more and started making me lean a little bit longish delta, which is where I'm kind of leaning now today with that same mindset that everything is going to stay the same as it ever was, meaning the last couple of years. So probably not as good as I would have done in years past if it happened, because that's what I was playing for and now, but definitely beneficial.
Because I think if you told me, if we fast forward to the future and
I'm trying to be as honest as possible
and say that 2026, the average or like the range of volatility was like 18 to 22.
You see,
and the market went nowhere.
Yeah.
I would say that'd probably be the best.
100%. But I anticipate if you get that kind of market, the volatility is not going to pop the way it has back up into the 24, 20, almost.
No, I don't think it'll stay there. But if it stays in the 20, you would expect.
If it stays wrapped around 20, that's nirvana. But if it goes down to 15 or 16 and we start chopping around, it's tougher market.
That's death. But I would say for a short premium, somewhat directional trader.
Yep.
If you have kind of a non-directional market that kind of moves with volatility that's relatively range bound in the higher end of the range, that's about as good as it gets.
Agreed. 100%. 100%. We just talked about gold and silver. Nat gas back under $3. Nat gas, that's some good violent moves for a big product. Crowd CRWD is hanging out at 291 and change. I can't believe it had earnings.
Unbelievable.
But it did.
30-point expected move, and that stock moves.
Stock moves.
I think that's gonna be a upside move once the market opens. Because
if the market hangs out here, even the S&Ps are up 20, Nasdaq's up 100 and change. Yeah, I agree with you there.
You kind of saw this in Snowflake too, which ended up reversing the move. But a lot of these software stocks, it seems like they've kind of hit a bottom. And on the earnings, the ones that have been like MongoDB was just getting murdered on there. That has stayed at lows. The ones that kind of stayed where they were had a nice little rally into at least the early part of the session. So I'm hoping we see that here with CrowdStrike. Beautiful.
I agree with you. Let's get to it. Let's get to confirm and send. Even the S&P's up 22. Wednesday, March 4th.
Time is flying by. So yesterday, Trump said the U.S. would ensure tankers in the Gulf. Oil fell a lot after that news came out. Does that news effectively mean there's a ceiling on oil prices and we should be selling calls? What would you say?
I mean, we did a little what do we call it when we did a little oil thing when oil was trading around $77 at 70.
Yeah, we sold some MCL. We're also short volatility. So we are in this trade.
Yes, we are definitely in this trade. Yeah. Some of the, I don't think Allstate and the rest of them, you could look at that. I don't know if they are going to be affected by this.
AIG is one that I was kind of looking.
Yeah, I mean, how do I play it? I try not to think too much about it. And oil got back up to 77 last night, so it's not like we did anything phenomenal. I mean, we were able to scalp it. It was nice. But we talked about it. Volatility's high in there, 120 and change. Probably warrants a trade. It can be a defined risk trade. It probably warrants something. When volatility is that high, it warrants something. This had a short-term negative effect on oil, which I think was good for most traders because you got a little bit of two-side.
Yeah.
But you're still sitting at 74 and change. The world is your oyster and great volatility. So I don't know. But if you think it does, then it warrants a trade probably on the short side. Do a call spread. Do something.
Yeah.
I mean, fighters used to say the fight was won on the road before the fight when you were doing all the hard work. And this is all the hard work. You see that?
Yeah.
Put it in. Put the trade in for your type of risk that you want to put on and see how it goes. I mean, that's what you got to do. It's not one when the lights are on, when the boxing match is starting. It's one way before that.
After we scalped out the MCL, I put on some USO put diagonal spreads. It's just a cheap way to kind of play the short-term volatility as well as get a little bit of short delta, along with the short vol that I have in crude oil itself in /CL. I think if we get higher, I can trade those MCLs again. But I do think it's a short vol play. You have oil OVX, which is the oil volatility index, 75 and change yesterday.
Yeah.
It's basically the high going back to the last, kind of war scare that we had. So I do think it's an interesting play.
Beautiful. Next one, please. If most retail traders lose money selling premium during volatility spikes, is it really a high probability strategy or just statistically comfortable?
It's a good question. I mean, I would say
kind of 6 of one, half dozen of another.
You're short volatility. So, if volatility spikes, and you're short volatility.
But what does volatility do more? It's more mean reverting.
Mean reverting.
So the optimal thing is to wait until volatility spikes on its highs and then sell volatility.
You can't do that.
I know.
You also have to have some sort of directionality to it. Like we sold, and it was great timing, obviously, because the market bounced. But we sold puts in SPY and Qs around a 1 standard deviation on the downside, and those moved 25% by about 2 hours later.
Yep.
And that was on a basically non-movement. If you remember, we were talking about Goldman Sachs and Meta, which we also sold puts in. And Meta was down like $10 and went to basically down like 3. So it rallied like 5, 6, 7 handles, which is nothing in a $650 stock. We sold those puts at like $12 and bought them back at $9 on a $5 or $6 move. And that's not because of the bounce in the price, it's because of the change in volatility. That was all volatility.
That's correct.
And when volatility spikes, you got to have powder dry to take advantage of that because it's very short-term opportunities.
Very good. Next one, please.
If you trade directionally by buying and selling futures or stock, how do you know when to get in or out? Are there mechanics for that?
I mean, that is the $64,000 question. You don't know.
Why do you say $64,000?
Because there used to be a show called the $64,000 question. I believe that the winner would win $64,000.
I always wondered that because it's just a weird number.
Yeah.
$1 million, 1,000, 100,000.
Well, $64,000 without inflation when the show was out.
That was like
$1 million.
That was $1 million.
That was $1 million.
That was like the.
That's when cars were $8 to buy them.
Buy houses at 2 times your annual salary.
Right.
You paid 10%
a steak
interest.
Was 50 cents.
But
milk was a penny.
Yeah. Got it.
Yeah, usually it's a short-term trade. I mean, you can take a look at the expected move on /ES to let you know what your risk is on that trade. Like if I was looking at right now, even the S&Ps, the expected move for today is around $46. So let's just call it $50.
Yep.
So you're looking at maybe 2 times the expected move. So what would be a rationale in like what you could make or lose? And you're going to throw out the tops and the bottom. $50 expected move, $100 expected move as a outlier move. Maybe you're looking at 20 to 50 points on an E-mini S&P scalp. That's how I do it. If E-mini S&P's expected move was 25, I would say 50 on an outlier bad type trade. I might be looking to make 10 to 20 points on an E-mini S&P scalp. I mean, everything goes down to the implied volatility. That's why we say we like higher implied volatility. Yesterday, we were buying some E-mini S&Ps at 67.40-ish and change. They went down to 67.20-ish and change until rallying, all day long, which was, a little bit of heat. Everybody hates to have heat, but you're never going to catch the bottom and you're never going to catch the top. That's just a fallacy. You never know. So you got to stay mechanical with your size is where it comes down to you. Like /ES is probably too big for everyone. Probably trade the micros. It's like 100 shares of stock.
I think if I was going to tell anybody anything is I would do less contracts with bigger stops than more contracts with tighter stops.
Yes.
And
then more mental stops too, right? I mean,
mental. Just be like, okay, if it goes against me, I'm going to take it off here. Or put the stop in if you want. But if you're trading NASDAQ and you're taking
and we sold volatility
stops,
too. I mean,
screwed.
we traded the volatility futures, which is just a double up trade.
But when volatility is high, you have to be able to take some heat.
Yeah,
because you can't.
Because it's going to happen.
It's going to happen.
Because the moves are 2-3 times what they normally are, what you were used to. Yeah. When you figure this out, will you write us, please? Because we'd like to know too.
Let me know.
Next one, please.
Last one.
Yeah, I can see last one.
Yeah,
when traders say volatility is mean reverting, are they relying on delta or
data or narrative?
Oh, sorry.
And
or data or narrative.
What does that mean? Yeah.
Yep. And
So
what is that?
So volatility.
What does that mean?
Yeah, we got a little spelling mistake there.
Yeah, I got it. Mhm.
It's okay. So volatility does not price does not mean reverting. Prices can go up for a long period of time, can go down for a long period of time. There's no average. There's no there's no number that is a mean reversion. Volatility typically has spikes and then it comes down and then it kind of clusters and then it spikes and then it clusters. And that's how volatility acts, because you can't sustain high volatility forever. You just can't. Things would go to zero if you sustained volatility for forever. So volatility is mean reverting. It gets to highs, and you can't stay high because you would need moves to continue to happen. And so when volatility is high, it means fear is high, and at some point that fear dissipates. And so it mean reverts, and it's something that you can actually quantify and look at and see. If you look at a chart, volatility stays in a cluster 90% of the time, and in the other 10% of the time you have a spike or at least smaller highs than where that cluster is, and that's just how it is.
Very good. Let's take a quick 90-second break and come back. We got more Tasty Live after this with an option jive. We'll be back in 90 seconds. Tasty Live.
Forbes called us best online for options trading. Investopedia, best for options trading, period. With stockbrokers.com, we're number one for options and futures trading. The Motley Fool really likes us. And so does Business Insider. So what else can we say other than boom? Trade like a trader. Tasty Trade. Make your move.
Your crypto needs a wallet. And crypto is better when it's tasty. You can now do more with your digital currencies with the Tasty Crypto app. We're proud to offer a self-custody wallet for Bitcoin, Ethereum, and Polygon. Transfer your digital tokens directly in-app and access thousands of tokens available only on-chain. Your wallet is your key to decentralized finance. Download the Tasty Crypto app and get started today.
I'm just going to wait for the stock to dip, then I'm a buyer. Buying into weakness is a phrase used to describe the action of getting long a stock into a down move. It's a contrarian trade. Most people want to buy what's hot, the stuff making huge upside moves, the chart line moving up and to the right. Nobody wants the stock at lows. But it's hard to buy high and sell higher, rather than buy low and sell high. There is a phrase for this. When the time comes to buy, you won't want to. Look who's backtesting. Tasty Trade now has options backtesting for free. Test your trades with over 10 years of data for the most popular symbols. See how your trades would have performed in the past. Look back at profit and loss and take the guess out of guesswork. Oh, did we mention that it's free? Get backtesting at Tasty Trade.
Global markets never sleep. Explore them with Forex on Tasty Trade. Get in on 80 plus Forex pairs, 24 hours a day, 5 days a week. FX marks the spot. Trade it on Tasty Trade.
Got the need for speed? No problem! At Tasty Trade, you can turn smart ideas into real trades with just a few clicks. Wow, that's fast. Tasty Trade, make your move.
It's option jive. Nikki, we are back, son. And you know what that means? Time for a little bit more Tasty Live with an option jive. 3 decisions that make or break a trade.
Let's do it.
Are there really only 3?
This is just kind of a, overview.
25,000. And by the way, the $64,000 show I was told was on even before my time in the 50s. My mom must have been telling me about it. So she must have mentioned it, and now I'm carrying it on. 75 years later.
It's beautiful. It's a beautiful thing.
It is a beautiful thing. You think you're not a product of who raised you. You are.
Of course.
Much as you hate it. Go ahead. Option jive. I'm kidding. Come on.
The 3 decisions that make or break a trade, we're just going to give you a primer on all the things you hear us say, from rolling up the untested side, managing delta, all those good things. We're going to give you a little primer on that. So when we're taking a trade, there are 3 main mechanical trading areas we need to look at. So we talk about entering the trade, we talk about defense of a trade, and we talk about exiting a trade. Those are the 3 main things that you can do. That's all you really can control, is when you enter the position, what you're doing to defend the trade, and then when you exit. It's also probably the most powerful thing that a retail trader has, is that you have flexibility here. You can make this decision. When you're managing a portfolio, big portfolio, or a hedge fund or something like that, there's not a lot of flexibility here. You have to, kind of sit with positions. It's one of the great things that we have the power to do, is manage positions and control our entry. We can choose when to enter trades and when to exit them.
Yep.
And so with all of our content, we have talked about the different important factors that we should consider when entering a trade, including the directional assumption. We talked about the IV environment, time frame, and delta. Those are all very important parts of our trading style. And for this study, we're going to focus on how to defend and exit trades. And what we're talking about when we say things are phrases that you might not be used to. So when we talk about defense of a trade, what that means is that after we enter the trade, we can defend our trade with a plan if our trade is tested. When you're tested on a trade, it means that that trade is going against you. If you sell a put spread and you are being tested, it means the short strike is close to at the money. The stock has fallen from when you originally put that trade on. If you're doing an iron condor, you have risk on both sides. When you are tested, it means that the stock is close to one of your short strikes. Today, we're going to talk about and look at 2 examples, including how we defend strangles and wide iron condors, and kind of just talk through what that mechanic is at its core. We're not going to give you exact specifics, because that depends on your own directional assumption, risk tolerance, how big the position is, etc. But just give you an idea of, if you hear us say, I'm tested on the call strike, I'm rolling up the puts, here is what we mean and why we are doing those sort of things.
Yeah, I mean, we've been saying and doing this for forever, but you get a lot of new viewers, and it's new to them. So this is a good little exercise on the silly things that we say.
Yes. So when we are defending a strangle, when we say we are tested on the upside call or tested on the calls, what we are saying is that the stock has gone up from where we put this trade on. So we put the trade on and the stock was at 50, stock has gone to 60, and our 60 strike short call is being tested. There's loss on that call. The untested side is the side that is out of the money. It's now further out of the money. That option is going to lose value. So you're going to have, anytime you're trading a neutral position, you're typically going to have, for a period of time, one option, quote unquote, winning, meaning the stock is moving away from that option, and one option that is quote unquote losing, the stock is going closer to that option. And over time, those options both decay. That's really what you're playing for with the neutral strangle. And they decay because of time decay, because of changes in implied volatility. Hopefully you're starting at high volatility. By the time you close the trade, it's low volatility. But in between that time frame, that period of time where those 2 factors play out, you're going to have movement in the stock. It's very rare that a stock just sits where it is. You're going to be tested on one, if not both.
Although that'd be cool if you sold premium on both sides.
That would be really great.
Horrible if you bought it or sold it, one directional trade.
I wish every trade I put on, the stock went nowhere and I just, collected my paycheck every day. But that's not how it happens. And that is a rare occurrence. And so when we say you're tested on the upside, we usually take our untested side, which is the put side, and roll that up. That's our adjustment to a tested call. Same thing on the downside. If we say we are tested on the puts, we're taking that untested call. This is just flipping the graph, and the stock is going down. We roll the call down. Those are the 2 adjustments intra-expiration. So you put the trade on at 45 days, 10 days later, you're tested on the call side, you're looking to roll up the put. When we talk about time, when we manage at 21 days, what are we doing when we manage the trade? We're taking that position and rolling it out in time. We're reestablishing the time value that has decayed over the original start. So you start with 40 days, you're at 21, you roll that position to a new 40-day time period. You're adding that 20 days to try and capture that extrinsic value and that value over time. So these are the three mechanics of just defending a strangle. You either can, or we could put do nothing on this too.
Sure.
Lean directional. But if you are looking to manage a trade, you're managing the untested side or rolling out in time. Those are the two things you can do. So things change a little bit with iron condor. So when we're defending an iron condor, these are defined risk trades. So you have to keep in mind that these are, when you put the trade on, you can only lose so much. So you have an embedded.
And you can only make so much.
You can only make so much, of course.
Yeah.
With short premium.
I'm just giving both sides. Yeah.
Yes. But when you're giving up some of the value, the extrinsic value, to put on a stop loss. That's what it's a strangle
synthetic stop loss.
With a synthetic stop loss.
Yeah.
The long options are further out of the money. That is going to be relative to whatever your spread width is and how much capital you can use. But these sort of trades, you typically have to be a little bit less aggressive with the management, because when you put the trade on, your management is baked into the trade. Like, you can only lose so much. Your defined risk on these trades. And so typically when we look at defending iron condors, we usually have to kind of take a little bit more risk than with the strangle in terms of delta, like move against you.
Yeah.
You have to be a little bit more tested, so to speak, on an iron condor, because you already have that hedge in place. And so we get this question a lot of why don't you manage the iron condor a little bit more, aggressively or the same as you do with strangles? Well, it's because you're already putting that management on at entry. The same mechanics apply. Like, you're still going to roll the untested side closer to at the money, but you got to kind of be a little bit more flexible with defending an iron condor versus a strangle where, you have a lot more extrinsic value, a lot more risk on the trade, a lot more flexibility with what you can do here versus the iron condor, which you define your risk on entry. It is what it is. And so you have that, embedded stop loss too. Mm-hmm. So when we exit trades, we look to exit around 50% of the max profit. Again, this is just kind of a metric to hang your hat on. If you get something that moves 20% in a couple days, you're well ahead of the curve, right? The 50% should take 50% of the days. So if you start a trade with 40 days, it should take you 20 days to get to 50% of the max profit. That's just roughly how the math works. If you get to 20% in 2 days or 5 days, you're well ahead.
You've overperformed.
Well, things have worked faster than what you expected. Volatility.
So it's probably time to do something.
Volatility has contracted. You've gotten a directional assumption right if you sold just one side, if you did one side of the trade. Those are the things that are influencing you getting to 50% faster than half the duration. Assuming volatility stays the same and time just passes and the stock chops around between your strikes, it's going to take you roughly half the time. You need to get volatility to work in your favor for this to go faster than that. That's pretty much it.
That is pretty much it.
If by 21 days we have not achieved our 50% of the max profit or somewhere around there, again, I don't sit and say, okay, I'm at 49%, I have to wait till 50. I trade it. If you want to sit and wait, that's totally cool too. But that's a flexibility that you have with being able to manage your own trades. If you're not at your spot at 21 days, you take the position, roll the trade out. That's your next adjustment. And we prefer this to holding until expiration because it reduces the overall risk. You're still taking advantage of volatility. You're adding duration, so you don't have to be directionally correct in the shorter duration that you have, etc. So those are just the three mechanics of strangles and iron condors. Beautiful. And so we look to exit around 50% of the max profit, and then at 21 days, the 50% max profit is not reached if it is not reached at 21 days. And so we're giving you just a SPY strangle from 2010 to present. Looking at the win ratios for at expiration, earlier than 21 days. So like you're just rolling at 21 days and managing at 50% and 21 days. And you can see when you add in the components of rolling at 21 days and managing winners at 50%, you increase basically everything, right? So your win rate is basically the same as at expiration, which is what you would expect. But your average P&L is going to increase, and that's a function of reducing your largest losses, which you're doing because you're managing that trade at 21 days. You're not taking the same risk that you have at that expiration, which you can see is $6,000. If you're just holding this to expiration, that's your max pain that you've experienced, you reduce that down to 2,400, which is a 60, 70-ish% reduction in the overall max loss that you experience over this data set. And so that's why your average P&L is going to increase, is because your losses are tighter. Like they're not as big. And that goes in line with your standard deviation of P&L. $600, if you're making that, is a better number than $300. But when you're thinking about profits and losses of $300 average versus $600 average, it's a much tighter range. And when you have a more consistent win ratio, a lesser drawdown, and higher average P&L, all those things are going to compound with that tighter range of P&L. That tighter range of P&L is going to allow you to kind of stair step forward.
Perfect.
So just to sum it up, after we enter a trade, we can defend our trade with a plan. If our trade is tested, we usually roll the untested side, roll out in time. Those are the two mechanics that we have there. When exiting the trade, we look to exit around 50% on the max profit. And then again, our 21-day and 50% profit marks together is the optimal for managing neutral type positions like a strangle or an iron condor.
Great job out of you. Let's take a quick 90-second break so we can catch this opening bell in about 2.5 minutes. You'll listen to Tasty Live.
Look who's backtesting. Tasty Trade now has options backtesting for free. Test your trades with over 10 years of data for the most popular symbols. See how your trades would have performed in the past. Look back at profit and loss and take the guess out of guesswork. Oh, did we mention that it's free? Get backtesting at Tasty Trade.
Beat the opening bell. Get trade ideas and market insights before the open. From the creator, Tom Sosnoff, and our chief market strategist, Tom Preston. Every weekday. Sign up at tastylive.com/newsletters.
In the world of investing, a beast lurks between the numbers, ready to pounce. Some traders hide from it, some ride it. If that's you, join us on Tasty Trade. Genius loves company.
Nicky, we are back, son, and you know what that means. Time for a little bit more Tasty Live with the opening bell in about 1 minute. Even the S&Ps are up 18, NASDAQ up around 100. I guess this is the middle of the range, higher end of the range for everything. NASDAQ was just a little bit higher just a moment ago. Let me zoom out here so you can see it. Russell up 18 and change, Dow up 127. Volatility's had a big almost 2-point range, 23 and change to 21 and change with 21.85 on the low end. All that makes sense with even the S&Ps and the rest of the market near their highs, although they just sold off about 10 handles. Bonds down 5, 117 and change. They've had a big range, almost a point, which is $1,000 there. CrowdWD, for those who played it, now down around $6 or $7, still well inside the $30 expected move. Bitcoin has bid a big move, $3,500 or so, 5%. Ethereum, big move, $100 and change. Oil, big move, top to bottom. Gold and silver, big moves too. Gold and silver ratio is around 61. We were nibbling on the long side at around 56. We haven't done anything on the sell side yet. There's your opening bell, son. The moment you've been waiting for. It's the first up opening we've had, which seems like eternity, but it's probably only been about 3 or 4 days. How are you handling it?
Good.
Yeah, I know.
Things are.
It was a derogatory question
are-
to ask. Basically, the market's unchanged here. Place your bets at 68.50. If you've been trading it from the upside and coming down, if you're trading from the downside coming up, this is about the mean where we've been for most of the market. So if you didn't like what you had on the way down, adjust, change, roll from one month to the next.
30.
Say again?
Crowdstrike up 7. I told you.
CRWD, yes, up $8. Still well inside the expected move, about $30. Let's see what else is moving the market here. I got the S&P 500 from yesterday when we looked at it. You've got a few stocks, quite a few stocks. Google's one of them, down to $2 and change. Some of the oil-related stocks, XOM, are down also. And then on the upside, you've got even more stocks higher. AZO, AutoZone, you can't really trade it, but it is an S&P 500. SanDisk, also another one hard to trade, up $20, although it's been beat up. Here's your interesting ones. Coin up $20 to over 200. Coin IV rank of 40 is quite good, well off its lows of 140 and change, up to around 200. Coin volatility in April is 81. Good implied volatility. Markets in there are a little bit wide, so you're gonna have to be something with defined risk. Let's change this from S&P 500 to high option volume list. When we look at the high option volume list, we'll find the suspects that we usually do. Let's see what's going in the opposite direction. EWZ, which South Korea, getting a lot of news, 105% implied.
EWY, yeah.
I'm sorry, did I say
EWZ
EWZ?
is Brazil.
Yeah, it was down too, if I remember looking before. Oh, it's up 60 cents now. But EWY, you are correct. Thank you for correcting me. Down $2.50. Doesn't tell you the whole story here. You can see it was a $150 stock, down to around 125. Let's take a look at the markets there in April. They're a little bit wide-ish too. They'll get a little bit tightened up here. But with 105% implied volatility, maybe it's something that warrants a trade if you're looking for something new to do. There's your Google, down around $2. I mentioned a moment ago. Uber down $1.18. JP Morgan down $1 and change. Baba basically unchanged, down small. Walmart down small. Upside, significant. Coin up 21. MU up 14 after getting beaten up the last couple of days. Meta up $9. Tesla traded under 400, down to 394 already this morning. Up $8 now to 400 and change. Gold, GLD. Now this is interesting. As you see, gold up $66. You wouldn't think that GLD would have such a big move of $8. That's because it closes and then they price it and on the futures, and now it opens again. So gold up $8. TSM up $6. That's Taiwan Semiconductors. Goldman Sachs up $3. Hood with a cryptocurrency exposure up also. What do you think here, son?
I sold some calls against Hood. I'm long stock.
Okay.
Stock is up $5. I don't know why. If there's some sort of news event, please.
You'll take it?
Please let me know. But I actually sold 2 calls to every share of stock.
Mm-hmm. And you did.
I just closed out of a cheap call that I had in a diagonal spread, which is net.
Did you do something in Hood too? Right?
Yeah, the Hood is the 2 calls to every 1 share of stock.
Got it.
I'm flattening out. I'm reducing my delta by about half because those calls are 1 standard. They're at the
taking advantage of the move, right?
Yeah. So taking advantage of that.
And you closed your crowd at 68 cents.
I closed a call that I had as part of a diagonal spread. That trade is basically a scratch. I also have a strangle on, so I'm short the 350, 430 strangle. Do I take that off now or wait a little bit?
How much buying power are you using on your overall account? Something you
not a problem.
What's that?
It's buying power, not a problem right now.
Maybe you stay.
I think so too, because you get it kind of sit if it.
Yeah, you got volatility in by 43 cents. I don't know.
Yeah.
I mean, that's something you have to consider, how much buying power you're using overall in your overall account too, right? Because that would free up a lot of buying power if you were around or near your limits, right?
Yes.
Beautiful.
Should I do something?
Say again?
See, the question on this, so I like to do this a little bit. So
sure.
IBIT, do you remember we bought those leap calls?
Yes.
So those calls, we bought them at like $5. Let's say $5.35. They're marked at $7.12. So you're up like $150. Mm-hmm. One of the things you could do here, you could spread these off.
Yes.
You basically sell the 50 strike calls 300 days out. I mean, we're going to sit with this position forever. That's the problem. Is because this will sit.
Yeah, these are the calls you bought in January with 317 days to go at $5.35 now trading $7 and change.
Yep. So you could sell the 50 strike. You basically leg into a free $5 wide spread
into perpetuity, which is 300 days.
300 days.
We don't even know if Bitcoin's going to be around for 300 days.
That's true. But you'd have a free shot. You could do that.
Yes.
Or you could sell.
So the most that you could make on that whole position there would be
$1,000 or 500 per contract.
Would be basically the
you have no risk.
You have no risk, but you'd be taking $200 in profit that you have
because the spread is you'd be taking like nothing in profit if you sold the 50 strike.
So you'd be taking that off the table.
You'd be taking it
if you held this into perpetuity and it doesn't work. So that's your event cost risk for putting on a spread that can only make $5 more for a total of $7 per contract.
Yes. So you have $200 that you're leaving on the table.
I would rather do what you wanted to do and sell, even if it's August or April.
Oh, you want to do that?
Yeah, I would rather see you sell something in April. Like if you wanted to sell the April, I don't know.
The May 50s.
May 50s. Okay, sure. You don't have May, do we? Yeah, we do have May. Yeah, 72 days. Yes.
I'm along the 45s.
Yeah, those would be around $1. So sell the 49. So you've got almost your profit that you have. You got about
talking about in April.
Yeah, so the April 49s at $1.1520 is where they're sitting right now. You sell those, you have $2 in profit. You're taking basically, you're locking in half of your profit on the trade, and you can always continue to roll. And you still got the $4-ish, $5.
You do the May 40.
Do May 15s, which are
all right. Got it.
Beautifully. So I'm at 119.
Yeah, and you could scalp out of those too.
Yeah, so we're just reducing your upside. You're taking in some money.
Yeah.
Reducing your upside unlimited gain on that 300. I mean, you got a huge move in a short period of time. I know. I think you have.
Well, the other thing I was going to say is because of the skew that you have in the upside, you could sell something like the 60 or 70 calls in that same expiration. It's still a spread. You're not going to get as much, but as a way to kind of scalp the move, right? So you sell just to give an idea of what those calls are trading at. So like if you were to do the January 2027 70 strike calls, they trade at about $1.85. You sell those two. And those, if you get it, if Bitcoin's back at 65, you can probably scalp 80 cents out of those, 70 cents out of those, because you're selling tail type calls.
Yeah.
So it's a way to kind of keep a core position and scalp around it into these big moves, because you typically have volatility expand on the upside.
Yeah, you
want to trade it.
You got 50 delta basically on your Jan option. Yeah. And your May option that you just sold is about 24. So like you said, you reduce your delta by about half, and you still have the directional bias on. You've got a poor man's covered call, an extremely advantageous price.
Yes.
One where you'll probably never take any heat on.
Correct.
Unless it goes into the 20 handle. Yeah.
Yeah, and then it's just,
If it gets cut in half, you'll be down $1.
Yes.
Okay. Well, I'll take that.
That seems pretty good, right?
Yeah, that seems pretty good. Some would say you were gifted. Even the S&P's up 8 or 9, volatility down 15, 16 cents.
Yeah, I was hoping volatility would come in a little bit more today because I sold out a lot.
We're short vol.
Yeah, we are short vol, but
I'm teasing.
A lot of you're getting a little bit of a bounce in some of the names I need a bounce in.
Such as?
Like, SMH, Amazon, Nvidia.
Yeah.
Like you're getting a little bit of a bounce. I just sold some micro crude out here.
Okay.
To play for that, maybe get a little bit of a pullback.
Got it. Oil 74, 71 or so.
Okay.
So that's 74, 73.
Oh, took $200 out of that.
On your Amazon April-May diagonal spread, 44 days versus 72 days, about $15 wide. You bought it around $9 and change, sold it at $11.84. A great trade, son. I mean, that's when you get good implied volatility like we have now, you get the kind of movement that you need. You went with the directional bias. Now, that was a trade you did, let's see, on a date here. Looks like you did it just yesterday.
Yeah.
That's a great trade. I mean, you bought this trade at $9.85 and you sold it at $11.84. You had $980 worth of risk on the trade, and you made $200. I mean, in a day. You got to let it fly on a small move relative. Volatility in Amazon coming down from around 35 to 26. So that's one of the other reasons why you got it. Now, you did get a move up to the higher end of its range, but you also got a nice 6-point vol move too. You were able to benefit that. I bet if you looked at the pricing on that, you made all the money on the short
option vol.
Yeah, the long option that you have probably
held
is
its
up
value
20,
Small.
30 cents, and the short option is probably in by $1.50, $2, that kind of thing.
Totally.
It's good.
Yeah, I don't have.
Even the S&P's up 3.
I like where I'm at. It's just we're not like.
I think
not scalping out of anything. I'm not taking any of the profits off the table.
That's okay. That's okay.
Sitting.
Can't do everything. I mean, you made about 25 trades yesterday before noon, so good job out of you.
Yeah, the Crowdstrike position not moving all that much.
CRWD now down $7, up $9, down $7. Ivy rank still hanging in there at 42. Was closer to 60 and change when you put it on. That'll come in, but markets are wide. There's going to be a little bit selective. Are you ready to take a quick 90-second break and we can get what our viewers wanted to do on basically
that'll be good. I need some new fresh ideas here.
Unchanged market here. Nasdaq's the strongest of the group, up 90. Even the S&P's unchanged. Russell unchanged. Dow down 100. That's the weakest of the group. Volatility unchanged, down 10 cents. Bonds just sitting at 117, middle of their range. Bitcoin 71,000, trying to hold its head up. Hasn't had too much two-sided action for the last hour and 10 minutes or so. Oil up 10 cents. Gold up $58. Silver up $1. All quiet here. Could we have a breather day? If we have a breather day, maybe volatility will come in.
Comes in. You would think so.
If you have a breather day. We haven't had that.
Yeah, you think you would probably see oil down too.
You would probably see oil down. Yep. So let's see. Let's watch volatility sitting here at $22. What that does for what the rest of the market's going to do. We'll be back in 90 seconds. Let's Tasty Live. What's your assumption next? Got 10 trades. You came up with them. We'll see what they are. We'll be back in 90 seconds. Tasty Live. Looking for market insights you can count on? Check out Option Trades Today, your go-to podcast for timely trading analysis and strategies. New episodes drop every Tuesday and Thursday at noon. Available on YouTube, Tasty Live, or wherever you listen to podcasts. Don't miss out on the trades that matter. Stick with the bat, stay ahead of the market. Watch Option Trades Today.
It's the day that when you write dates in the American system of month, day, year, which is a little bit funny, looks like 3.14, which is one of our better approximations. And actually, this year's even better because it's 3.1415. I've never before, but this year, there's a couple other math people who just got a pizza oven, and so they're bringing everyone over. We're gonna make a bunch of pizzas. It's one of the few very important transcendental numbers, right? I mean, 0, 1. There's a lot of good contenders for most important number. Anytime you have anything that's circular, you're going to wind up with pies. Anytime you have a pie, you should sort of expect there to be something circular. I can do one more than the date on Saturday. I can do 3.14159. Rational numbers are fractions, and pi just is not a fraction. 22/7 is pretty close, but that's not what it is. It's the ratio of a circle to its area, right? And so that's not an integer ratio. It just isn't. Oh. Pumpkin. Just circles are great.
like your wardrobe is missing something? Like style, purpose, and maybe a dancing dog? Can I pet that dog? The new Tasty Trade and tastylive web store is now live. New merch, bold designs. Did we mention all net proceeds go to one tail at a time? Invest in the real bull market, dogs. Go to tastytrade.threadless.com. Grab some gear and help some pups. You get merch, they get a home.
Forbes called us best online for options trading. Investopedia, best for options trading, period. With stockbrokers.com, we're number one for options and futures trading. The Motley Fool really likes us. And so does Business Insider. So what else can we say other than boom? Trade like a trader. Tasty Trade. Make your move.
We built Tasty Trade's web platform for today's traders. Drill into data, find opportunity, and track the action with hundreds of indicators. Fund your account and start trading right in the app. Join the club. Tasty Trade.
Nikki, we are back, son. Market isn't just hanging out here up $2.50, $2.50. NASDAQ up 115, right where it was when I quoted it last time. Bonds 117 right there. Volatility in by 22 cents. Good sign for the bulls, maybe sitting here at 21.88. But the world still is your oyster. There's plenty of volatility out there in the market.
This would go to the question that we get all the time of like, should I wait until it's over?
Yeah, like
you're still you're in the spot where there's still, like, if you have been waiting, you still have high volatility right now. And you know, if we stay like this the rest of the day, you might not have this opportunity tomorrow.
You're right. And if you want to go to, March 2nd, the last time we were 68.50, which was only 2 days ago, volatility did get above 22 or 21 and change what it is right now, but it was as low as 20 and a half. Yeah. So it was a full point lower than this. And if you want to go back to the times before that, volatility never got over 21 and it's 21.75 now. So you have even the S&Ps at the same exact price that they've been in the past. And I only mean a week or so ago, or 2 weeks at the most, if you want to go all the way back there. And you got volatility a full point higher. So if you did wait, good on you. Now what? Like is it the perfect time? I don't know.
Who knows?
But you got to do something eventually, or you just sit on the sidelines forever, waiting for the perfect time.
Yeah, I can't do that. I can't do that.
Me either.
You do that? Can you sit on the
No, I've never been able to. I'm very impulsive.
Yeah.
Probably too impulsive.
A little bit too much.
Yeah. But that's what's giving me opportunities in life too. So you got to take everything with the good and the bad, as long as you realize that everything's not going to be perfect. Even the S&P is up 3. What's your assumption? Let's look at the first assumption. You ready?
Yeah.
Oh, we had it. I thought you were going to be behind. You were good. You were good. Yeah.
I was slow playing you.
You did slow play me. You did slow play me. Like I wasn't going to do it, and then I'd have to catch up. Yeah.
You thought I was going to be late, and I wasn't late.
You're right.
I was right there.
Yep.
I was right there.
EWZ is going to be the first one.
EWZ, all right, neutral market.
I just talked about it by mistake. Said EWZ instead of EWY, so they must have heard me.
I like it. So they were looking for, waiting for this level. Ivy looks great here, setting up a neutral strangle in April. All right. EWZ. We shockingly made money to both our prize on that double calendar. Keep in mind,
you did some beautiful scrambling.
I closed the shorts here because they were basically worth
Some would say you were gifted, not I, but some would say.
And we got blessed with about a 7% overnight move, 10%.
Which you can't play for, but
which is the only way you can make money on the double calendar, is if you somehow catch that, and that is very, very rare. Okay, so we're thinking Delta neutral strangle.
Good Ivy rank of 76.
No, it's just such a cheapie.
It really is such a cheapie. Volatility has been expanding over the last 5 days by almost 10%. If that gets you to pull the trigger a little bit sooner on this trade.
What about just selling the 36 strike puts?
just selling puts. They're neutral here. Are you going to be bullish in here?
Do you want to do the 36.39? 36.40 for $2?
Yeah. I think you sell both sides. You support Marcus here in Albuquerque, New Mexico.
36.40.
And I would be looking for
50 cents.
Yeah, I was going to say 40 cents. I was going to say $2 wherever you basically sold it. Yes, exactly. Oh, you did the 36.40. Well, you did the 36.40. You went a little bit for 207.
I mean, which strikes would you use?
Oh, I was doing 30.
You go to the 36.39.
Yeah, that's what I was looking at and closing at $2. Yeah,
tiny bit long dollar.
Yeah, 50 cents would be a home run here.
Yes, agreed.
Now you're only using in a margin account $200 and $300 in buying power. So I mean, there'll be those who will look at it from a buying power percentage. It's a
for sure
phenomenal trade. So one man's floor is another man's ceiling.
Yes.
Next one, please.
AVGO bullish.
Got earnings.
Earnings
we have
by
a position.
Trevor.
I think we have short puts in there. Stocks basically unchanged.
Can you do the puts for?
I did for option trades today. It's now in your account. We're trying to get the
yeah, we're working on it. We're working
the bad account, but you can always see option trades today every day now if you can find it on YouTube.
Yes, it's on our YouTube.
Yep.
Slightly bullish on AVGO after the pullback. Could be a short-term earnings trade, but I'm fine holding medium term in a regular cycle. Okay. Slightly bullish.
Mm-hmm.
How would you do a slightly bullish?
You kind of did it already with that naked put, which uses a lot of buying power. So if we're going to do something else that's slightly bullish in AVGO, let's do it with less buying power if you want to support Trevor in Des Moines, Iowa. Would you do a 2-day trade here? If you're looking at the 2-day options, you got volatility at 57. IV rank in AVGO has been unchanged to down small, down 2% over the last 5 days. Still 57 and was climbing up until this point. What kind of?
I think you do if you want it. So the other part of this is
you got a $25 expected move.
Term. So you want to, let's say you can hold this through April. You want to hold this through April.
Okay.
Do something like the 340, 355 call diagonal. You do this April, March. So you have a little bit more time until
you're going 16 days. 73%
for the March option.
Yeah, 73% monthly implied volatility. That's going to go into the low 50s, maybe even 40, high 40s. You're going to get 25 to 30 vol point differential. So I like the trade, and
it leans you 15 deltas long right now, but after the earnings, you'll probably have more long delta just because that volatility in the short term is going to contract.
355 is your short strike, $35.
340. 340 is a long, 355 short, yes.
Yep, 355 is a short strike in March with a 35, just rounding here, dollar expected move over the next 16 days. So you're just at or outside the expected move. So what you're saying is that's not going to, hopefully, if it stays inside the expected move up, that option that you're short doesn't really move. The one that you're long expands. Maybe even the one that you're short goes down. So that's what you're playing there. $9.90 of total risk on the trade, and you could double your money if you held it, through the 16 days, and the stock goes above 355.
Yeah,
yeah. So good risk reward. Relatively, definitely a directional trade. Even the S&P is up 13.
Cool. I'm with you. I'm bullish. I think you had.
Yeah. Do you see you supported 2 people that wrote into you? Does that make you feel good?
Yeah, of course. I try to support them.
Wasn't a trick question.
I know sometimes they get a little,
exotic. Next one, please.
An exotic guy.
C is for Cookie, and Cookie is for me. Citigroup. Sorry, that was just a little harken back to the days of what is that? Muppets.
Sesame Street. Wasn't that Cookie Monster?
Yeah, Cookie Monster.
Yeah, Cookie Monster.
Yeah.
Muppets, Sesame Street. Yeah.
Same thing.
C, bullish.
I'll give you the win. Grant, Madison, Wisconsin. Nice area.
All right, so we're going to April. Citigroup. We actually did do a strangle in here a little while back. We did the, actually not that far back. It was only 2 weeks ago.
It seems like forever with the type of movement.
Seems like forever.
Right?
Yeah.
You age a couple of extra months through these periods.
Seriously.
Mm-hmm.
I kind of like the idea of a jade lizard. We don't trade a ton of jade lizards. So
Okay. Definitely a bullish strategy. You know what? Yeah. I like it too.
I think, what do you think about like the 105 put, which is about a 30 delta? You do the 115, 120.
You do it in April, April 17 options, got earnings April 14th. I don't think that matters at this point for this trade. If it works, it's going to work in 2 weeks or so. You're trying to collect over $5. Is that, you go $5 wide?
525.
Classic. You're collecting more than the width of the strikes, which is $5. So you have no risk
to the upside.
Very good. Very good. Which makes it a very high probability trade, maybe 75% plus.
Yes.
Top on the trade.
Rocking and rolling here. That's 3 for 3.
3 for 3. Keep it going.
Do it.
Thank you for your support. Next one, please. AAL.
I actually have some long stock here from a covered call.
Stock's up 16 cents.
Oof. Rolling in it.
Rolling it.
Brandon, Los Angeles. Looking at an April bullish position. Looks like 12 is a solid long-term support with IV elevated, either a covered call or short puts. So I have stock.
And you bought it right around here, maybe a
little bit higher, but I did the cover call I did at 12.83, and I scalped out of the 14 call
20 cents
for 20 cents. So I own the stock at 13. So we're out small on it. What do you think about selling maybe the 12 strike puts?
That would be doubling up on the position that you have now.
Yeah.
So what about since you're going to?
I mean, it's kind of near the lows.
Yeah.
You want to do more stock?
No. So I was thinking, I was doing less actually. Why don't you do the 12 put and the 14 call? So you'd be doing the 14 call against your stock that you're long at 13, and you'd be selling your put around 70 cents. You're it's a 2 delta long spread itself, but you're kind of putting on a synthetic covered call with 44 days to go that you can make $1 on. I mean, it's 10%, less than 10%, but return on.
So you do one put to 2 calls?
You could do that. I was going to do 1 to 1, but you can do 1 to 2.
Oh, so you'd have more.
How much stock do you have?
About 100 shares, small.
If you have 100 shares of stock that you're long at 13, you sell the 14 call and you sell the 12 put. So you're picking up 30, 40 deltas on the put. You're selling 30-ish deltas on the call. You still have 100 deltas on your overall position. You haven't changed your delta position really, but now you've got a much more short premium position. I mean, I like that you have the stock. So you got a covered straddle. Does that make sense?
Yeah.
Okay. You can do that for $1.20-ish or something like that.
Do this a couple times.
Okay. Okay. You can.
Thank you.
I mean, it's a no delta position.
Yeah,
you already have a long delta position.
Yes. It's just that if you're selling the strangles, you're not technically covered on the upside. Your portion of it is covered.
Mm-hmm.
Johnny trade, I like it. AAL, Brandon.
Yeah, it is kind of like a Johnny trade.
Yeah, this would be a good one for a Johnny trade. A couple $100.
It would be.
You do the cover call if you're a little, hesitant.
Yep.
Cool. Microsoft, 45 to 60 days out, bullish. I am with you, brother Scott in Pittsburgh. Microsoft has lagged the Mag 7. Feels like it's time for a catch-up.
Good IV rank of 35 in there. It's basically unchanged over the last 5 days. So it's nice implied volatility. No earnings looming. You have some Microsoft positions on, right?
Yeah, I have.
Yeah.
That 400 strike put is basically a scratch. But I have a short strangle in March. Actually, let's see what those go to. 257. So I have a short strangle in March, and I have a diagonal spread, the 400, 425. So I'm net long, and then you got that put ratio on the downside.
Okay.
I think that was
mine.
The option trades today.
Mm-hmm.
So we've got long delta net.
Mm-hmm.
All right, you want to do 45 to 60 days. What about, okay.
Yeah, that 1x2 is in by about 40-ish cents or so. I'm trying to make $1 on it. And Microsoft need a little bit more up to the upside. But I mean, if you want to take it, it's been a loser, it's been a winner. Microsoft sold that 1x2 back on the 27th. It's the 365, 355, and I sold it for 230, and it's trading around 170. I don't know. If you want to free up the buying power, you certainly can take it off for a small winner. It has not. When I put it on Microsoft, I believe it was actually a little bit higher than here. So directionally, I wasn't correct.
What do you think about we sell the 375 put? I'm looking at April. So you do the 375 put, 20-ish delta.
Okay.
And then you do the 425, 440 call ratio spread. You basically do it at flat. So you're bullish, obviously. You have long delta. But you have a cap on the upside. You have a little bit of you have gamma.
Yep.
A little bit of extra pop to the upside. You hate it?
I don't hate it.
Okay, good. Because
good job out of you.
All right, short put call ratio spread on the upside. So it's synthetically a strangle, but
you got about 70 cents on your oil if you want to close it. Oil down 44. It just traded $74, which would give you a 73-cent profit. It's trading 74.11 right now.
We'll take one at 70 because we did them at 75, right?
Say again?
No, we're gonna wait. We're gonna wait. So we did that. Microsoft short put call ratio. Synthetically, you're short the strangle, but you have a lot more upside room. It leans you bullish, no doubt. So we're in, Scott. I like it. Next one, please. SPX. What do you think of an SPX? I think today might actually be a good one. You want to do it?
Sure.
Because you still have volatility still high. I mean,
yeah,
coming in, but
even the S&P just rallied 20, so that's going to kind of hurt your entry point here. I got about $39 expected move. It is 9 o'clock. We've done a lot of research. 9 o'clock's a decent time to trade on. Put it at your price. You mean S&P's up 17?
485.
Okay.
All right, so we did the 68.75, 68.90, and then on the downside, 67.90, 67.75. So we did this 15 points wide, selling the 20 delta.
On each side.
With
your short.
And going $15 wide. Cool. We're in. We're so far, we're basically all of these.
We're what?
We've done all these.
Yeah, no, it's been good. It's
Beautiful
been good.
Day.
Yeah, so far it's been great. Next one, please.
Okta has earnings after the close today. Software stock.
I've never looked. I don't remember looking at the stock. I apologize.
You've never looked at this?
I've never looked at it to trade it. We've talked about it. I mean, it's a stock that's gone from around 100 to 70 and change. The markets are
not good.
Not good in here.
Yeah, these markets stink. You have earnings after the close today. I'm going to shy away from this one. I think there's a lot better plays in the software names that are very liquid.
Yeah, I agree with you.
So I would avoid this one. I'm going to avoid this one. I'm going to pass on this one, Aaron. But thank you for writing in.
Yes. If you're going to do anything here, do it something with defined risk. If you're selling a 30 delta option and going $5 wide, it should trade around 1/3 the width of the strikes. You know what I mean? So try to get your pricing here when these options are, if you go 44 days out, they're $1.50 wide. If you go a little bit tighter than that, they're still $1 wide, just to give you pricing, how to price an option. Got it.
Very good, sir.
Got it.
Next one, please. Netflix. So funny. We had the long shares, and then you get this move, and I sold those calls day 2 of the rally. So we went from 75 to like 85, and then I sold the 90 calls. I was like, oh, this is great. And then all of a sudden, you wake up and it's 97. You're $7 in the money. So I'm basically done with my position here. It's slightly short delta. We put diagonals on to kind of hedge that a little bit. Okay, so neutral April. Closed my longs a few days ago. Good job out of you. Now sitting neutral after this parabolic move, expecting a wide. I don't know if this is parabolic. I mean, this stock is not. I mean, it's not. It's gone up. What would we call it?
Yeah, I mean, I wouldn't say that Netflix is parabolic either. I mean, it's up $1 and change. It's under $100. I mean, if you're looking at it from when it was $75, I guess. Hey, 25% in a week. I guess that's parabolic. I'll give Kyle in Boise the win for that. Sure.
I did the 85-110 strangle.
Okay. Last time it was 110 was back in December, and the last time it was 85. Just to put things in perspective,
was last week.
It was last week. Right.
Oh, that's okay. But if 85, this has a slightly short delta lean to it.
It does.
85 would be a good, not 85. I'd like to see 90.
Of course.
Thank you, Kyle. We are in with you. Next one. Google has not done anything. I actually I got some long delta there, but I also have a strangle on.
I remember Netflix got that whole breakup.
Just
breakup dowry, the
2.8 billion.
Yeah, that's why it rallied.
Change.
Yeah,
that's nothing.
Evidently not.
Yeah, they should pay that out as a dividend. If they do that, they're back at 110.
Yeah,
they announce a special dividend.
Mm-hmm.
That would be smart. All right, Google, bullish, long term. Gemini is gaining.
Wouldn't be smart for the strangle you just sold. But
no. I would be in pain, but it's okay. Gemini is gaining traction while Google hasn't done anything terribly wrong. Short term, neutral, long term, bullish. Okay. So I actually have your short term neutral. I'm short the strangle. I added a diagonal spread, which is April, March, which leans a little bit long. So I actually have your sort of thinking here. I'll give you what I'm short. I'm short the 275, 340 strangle, and then I'm long the April 310 call and the March 320 call. So my net delta on this position is pretty flat at this point, slightly long delta, but I'm with you on this trade. I think it's an interesting one. I think even adding like a diagonal spread here. I mean, Google, it's down. I guess when you look at the numbers, it's down 10% from the highs.
Yeah,
at a big move.
Yeah.
I don't know if I want to add to it,
it's
but
languishing near its recent lows. I mean, lows that it hasn't seen since November of last year.
I like the idea. I have it on strangle and a call diagonal.
IB rank at 22 really doesn't make it too much of a premium selling. Maybe for those who don't have positions on some sort of diagonal trade, you don't have a big vol differential, but maybe that's the way I would play it on a $300 stock. Doesn't have earnings until April 23rd. Crowd.
I close out the strangle, the 350, 430.
915. You got
I did that at like 1260. It was like $350 out of that.
Nice.
I sold the put, and then I sold the put. The software stocks had a face ripper to the downside, and I was like 20 points in the money, and I sold the call. So I made a couple dollars on the call, and the put obviously.
A nice scramble.
By dollars, I mean like cents in option speak. Like I made like 25 cents on the call, and all of it was really on the put bouncing back. So
got it.
And
got it. Good
but
job,
I still have the long call from the diagonal spread. I'm out a couple bucks there. I'm gonna let that sit, see what happens.
Beautiful.
All right, so I'm in with you, Justin, on this, but I'm not a new position. I'm already in it.
Got it.
We're thinking same, but different.
Got it.
Next one, please. Next one.
JD.
Oh no.
I think this is a Liz favorite.
I have this.
Down 37 cents. I might have earnings coming.
Yeah. Near 1 year lows. I have laddered puts, which don't look great here.
Mm-hmm.
Stock is getting killed.
Earnings are March 5th, I believe. Laddered puts, stock's down 37 cents, and it's making its lows. $25 stock. What are you looking to do?
Do something.
Really cray-cray?
Because I hate trading these. I hate trading these China stocks. I'm gonna just buy 100.
You inherited that from your father, okay? I hate.
No, I didn't. This chair gave me that. The chair gave me.
No, he liked trading.
He likes trading these. I don't know if I.
That's why I say I
just
don't.
bought 100 shares of stock.
Mm-hmm.
Well, I have the ladder puts, so
it's basically a well, I call it a stupid, but
it's definitely a stupid.
You're just adding long delta.
Yeah.
It's not the long delta that's stupid. It's just you already have that trade on,
Yes.
so you're really just adding to it.
Yes. Solidarity with you, Sean.
Mm-hmm. Yep.
So that's it. I think that was about as good as it gets from a.
Yep. We passed on OKTA, right?
Yeah, that was it.
Yep.
That was the one. That was the only one we said. Meh.
Yeah. Well, the team's got it. I got it up there.
Yeah,
Look at that.
They know us.
Didn't have the markets that we need. Even the S&P is up 29. That's about as high as they've been, just a skosh off of their highs. Volatility in by 65 cents on its lows too, so that's cooperating. NASDAQ up 240. 25,000 again. Get your 25,000 hats back.
Get the hats out.
On the NASDAQ. I mean, it was 26,000. It was down to 24 and a half or so. So, sorry, 24 and a half or so. So still relatively lower end for the NASDAQ, right in the middle, lower end for the E-mini S&Ps. Russell doing the same, right in the middle, lower end of its most recent range. And the Dow is probably the weakest of the group right now, at the lower end of its range. Even the S&P's up 31. That's a new high or close enough to it, and bonds down 10.
Is it over?
That's my Liz. I did the show with yesterday with Liz. I was talking about the upside seems to be the path that nobody's talking about. Like it's the hardest trade to get long the market here. I thought, at least from the crowd, and it's almost like being short oil. It's probably the hardest trade to make. Probably the reason why you should make it. And the same thing with the upside. But we've had both. I don't want to toot my horn. We've had both sides.
Yeah.
We went down to 67.70 and change on the E-mini S&Ps last night, and we're up to 68.50 on the E-mini S&P. So what does that prove? Nobody knows nothing, and there's opportunities on both sides of the market. Premium has been high. Let's concentrate on that. It's in by 3% with the market really doing nothing. So maybe we've got that chop fest that we've been talking about. We might get in a tighter range, which would be a nice breather for the years that we've lost off our life in the last couple of days.
Yeah. I like it.
When you least expect it. Let's take a quick 90-second break and come back. We've got more Tasty Live after this. We've got, fan favorite, Mr. TP, and he's up right now. We've got his camera all beautiful. He looks so handsome. You want to watch this in about 90 seconds, Tasty Live.
Ready to take your trading skills to the next level? Dive into the world of stocks, options, and futures with Tasty Trade courses. Whether you're a beginner or more advanced trader, our courses can empower you with the knowledge to succeed. Watch as our team in Chicago shows you how to use the Tasty Trade platform and go over the basics of trading. Perhaps you'll learn about a new strategy or a potential product for your portfolio. To find our courses, go to the Manage section of our web platform or head to courses.tastytrade.com. Start taking control of your financial future. Visit our courses today.
Grow a strong community with Tasty Trade's referral program. When your friend joins Tasty Trade, you'll both receive $100. As your community grows, you get more bonuses. Only at Tasty Trade.
It feels good to get smart. Get even smarter with the ultimate how-to guide. Learn 31 different option strategies, cover calls, iron condors, jade lizards. Become a trading mastermind. Get the guide at tastylive.com/guide.
Tasty Trade is now on TradingView. Trade stocks and futures directly on TradingView charts with Tasty Trade's low commissions. Try it out and leave us a review.
Global markets never sleep. Explore them with Forex on Tasty Trade. Get in on 80+ Forex pairs, 24 hours a day, 5 days a week. FX marks the spot. Trade it on Tasty Trade.
Today's episode of Market Measures is brought to you by SIBO. SIBO is partnering with Tasty Live to provide educational opportunities for traders at all levels. Did you know index options like these can provide opportunities for diversification, lower volatility, liquidity, and other benefits? To continue your education on some of the mechanics learned in today's Market Measures, check out SIBO's Retail Trader Suite at www.sibo.com/minis.
Tasty Trade has crypto, and you can trade with zero commissions, Bitcoin, Ethereum, Litecoin, and more. Diversify in one place. Crypto, we got it, we get it.
Nikki, we are back, son. You know what that means. So is the market. Meaning the S&P is up 28, volatility by 75 cents. That's about as low as it's been, maybe 10 cents off its lows. Somebody who's never on his lows, always on his highs. My man TP in a Tasty Extra. How are you, brother?
Hello, bad. Hey, Nick. Yes, I am nothing but joy. I gotta say, I walk into a room and everybody feels better.
Yes.
Oh, yeah.
You know?
We feel smarter. I feel smarter.
Yeah.
With you in the
Well, you
room.
may feel smarter, but you also feel just a little bit lighter, and you're just like, yeah, I'm feeling okay right now. I'm okay right now. So, yeah, they can't keep this market down.
No. Can't keep it down, can't keep it up. I mean, here we are, right?
Hey, whoa, wait.
68.50.
Well, so you know what's really interesting? I was on with Liz's show Monday and Tuesday, and we're talking about the VIX rolls, the March April rolls. That thing has been crazy. Right now, the basis between the March and April's is about 8 cents over. So in other words, April is trading about 8 cents over March. Back on it was around there on Monday morning. Then it got up to like 40 over. Yesterday, when the market started crapping out again, it went to like $1 under. It's amazing. And then by the end of the day, it popped back. That thing has been all over the place.
Yes, but
you're talking about backwardation. So there was a quick moment that we were sort of backwardated between
front month and back month.
Front month and back month, and then.
But almost not almost. It's an independent trade to each other, right? I mean, one can go higher and the other one can go lower at expiration with no rhyme or reason to either one.
Tony, that's
it's not
exactly
a covered
right.
call or a calendar spread or anything else like that.
So what it is, and Nick, you just brought up contango, backwardation, that sort of thing. It's certain products like bonds or S&Ps, it's a pure cost to carry relationship. In other words, there's an interest rate, there's dividends or coupon payments, whatever, pure financial. You get other things like crude oil or corn or even gold sometimes. They're supply and demand based. So how the crops do it, et cetera, et cetera. But like Tony, you just said, the VIX is the market's guess about what volatility is going to be in 42 days. Okay, good luck with that. And it's just, well, not really. You can place your bets. I mean, if I'm going to be bullish on the VIX, if I am, I look at the base and say, okay, which month looks relatively cheap to the other? Relatively. Doesn't mean it is cheap, but it's relatively cheap. And so and just give everybody, just make sure for your own protection, never ever short the front month VIX. Please do not do that. I wouldn't short the back month VIX either. But the point is, that is the thing that goes up first and fastest. When the market starts blowing pies, it's the cash VIX that goes up most, and it's the front month VIX future, in this case March, that chases it. Don't ever short that stuff.
And you don't get the margin relief either. So there's like there's no positive to do it. It's
not a retail trade.
It's not. You can't be messing around with it. And the spikes, to your point, the March volatility is going to move way more, and the volatility of volatility is going to move way more. So if you're short calls, or if you're short the futures outright, the margin requirement will certainly increase. But if you're short VIX calls, like some sort of diagonal or calendar spread, those front calls are going to explode in volatility too, which is going to change the whole thing. You got to be careful.
Nikki, I think you were a babe in the cradle when we.
I'm glad he's breaking up about you being a babe in a cradle.
When we learned about those positions on, and it was fun times. It was fun times.
You remember 2018 with the Volmageddon with XIV, with all those like structured products that were 2x volatility, and it was free money for like 2 or 3 years because volatility just stayed in like a 10 handle, and it would go down like a nickel every single day and maybe go up a nickel the next day. And but it was just a chop fest to the upside. And these products went from like $10 to like 200, and everybody was just loaded into these. And then you have a 2x move. It goes from 10 to 20, which is a nothing move in today's market, to go to 20 volatility. But those products went to 0 overnight, and that was just like on like a headline. I think it was like a nothing thing that just blew those products up.
That's exactly right, and that's a different experience, if you ask me.
Yeah,
it's a different experience than, let's say, gee, I'm short put spreads in the SPY, right? And I have losers sometimes, right? Or whatever. Maybe I'm short call spreads in the SPY and I have losers. I have defined risk. I understand the product. It's very liquid. It can be headline driven. Somebody was saying this past few days, this is a headline market, and I don't disagree with it, whatever that means, right?
Sure.
Because there's always a headline. But the point is, the SPY, things like that, hell, even trading Apple or Amazon or Google or Microsoft, those are sort of more understandable products. When you start to get into the derivatives of the derivatives, which is what VIX is, XIV, that sort of stuff, you don't always understand why you're losing money, and you don't want to be in that situation.
Well said.
All right. Speaking of volatility, Nick, and I know it's one of your favorite topics.
I love volatility. I love volatility. You never know how much you love it until it's gone. It's that X you still miss.
A lot of things in life are like that, son.
He goes in he has a little toast in the morning for his breakfast. What does he spread on there? Volatility.
I love it.
He likes it nice. He loves that stuff. Can't get enough of it. So here's what's going on, big picture. Did you know there are now about 5,000 ETFs out there?
I remember.
I knew there'd be thousands. I wouldn't think it'd be 5,000.
I remember seeing a headline that there were more ETFs than stocks. Publicly listed stocks. It's Nick, like getting close.
Nick, it depends on how you count them. It depends on how you. Point, I think I did a quick check. I think there are about 6,000, a little over 6,000 stocks, individual stocks.
Okay.
And I think that goes all the way from Nvidia to some stupid little meme stock.
Yes.
Right?
Yes.
But there are, but over the past year, 2025, they launched so many of these bloody ETFs because they think it's a way to get retail traders. Sure. Hardest thing in the world of the financial business is to get retail trading customers. That's what we do here on Tasty. We do a great job of it, I think, with the content we create, platform we have, blah, 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 blah. People don't understand all the parts of it. So, let's launch another ETF. That'll grab them, right? No. But one of the ETFs that has had record inflows in February is RSP.
Yes.
It is the ETF. I don't know if you guys have heard of RSP. I hadn't really heard of it until earlier this year.
Yeah, Chris Vecchio brought it up. It's
equal weighted.
Equal weighted, but
thank you. Yep. It's equal weighted. So what does that mean? S&P 500, the standard S&P 500, in the SPY ETF, for example, is a capitalization weighted index. So it looks at the market cap of the stocks and takes each market cap, divides it by the S&P's total market cap to give the percent weight for that stock. Nvidia has the biggest market cap, and I don't know what the smallest market cap is now, but the stocks with the biggest market cap, specifically, Nick, the Mag 7, have been overweighted. Okay, because they have a much bigger market cap. Multiple trillions of dollars of market cap. So here's what the RSP flows are all about. People are seeing the relative lack of performance in the Mag 7. Okay. And they see, gee, I don't like that. And I think the Mag 7 stocks are taking down the SPY. So I think the solution is to buy an equal weighted index, which says, I don't care about the market cap. I just give an equal percent weighting to every single stock in the index. So Nvidia has an equal weight to
Coca-Cola. Yeah.
Thank you. Coca-Cola. Yeah. Okay, fair enough. Which piqued my interest Because if people are saying, well, it's a safer bet, it's less volatile, well, what's going on with RSP? So here's what I did. I drilled down a little bit. The first chart you see is over the past 6 months, RSP in blue, SPY in orange, okay? So for a while, SPY was outperforming RSP. No surprise. And then in the past couple of months, and remember, just like we said, as the Mag 7 stocks started to flatten out, not really do a whole lot, the RSP started to outperform. Okay. And if you see that, gee whiz, that starts around February. That's where all the money started flowing in. Okay. Now, is it smart to do that? Let's go to the next slide. This is RSP over the past 5 years. Okay. Versus SPY. It has significantly underperformed since when? 2024. And that's because obviously that those big stocks have been outperforming. And I mean, we all remember it. The first $1 trillion company, Apple, right? And then the other ones followed suit. Now we got multiple trillions of dollar companies, and those have been pulling up the SPY relative to an equal weighted index, RSP, over time. It's only recently that RSP has been outperforming. Historically, it's maybe outperformed sometime, but generally speaking, is underperformed. And going to the next slide now, this is laid clear over the past year where RSP, and again, it's all of this is happening in the past couple of months, that RSP has maintained its rally. And this actually, again, going back 1 year, is actually 365 days. This is back in March 3rd, 2025. Okay. So over the past year, SPY has been relatively flat. RSP was up. Now it's coming back a little bit. So it's not an obvious buy here to me. And this is the argument I'm going to start to make is, yes, you may think RSP is going to outperform the SPY because of the Mag 7. That's just a bet. That's just a speculation.
Yeah.
Okay. It doesn't necessarily mean it's less volatile. Let's go to the next slide and take a look at the volatilities. These are the RSP does have options. They're not very liquid. I wouldn't. They're
untradeable.
They're not tradable.
They're untradeable.
Yeah. There's no open interest. The markets are big. The markets are wide. You're going to spend 2 hours doing price discovery. It's not worth it.
And from
volatility is, as people expected, typically lower than SPY. Actually, back in a few years ago, it was kind of neck and neck. But recently, the RSP vol, the orange line in here over the past year, has been lower than the SPY. Why is that? Nikki, it's the Mag 7 again. Yeah. Their volatilities have been high. That has in turn pushed up the SPY IV, the VIX, relative to RSP. So yes, the argument is it is outperforming the SPY, equal weighted, saves the day, and it's lower volatility. What's not to love? My argument is no. Let's go to the next slide. And it's only recently, and I should say, this is the difference. This is SPY IV minus RSP IV. Did I say that right? RSP IV. Sounds like a disease.
They have a shot for that. They have a shot for that.
They do.
RSP IV, there's a shot for that. It's not a problem anymore than nowadays.
I'm wiping my brow over that one, Nikki. So the point is, this is no surprise that the SPY vol has been higher. This is just the difference, and it illustrates now over the past 5 years, it was basically around zero, back and forth until 2024, and now SPY IV, the VIX, is reliably higher. But here's what I did. Let's go, and this is what I think is maybe the most interesting slide. Let's go and take a look at the S&P 500 IVs. So this is a comparison of the average IVs, implied volatilities of the top 50 stocks in the S&Ps, the top 50 cap stocks, versus the bottom 50, versus all of them.
Okay.
Now, Nikki, you're very perceptive, and you notice, wait a second, the all stock volatility is the average is about 42%. Shouldn't that be the VIX? Yeah, well, not quite. Because what you're seeing, Nick, is that's all the unsystematic risk. Okay, the difference between that 42 average and whatever the VIX is trading for is the unsystematic risk that each stock has. Okay, so the index, the SPY or the SPX, basically diversifies all that stuff away and gives you the VIX at 22 or whatever it is. So that's why there's a difference there. But if you look at the bottom 50, they still have a much higher implied volatility on average than the top 50 stocks do. So my argument is shaving off the Mag 7 volatility, or not shaving it off, but reducing the impact of the Mag 7 stocks and their volatility, does that really make a difference in the RSP risk? And my point is, SPY has been outperforming RSP pretty reliably, except for the past couple of months. I can't trade RSP options. Maybe they'll become liquid in the next year, but I can't pay the bills with that.
No.
That's why if you are bullish, I'd say, look, if you just want to be long, if you're one of those types, fine, you buy RSP, keep your fingers crossed. But you can't do anything with it. It's just sitting there as an investment. You're much better off selling put spreads in SPY or SPX if you are long-term bullish on the market.
Good job out of you.
I like it. And
nice takeaway there.
And so when you were talking about volatility there, you're the systemic volatility. Did you say systemic? Systematic
versus unsystematic.
That's all the like earnings and announcements and CEOs stepping down. That's the sort of like it all evens out because you have 500 of these stocks and we look at it all the time with our earnings recaps from the research corner, where the earnings net out to basically zero. Like if you took all of them together, the average return is basically zero. And so with a basket of 500 stocks, all those things, the whatever crazy move happens in Okta to the downside is offset by a crazy move in another stock that's to the upside. And so you kind of even out those binary events. That's why this volatility is lower than what you're seeing in the overall volatility of all stocks.
That is exactly right, Nick. Yeah. And you are living it as a trader. So the three of us actually trade this stuff. A lot of people who create ETFs and the analysts and stuff, they don't trade. They're not in Okta. Okay? No. They're not trading NVIDIA earnings. They're not getting smoked on a short put spread. Okay. It's all theoretical. Okay. Yeah. And that's why when you actually trade, when you actually engage in the market, it's kind of like this aha moment when you look at this data. Oh, that makes sense. Yeah, right?
For sure.
Good job, TP, as always, my friend.
All right, guys. Good luck trading, and I'll see you next week.
All right, you can do that. Even the S&P is up 56. I know you're a volatility freak. It's in by $1.30. That's about a 6% move. NASDAQ up 1.5%, $360.70. Russell up 29. That's a little over 1%. The Dow, the lagger, up almost 300, 290, up around 5/8 of a percentage point. Bonds basically unchanged from last time I quoted 116.31, which is down 10 ticks. You've made a bunch of trades. You covered some oil for some nice profits.
I took tons of puts off.
RKLB, TSM. SMH,
a million things.
AFRM was a nice trade. You had a diagonal.
Yeah, no, that was just a call spread. We did that. What's your assumption? That was a good one.
Oh, call spread. Sorry. Yes. And then snow.
We're all over the place. We'll recap them in a minute.
All right, let's take a quick 90-second break and come back. We got more Tasty Live. Thank you, TP. We got another guy named Q coming up here. Everybody's so fancy. They're like L. You know what I mean? Like they're just.
Well, you got Bat. I have like sort of baby Bat, but now I'm like middle-aged Bat. So like I don't have an acronym. You got TP, Q, Bat, Nick.
Like, we'll be back in 90 seconds with Nick and Glenn. We'll be back in 90 seconds with Tasty Live. Thanks, TP.
Thank you, TP.
Look who's backtesting. Tasty Trade now has options backtesting for free. Test your trades with over 10 years of data for the most popular symbols. See how your trades would have performed in the past. Look back at profit and loss and take the guess out of guesswork. Oh, did we mention that it's free? Get backtesting at Tasty Trade.
We built Tasty Trade's web platform for today's traders. Drill into data, find opportunity, and track the action with hundreds of indicators. Fund your account and start trading right in the app. Join the club. Tasty Trade.
Ready to take your trading skills to the next level? Dive into the world of stocks, options, and futures with Tasty Trade courses. Whether you're a beginner or more advanced trader, our courses can empower you with the knowledge to succeed. Watch as our team in Chicago shows you how to use the Tasty Trade platform and go over the basics of trading. Perhaps you'll learn about a new strategy or a potential product for your portfolio. To find our courses, go to the Manage section of our web platform or head to courses.tastytrade.com. Start taking control of your financial future. Visit our courses today.
Feel like your wardrobe is missing something? Like style, purpose, and maybe a dancing dog? Can I pet that dog? The new Tasty Trade and tastylive web store is now live. New merch, bold designs. Did we mention all net proceeds go to one tail at a time? Invest in the real bull market, dogs. Go to tastytrade.threadless.com. Grab some gear and help some pups. You get merch, they get a home.
Forbes called us best online for options trading. Investopedia, best for options trading, period. With stockbrokers.com, we're number one for options and futures trading. The Motley Fool really likes us. And so does Business Insider. So what else can we say other than boom? Trade like a trader. Tasty Trade. Make your move. Got the need for speed? No problem. At Tasty Trade, you can turn smart ideas into real trades with just a few clicks. Wow, that's fast. Tasty Trade. Make your move.
Niggy, we are back, son, and you know what that means. Time for a little bit more Tasty Live, where we go to the Tasty Trade World Headquarters. That's right, our first man is... Q, what's up, brother?
Fellas, I'm doing well. How's it going?
Welcome back to the show. I know you were busy yesterday on the downside. I think for retail investors, probably lean a little bit long, and we were at or around lows. Even the S&Ps, by the way, 68. Well, they were just 68.80.
Hey, Johnny, you going to take the money and run on that put that you sold for option trades yesterday, AVGO?
In where?
AVGO, the 250 puts?
Sure, go ahead.
Oh, I was going to let you do it.
No, you could do it. I'm talking to Glenn. I mean, I'm talking to Q. No, go right ahead. AVGO up $7, $6 and change. Go ahead, close it.
Yeah, sure. There you go.
Let the minions do the work for you.
Let the minions, right? What did I make you for? You know what I mean?
I really was.
Come on.
I was made for a life of servitude.
That's right.
That's
right,
really
that's right.
you.
I did it. You do it. This is what we do.
Yeah,
I mean,
this is
come on.
Unbelievable.
That's a great job out of you. You know.
Yeah, good job. Good job out of you. Good job out of you.
We've been just.
AVGO has earnings after the close today too. Is another good reason to close it.
I think we're out of about 30% of the buying power that we were holding.
Yes, but we were left a lot of cash in our account, which is a good thing, right? So,
yeah, but we sold a lot of downside vol puts in. I just closed them in SMH, TSM, AVGO, Amazon. I mean, we've taken off a lot of buying power.
And now you're going to be searching for trades soon, which is going to be the other. Which will be the other problem. I know it's a high-class problem. They were good trades because you're able to take them off, but for sure. Q, even the S&Ps were just 68.80, or they're at 68.66 right now. That was January 2nd, the first day of trading. We're now March 4th. That was the low end of the range from day one of trading of this year. We've gone absolutely nowhere all year long with humongous moves back and forth in the overall market.
Mm-hmm.
Which has kept you and the desk very busy.
Yes, yeah, it kept us very busy. But, this is a very good market for a lot of our customers that are premium sellers. A lot of these big moves, initially are not good for premium
and
selling.
nimble.
But then,
people had to be nimble. I mean,
this whole year has been, you have to trade.
Yeah,
you can't.
A trader's market for sure.
Yeah, and a lot of our customers are, very active, right? Yeah. And so when that implied volatility is high, there's been a lot of opportunities so far this year. And then if you were able to, keep your size in check and maintain the course throughout the, over like a couple of days, it was just going like whipsaw back and forth, right? And so as long as you were able to, stick to the mechanics and things like that, you were able to come out of the other side, towards the end of the first quarter here.
Yeah, this has been.
Well, it's good to see you. I'm glad you survived yesterday and all the phone calls. So good for you.
Yeah, got to take care of the customers.
Come on, he's a
Some days we earn our pay. You know what I mean? Some days it's a lot easier. Some days, you earn your pay. I mean.
Yeah, for sure.
That's why you get paid the big bucks.
Professional right there. That's a professional.
My man. All right, listen. Let's get to your list. We're not running late, but this Ryan I haven't seen for a while, and we finally got Bitcoin higher. So he finally has something good to say to everyone.
Oh, come on. Don't you put him out there like
Oh, I'm sorry. I don't think he can hear us.
No,
he's in the cone of silence, isn't he?
No, that's a great job out of him.
Great job of him. Great job of him.
All right, let me get to my list here. Top 20 symbols.
Get you back on the desk. Even the S&P's up only 42. That I'm sorry to interrupt you for a second. That SPX trade that you put on has never been positive. It's basically an unchanged trade, maybe actually 10 or 15 cent loser right now. So volatility / VX
really helped
in by $1. S&P expected move is 26 or 27, but premium in the 0-day hasn't come in yet.
So
giving a little bit of credence to what TP was saying about how volatility stays. When you have higher implied volatility, it stays more bid in the front month.
So do you hold that trader or close it? That's the question, because you've gotten a bigger move against you than what you would have expected, but because you got so much of a volatility contraction,
you're one strike away from your call side, and you're basically unchanged on the trade.
So do you close it?
What's your opinion on the overall market?
I think you
either roll up puts or you sit, right?
Yeah.
I mean, you can close it to get out of it. I mean, I don't have a problem.
I think we let it chill for a sec. We'll see
okay. Go ahead. I'm sorry. We had to have a little therapy session.
Yeah, no, that's interesting actually, because a lot of the times, customers will call like with 0-day positions and be like, hey, when does the volatility typically come out? And then it, it always depends, on
random
on the day. right?
Yeah.
If you know when, you let me know. Okay?
Yeah, I will. I got
Please,
you.
let me know when that volatility is going to come
Yeah,
out.
because sometimes it's like right between 8:45 and 9:45, volatility is like diminished. It's gone. And there will be other times where it'll stay bid until like 12 or 1 o'clock or even 2.
It's almost like sometimes the market goes up, sometimes it goes down.
Good point you make.
You
It's a
know,
good
like
point you make.
it's one of those things. It's hard to tell. But if we had the crystal ball, this whole thing would be a lot easier.
Indeed. Top 20 symbols going through the system, and their IVR at number 1, Tesla, 5, Microsoft, 32, Amazon, 22, NVIDIA, 18, SLV, 68, Micron, 78, GLD, 74, iBit, 59, Netflix, 31, Google, 18, TQQQ, 29, TLT, 8, AMD, 32, Palantir, 19, Meta, 18, DDOG, 56, Spotify, 25, SNDK, 59, Oracle, 91, and SoFi, 24.
Good job out of you. Good job out of the whole world.
Can't keep a good market down.
Can't keep a good spoo-doggy down.
Although they're only up 37 right now. I say only up 37.
We might get our SPX trade.
About 20 handles higher than that. Yeah, your SPX trade now is a small profit trade, probably trading around 440, 450. Volatility in by 96 cents. We'll see how the market behaves after I let you go.
Beautiful.
Good job out of you.
Thank you.
There he is.
All right, the man who made everybody's day better today with Bitcoin up $4,600 to almost $73,000 as foretold.
We're so back, baby.
We just needed to take you out to the woodshed. We just needed to get, get you sick.
You got to test the conviction.
That's right.
You have to
down
test
to
the
60,000
conviction.
approximately, up to 72, 73,000 right
The
now.
high of the session right now.
High of the session. Perfect timing for you.
We're feeling better.
Feeling better?
Yeah,
Right.
I'm feeling better. Yeah, I think your range is still 60 to 80. Let's see if this can hold. We've been trading sideways for what feels like months now. I think has been
we were at 80 a month ago.
Yeah.
We were at 60 72 hours ago.
Yeah, I mean, we're what? Up 5-6% here. Yeah. It feels good when it's up, but this is pretty normal in terms of obviously how Bitcoin trades. I want to see it hang on to 70, of course. You can probably push to 80. If you look at any of the liquidation heat maps that are available, whether that's CoinMarketCap, CoinGlass, a lot of different dashboards that'll show you where those perp positions are that'll be auto liquidated should you break through certain prices. You can see where those big kind of chunks are. You have a chunk around 73, 74. Probably north of 100 million in liquidations that you would see. If you get up there and that happens, that could extend this rally, but then quite often we see that come right back down. So I want to watch this for a little bit. I'm not rushing to buy into it. I think everybody that's been following us or has been, kind of weathering the storm, you have a position. So it's looking a little bit better on the screen, but I don't think that you're in different territory until you're back above 80 and there's some more conviction. What has been positive, though, is to see in the face of volatility. Now, Bitcoin vol is still elevated, but you had the VIX back up toward 26, 27, right? You've got war headlines. Bitcoin didn't sell off into that over the weekend, and that has been the only market that's open at these times. And so to see that, I think that's definitely a positive sign. There might be something brewing there. It also isn't collapsing in the face of this dollar strength as well. So,
yeah.
Well, I think
that actually is an interesting point because the move to all-time highs was on the back of weakening dollar.
Weaker dollar, lower 2-year yield, lower short-term rates, right? So those things ebb and flow, but over the weekend you got the unfortunately the war headlines, and Bitcoin has kind of rallied into that, which maybe is a positive sign for Bitcoin. Maybe trading alongside gold now and silver. We'll see.
Yeah. I will ask because there was some, the last week we kind of had that whole AI is going to use stable coins / crypto. That was kind of part of it. Circle, which is one we talked about this morning, had earnings in the middle of last week, had a really nice rally, and has been really strong throughout all the movement this week. You have kind of some news coming from JP Morgan and Citi about, you got to treat them as banks if they're going to give the interest to customers, all this kind of stuff. Like, it seems like it's bubbling up, this sort of like bullish narrative of stablecoins specifically. Do you think that's kind of trickling over into the strength that you're seeing in Bitcoin more recently now?
Yeah, absolutely. There's a lot of positive signs. There have been for some time. Prices maybe ignored that in the short term, but those kind of longer term positive fundamentals have been bubbling up. You come out of earnings here for Q4, and there's kind of three themes, really. One is the Bitcoin price is all that matters to most of these companies. Bitcoin miners are going to get hit when you go from 126 to 60.
Yeah.
There's no doubt about it. The other theme has been you're seeing some of these miners pivot to AI and high-powered compute. So they're using their infrastructure to make a little bit more money in a business that maybe is not as cyclical as Bitcoin mining is. Mm-hmm. But number three has been stablecoin infrastructure.
Yeah.
And Circle 70% revenue gain year over year, earnings like before interest, taxes, and depreciation were like up 400%. Yeah. And so that stock... EBITDA, yeah. Well, we forgot the amortization. How do you say that? Yeah.
Good job out of you. It's fair.
So,
Close enough. It doesn't matter.
Earnings were looking good, right? There's that positive narrative now that we have that information, but we saw that all along. We're talking about stablecoin market cap growth, and most of it's on Ethereum, but that's over 300 billion. You're seeing that on other chains now, right? Look at the stablecoin volumes that are occurring on Solana, on Sui. They just launched the native stablecoin, trying to have a yield-bearing piece to that. And so I think that continues. I think it's going to continue to grow, of course, certainly as more of these larger financial institutions get on board. We're still going back and forth with the Clarity Act. Looks like Trump is in favor of
he mentioned
crypto
that,
companies.
Today, I think he said something that was pretty bullish for crypto too.
So I think it's supportive. You look at Circle, that went from almost $300 to $50. It gets extended on both sides, of course, and you're back up above, I think, 100 now. I did a video on this yesterday. I think there's an opportunity still when you look at just your return on capital in terms of the buying power versus the premium that you can sell some of these out-of-the-money puts at. 75 was probably in play yesterday. You're not going to get paid there as much with the move.
85 at $4.
Yeah, so that's interesting to me. Short term, on a 45-day basis, at a 2-month basis, whatever it might be. But long-winded, of course. But to get back to your question, I think definitely that spills over into what you're seeing. Right, this has been left for dead for the 10th time now, and surprise, surprise.
Is it 10?
Not dead yet.
I must have missed one. I thought it was 9. It was 10. So I missed one.
A handful at least. Yeah.
But we'll see. I mean, when you look around, right, you've had inflation that's been somewhat muted for the last few months, and that might be picking up again. Obviously, oil as a driver or an input there is higher. We'll see if it can hold these gains or not. I tend to think you want to sell some of these like very short-term, very volatile moves to the upside. Doesn't mean that it isn't going to go higher over time, but that initial move might be a little bit extended. But that said, point being, commodities are in play. Yeah. And when we look at this historically, Bitcoin has benefited from those environments. Up until now, hasn't done anything. It's been a very poor performer, but maybe it starts to catch a bid.
I like it. I'm long. We were talking about our IBIT leaps earlier this morning. We bought some leaps last time you were on last week. And those are starting. You're starting to see upside volatility kind of increase.
Yeah.
Further out on the curve, which is interesting.
Not that we get there, of course, but if you go back a couple of weeks here, and if you wanted to buy call spreads and just take a flyer on IBIT in the event that maybe Bitcoin does run 20%.
Yeah.
Because it's done that before. You can buy these spreads for 5 cents.
Yeah.
All right, and no one's looking for this to get back to 120. But you buy it for 5 cents, you sell it for 20 cents. You do that a handful of times. This is a decent trade when volatility, at least.
And you get to tell your neighbors how you participated in the big move.
Yeah,
exactly.
I mean, but you did that in IBIT. You did it in a different way. You bought some out of the money, longer dated calls, which ended up being a good.
Because the implied's been cheap.
Yeah,
relatively speaking.
Yeah.
I mean, it's been wildly volatile in realized terms, but implied hasn't really moved too much. Typically, it does expand on those upward moves, so I'm not surprised to see it's somewhat muted on the downside there.
Yeah.
But But yeah, that's been, an opportunity. And there were, of course, in hindsight, it's 2020, but opportunities in Coinbase, in Circle, some of that stuff is coming back alive and maybe has some room to run, given just how far it's fallen. But I've got some expected moves for you, some relative performance if you guys want to take a quick look.
Go ahead.
Yeah, so looking for a larger move now here, $5,500 in Bitcoin as the price is a bit higher, running this off of a $72,000 spot price, get you back close to 80. I think if you were buying this in the low 60s, you probably take a little bit off the table, in my opinion, if you do see that move back towards 80. ETH, let's see if we can hold on to 2,200. It's not really ripping higher, but we're not getting smashed lower either. So maybe finding a little bit of support here. Solana trading a little bit better. Top end of that one standard deviation move on a weekly basis is back up over 100. SUI, which hasn't really done too much, we can swap that out. I think we'll look at Uniswap next time. That's trading a little bit better, but SUI up over $1 again. XRP, I tried to buy that, man. I was in there at working an order at like 133 in the futures and never got filled. That's starting to run a little bit.
You really gotta you hit bids and offers.
Yeah, you
can't. There's no mid price there. And I will say, I had a contract on that expired on Friday, and I was like, I didn't close it. It's cash settled, no problem. But
didn't roll back into it.
Didn't roll back.
Now it's
into
running,
it. And I'm like, oh, come on.
Yeah, that would have been a nice one. But you're looking at about $1.60 on the upside there at the current spot price and implied volatility. One thing I do want to point out on the next slide here is just relative performance. So as I mentioned, Solana's trading a little bit better here. You can see up 2% week over week against Bitcoin. Solana versus ETH also starting to trade a little bit better. So those are two signs I would look for. If I had to pick between the three, all right, maybe you lean a little long Solana here. But Uniswap and DeFi as a proxy is trading a lot better too. And so that's just another area that I want to highlight. We've talked about this on the show before, but when you price all of these things in dollars, they all move together, but have varying degrees of volatility, as everyone knows. When you start to price them in some of your majors, use Bitcoin as your reserve, so to speak, your base currency, and you look at it in ETH terms too, you might find spots or opportunities for relative outperformance. Now, we're not going short ETH or Bitcoin on the other side of this, but it gives you an idea of where maybe you put that next dollar if you're looking to trade some momentum here. That said, the one other thing I want to finally point out is that we wrote about this over the weekend. You could possibly, this is maybe a stretch, you might have some fuel for a short squeeze here. I talked about, and maybe that's what you might be seeing here already, but I talked about the perp liquidation positions. Strategy is the biggest short on the board in terms of the size of the position there I believe of all equities. So that could reverse temporarily. And you're starting to see ETF inflows pick up again if we just pop over the next slide. Just slightly, but we reversed those outflows that we were experiencing for the better part of February. So some things are moving here. I know everybody's feeling a lot better. There's a lot in play across the board, whether it's in equities or crypto or anywhere else.
Good
Bitcoin
job.
back above 70.
Good job,
We're so
Eddie, my
back.
friend.
We're so back, baby.
Here we are, 68.77 on even the S&P.
Volatility's coming in bigly.
Volatility's come in by $1.26, back near its lows, almost 6%, 5.75%. Bonds haven't moved, 117 and change. Right in the middle of this most recent huge range that we've had all year long, unchanged for the year, basically on the E-mini S&Ps. With that in mind, place your bets. Volatility higher than it was at the beginning of the year. So if you've been looking to put anything on here in the equity world, you're certainly getting paid for the risk. We'll take a quick, you made a bunch of trades today, Nick. Great job out of you. Almost 30 trades. So plenty to follow on the follow page. We'll take a quick 90-second break. We'll come back. We've got Liz and
Jenny live from the SIBO. It's going to be electric when the ladies are live.
Just threw up my mouth a little bit. Peace.
Peace.
Good job out of you.
Global markets never sleep. Explore them with Forex, now available on tastytrade. Get in on over 80 Forex pairs, 24 hours a day, 5 days a week, with the Forex platform that adapts to your style and speed. FX marks the spot. Trade it on Tasty Trade.
In the world of investing, a beast lurks between the numbers. Some watch from the safety of the sidelines, but others saddle up and ride that one-ton rowdy ribeye for all he's got. If that's you, join us on Tasty Trade, named best online broker for options trading. Genius loves company.
Golf play, normal distribution, reduce speed, increase standard deviation for a wider angular strike. If you think like a trader, we've got your back. Tasty Trade. Join the club, genius.
Got friends? Get $250. We'll give you a bonus for each qualified person you refer to Tasty Trade. So spread the word and earn rewards. Terms and conditions apply.
Hello, everybody, and welcome to the Wednesday edition of the Liz and Jenny Show. My name is Liz Deerking. That beautiful brunette to the left of me is Jenny Andrews, and we are live from the SIBO SPX pit. We love it here. It is a wacky Wednesday, and I am happy to welcome back my partner in crime, Jenny Andrews.
I'm happy to be back, Liz. Did I miss anything?
It's like, what's that song from Hamilton? What did I miss?
What did I miss?
Yeah, nothing. Nothing happened the last couple days.
Yesterday on my birthday, I saw glimpses of news. And I said to myself, what I'm giving to myself on my birthday is to not look at my account.
It could have been the text I sent you at 6 a.m. saying, don't look at your account. Now, I kid about this, but I did. I woke up yesterday morning to the spoos. Now, I get up early because I asked Tony what he saw the spoos down, and he's like, they were down 90. I was like, when I got up, they were down 150.
And it was a wild ride in the market yesterday.
Yes. It was a wild ride in the market yesterday. Monday was even worse. So we talked to a couple traders as they were going by, and we were talking about, he was saying about how there were some put buyers in the wings, but they never got the ability to jump in because we did rally right afterwards.
Right. He did say, he said, put buyers in the wings, waiting to pounce, waiting for the market to keep going down and then pounce on that's what he said, waiting to pounce on those puts. But we never got the continuation. They never jumped in and bought those puts.
Monday, we rallied. Like, we were green on the close. And TP and I had a little debate going each time. He won one day, I won the other, but we were green on Monday. And then when Tuesday, I actually thought the follow-through would have been on Monday. Tuesday, we stayed down about 50. We closed down 50 or 60, which was a huge rally considering where we came from.
So Monday, you saw the market open down, then rally back by the end of the day.
That was a rubber band rally. That one was just... Tuesday, we went like this quite a bit.
And yesterday, when I saw the news in the morning, I'm sure many people out there who are active traders thought, geez, Monday was my opportunity. Monday was my opportunity to get out of any longs if I needed to, or protecting longs. To protect, I don't want to say protect because the market's expensive, vol's expensive, options are expensive, protection's expensive right now. So to get out of any longs or to put on any downside positions, like you felt like you missed that opportunity. You missed that opportunity at the end of the day on Monday because we just opened. I was on a college tour, and in the admissions building, they had a news network playing, a market news network playing, that just kept flashing tickers, and I was like, don't look.
No, it wasn't. Yesterday was a pretty interesting day in general because it was one of those where if you looked at it, and I was on last call with Tony too. So can we pop into the platform? I want to go to the chart.
Sure.
Just go to SPY. Just go to SPY's chart. So I was on last call with Tony, and we were talking about this, and it was fascinating for me because he talks about the trading time during his live show, and I talk about the trading time during our live show because they're two different times, right?
Right.
And it is a tale of two cities because both days during our show when I was live with TP, the market reversed. The market reversed when we're watching our show, when it's during our show. And so he was saying, if you take a look at this, now that bar is bigger than it.
Yesterday's bar.
Yesterday's bar is bigger.
You can see a low of 669, high of 682.
But if you take a step back and kind of make that a little bit smaller, we've really been in a range for this year to the point where it's back forth. Now that broke it. I will give you that, but it hasn't. This has been. It's kind of like act like you've been here before. It felt worse.
It broke a level of support. Did you listen to Tim Knight at all? I'm guessing. Did you listen to Tim Knight at all? What did he say?
I did not listen to Tim Knight at all. I don't, because I don't trade that way. I think Tim's,
I love Tim
I think Tim's a fascinating trader, but I don't chart. So I like to put my money where my mouth is. I look at the numbers. I look at my positions. I look at the numbers, and I liked looking at this from an opportunistic point because volatility was huge.
Right.
It has come back down. Go to the VIX right now. It has come back down. I think we're down 12% today, which is huge.
Okay, VIX is down $3 today, back to 2050. So cancel crash. We're back to 2050, which we've seen this level many times in the last couple weeks.
It's come down quite a bit. Now, can you do me a favor? Go to the trade page, because I've been looking at this each day with TP on February 28th, and then go to
February 28th is over.
No, go to June 17th.
Oh, those VIX calls.
The 22 calls.
The 22 calls.
On the 28th, I went back and looked. They were $1.30. They were in the money yesterday to the tune of like $5 or $6. But take a look at this. The open interest is still the same. No one got out.
So
look at it. Still 119,000.
I talked about this. I was sitting at the beach, actually sitting at the beach bar.
Stop saying sitting on the beach. We get it.
And I talked about
Wait, where were you?
I was sitting on the beach, and I talked about these VIX calls, and I added up the...
Were you like, Lily, let me tell you about VIX calls.
But I talked about the market makers in the VIX pit, how it's so easy now to be a retail trader compared to, we used to be market makers, right? We used to be market makers sitting in these pits where we took on the risk, where these market makers...
You had to price the option. So TP and I talked about this yesterday. You have to price the option, and you have to take whatever size they want to give you.
So when they came in, and what did they buy, 95,000?
96,000.
96,000. When an order came in, a customer order came in to buy 96,000 of these VIX calls, and you're a VIX market maker sitting in that pit, and you have to find a way to fill this order. I don't want to say...
Hey, these market makers are the best in the business, and you're going to get a good fill. When you've got that big of an order, that's why open outcry is so important, in my opinion. You're going to get a better fill than you will. So let's kind of walk through this.
But it's a hard part of their job. It's a hard part of their job as a market maker to take down an order like that, like 95,000 lot, and then.
But something they're trained to do. Just keep in mind, that's why these pits are still so valuable, in my opinion, because if you're getting those little orders, they are tight liquid bid-ask markets. But when you have a big order like that, if you're going to go through the electronic book to do it, you're going to get hit different prices, where they have the ability to say, okay, we've got this big order, we'll fill you at a certain price that is going to be more beneficial to the customer than if you were just going to go through the electronic book.
Well, I'm going to stop in the VIX pit after this show and talk to those VIX traders and see how what their thoughts on that.
Oh, I'm sure it was difficult, but it's what it's what they're trained to do.
I see what you're saying. I hear what you're saying, trained to do, but sometimes orders come in that it's like. It really can hurt. It can really hurt the crowd.
Oh.
And again, I'd love to know who was the other side, who the buyer was.
I would too. So can you do me a favor? Only because we're on this topic, and I think it's kind of fun to use the SIBO. Go to the SIBO's most active. What we're talking about right here. If you go, just take the top call, the March 4th, which is today's 690 call.
6,900.
I dropped to zero.
And SPX is trading 68.70.
So 56,000 of these traded. Now, granted, we were looking at the VIX and it was 96. It was a bigger order, but this is what they do. They will give you a price on 56,472 of them.
Now that's going through the pit behind us, right? So these SPX orders, these large SPX orders are going through these guys. There are a lot of guys out here. Now, what you might not realize, they're kind of segmented. So there's a broker in this quadrant and a broker over here and a broker over there. And if someone's yelling an order now and a smaller group trades it. If this one big order comes in, it's not the whole pit trading it. It's this group, depending on what broker's bringing in the order.
No, I think the whole pit can participate in it if they need to.
Okay, it's usually like what we see is, okay, you get 100, you get 100, you get 100, you get 100.
But when you've got 56,000, I believe it involves a lot more. There's a lot more players involved.
But we often we hear like this side working with this side, that side working with that side. I never hear this side yelling to that side.
There's a reason they're all together, though, because occasionally you do have to. The pit does have to. So they're all trading the same thing.
They're all trading the same thing, but the different brokers are in different locations.
What you're not seeing, what we used to see on the trading floor, is so from here. Over there is the VIX pit. So that is the VIX pit. And I would argue, how many? So if this has maybe 350, that has maybe 100?
Yeah, it's not as big as this SPX pit. Right, it's not as big. But that had to hurt. That had to hurt those guys, that order. That June order. So today, what do we have going on? And here, this is VIX. This just
then it just popped up. 80,000 of these.
Of this March 1850 strike. But what I cannot see from this, what we're looking at, what I cannot see from this SIBO most active is if the crowd's buying or selling, if the customer's buying or selling.
We can only see that on the board.
We can see that down here on the board.
On the board, right. And on the board, if you catch it. Because the board rolls.
Yeah. Or if we hear it.
They're not keeping the most active on top. The board still rolls. Yeah. Can you, I'll leave this up. Go to the VIX. Let's take a look at these two.
Okay. Back to the platform. So VIX March
18, the 50 call. The 50 call. And so, wait a minute. The open interest there was 236,000. This could be a closing order.
Let me go to volume.
There you go.
There's the 86,000.
But look at that, though. There was 236,000 in open interest already.
I wonder what they... Yeah.
Can we compare it to the July, too?
What was the July?
The July 22nd, it was the 60 call, 80,000. They were right next to each other, so it leads me to believe they might have traded them together. Maybe it's a roll.
July 22nd, 60 call?
60 calls.
80,000. You're right. That was probably a roll.
Mm-hmm.
Roll from and that, again, that could be a hedge to a very large portfolio.
I'm sure it wasn't me.
But again, I don't like when you're going so far out with the VIX calls. Those are coming in doomsday scenarios.
Those market makers get. Wait, hold on. Where's my card?
Maybe they're selling them. Honestly, if I'm someone, I'd rather.
The market makers get a double card because that's a big one.
I'd rather sell those calls than buy them. Would you rather sell those calls than buy them?
Yeah.
Yeah.
But they don't get to decide what they're doing.
But we do not recommend ever, as a retail trader, selling naked VIX options.
I don't. No. We don't recommend anything. But no. I never. In my account, I never have a naked call.
But you see how much those June calls are. The June 50 calls.
Were 80 cents, 90 cents.
90 cents. That's. I wouldn't want to buy them. I feel like that'd be throwing $90 down the drain. But
I would have loved to have seen. Wait, the June 50s? I'm in the wrong one.
Oh, in the 104 day. Yeah, June, right?
The July 22nd. It was July 22nd.
July 22nd. Those 50s are even more.
That was the 80,000 was the 60s. The 80,000 was the 60s.
Oh, the 60s, 74. Yes. $74.
So it is fascinating and it is kind of fun to be down here while this is happening.
Now, these bounce huge in a big down. You get one big down day. The premium gets pumped up in all of these, but it doesn't take long for the premium to get sucked out of them.
It doesn't.
No.
Okay, so that was just kind of a fun little.
At 40 right now.
I know.
All right, let's talk about something huge. Something huge that's going on today. Crypto.
I did not see this crypto move coming.
I'm gonna rattle through some of these. We'll start with Bitcoin.
73. How high did it get?
This is.
I think it's at its high.
73,880.
I mean, it's close to its high.
Okay, so Bitcoin. up almost 7%. Then if you take a look at all of these, Hood up 8.5%. We've got
MSTR was up huge today.
And we've got Coin up 14%. Coin's killing me because I sold calls against it. I'm long Coin. I sold calls against it. I think I don't even.
Right before you went to the beach?
I'm pretty sure they're at the 167 level. Killing me. Killing me, Coin.
I know.
MSTR up 11%. So these almost look like little blips on the chart because they're not nearly back to where they were. But this is a big day in crypto.
Okay, but I'm smiling as I say this because you and I have talked at length about this, and I was talking to TP and I actually talked to Tony a little bit about it because we like to use the feels like, right? So I was like, in Texas, the temperature could be 90, but it feels like 103. So sometimes those down moves feel worse than they are. When this feels better than it. This is the exact opposite, right? So it feels so good to have finally get a little bit of a lift in it for my account.
I almost think that maybe this is the oomph crypto needed for crypto to get its wings back.
Because when you look at that, I was like, I actually was very happy about that, and it looks so small.
I know, this is ETH. Now, if I just go to, I'm going to go to our crypto here, where what's Peppy doing? Up 7%. Go, Peppy, go. I'm just going to pull up ETH, and we've got ETH right here, and Bitcoin. And you see these moves today, which are a lot, but...
Are they both up the same percentage? No, ETH's up a bigger percentage.
8%, and Bitcoin's up 7%. But in the grand scheme of things, if we go back to the beginning of the year...
Yeah, that's what I'm saying.
Yeah.
I'm happy it's at least moving in the right direction today, but it was as low as 60 yesterday, 60-something yesterday. It was low yesterday.
I was curious. So yesterday, the market was getting hit. The gold was getting, the metals were getting hit. And how much was crypto getting hit? Because I don't think it was getting hit.
No, you know what? That was one of those things where crypto was down yesterday. Yesterday it was down. It was down a little bit, and then it rallied with the rest of the market. But Monday was okay, so I'm just going to give you kind of walk through. Monday was odd because the market was down, gold was up, and silver was down, which was odd.
I saw that. I did see that. I was leaving my account on Monday.
So Monday, gold was up and silver was down. And then on Tuesday, they both got hit.
I know.
So it was a pretty interesting thing. So yesterday, across the board was selling, across the boards. And the poor small caps took it off the chin mostly. They were down close to 3.5% in the small caps yesterday, and then wound up only being down 1.5%. But when they're down 3.5%, it seems like a lot. And oil was rallying up about 9% at one point, and it only ended the day up about 3%. It was a huge reversal yesterday.
We have to take a look at oil too. I pulled up just our Tasty FX to take a look at some of these. So you could see the moves too. This Euro USD. So you see how the dollar was getting stronger yesterday compared to.
And then it got weaker again today.
You can see the move today where it's the Euro's a little bit better than the dollar today. It's moving in the opposite
wrong direction.
But we had those 2 big days of dollar getting stronger versus some of these currencies. So that's the euro. I don't know what went on versus the Japanese yen.
Jenny, I didn't look at it versus the yen. Now the yen has been beaten down more than anything else.
Yeah.
So I didn't, on days like this, there's other things that were happening all around the world that I didn't look at the yen versus the dollar in the last 2 days.
I was just wondering what the dollar was doing. I know the dollar was getting stronger these last couple days, which makes sense why gold and silver were getting weaker.
Well,
and oil, as far as oil goes,
our MCL buffer trade came off.
I heard you took it off with TP.
We took it off with TP. It was pretty interesting though. So we put the buffer trade on. We could even take a look at it again. We had an MCL buffer trade in. The buffer trade is something that is normalized by a lot of ETFs, and a lot of things are trying to do this, where they're buffering their downside.
Where you have upside profit potential, but you're
buffering your downside,
like maybe 10% room to the downside before we do start losing.
Yeah, and our Tasty Nation pretty much understands this. It's buying a put debit spread, and then you're selling an in the money call or a covered call, so you have that upside, which we can articulate, but other people understand. I have a 10% buffer to the downside, but I have upside profit potential. It takes advantage of call skew, but it was insane because there was still so much in that.
In the buffer
yes,
that we
in the buffer trade. When we took it off, it was not full profit. So I want to show you that.
We had MCL. MCL, and I can pop out our activity in MCL to take a look at you saying like we were nowhere near our full profit.
Yeah.
We took in $3 credit to put it on. Well, you know what? You only gave up $1. We could have made $100 more. We only made $200, but all we could have made was $300.
Okay, but so you see where the put. So the put that would have made the money is the 69 put, because that was our synthetic covered call.
Mm-hmm.
It was $8 in the money, and it was still worth $1. Like
it still had $1.
It still had That's what I was saying. There was still so much extrinsic value in there. That's what I was shocked. When you're taking it off, that buffer was so far.
And there was still $1 in premium.
Yes.
And that's only a 13-day trade.
And
so,
you'd be proud of me. I sat on my hands. I didn't close it Monday. I waited until Tuesday.
So you go out to that March 17th, and you go back down to that 69 level. Those puts still have 213 in them.
Yeah. Those were in the money puts when we sold them.
Right. Yeah.
Mm-hmm.
So
it takes advantage of call skew. This is a trade that does take advantage of call skew.
But we made 2/3 of our.
Yeah, no, it was fine. It was good.
And that one wasn't. It was a smaller trade. It was an MCL. It wasn't that crazy.
No, it was a good trade.
I was mad I didn't have any of the oil trades on.
I had the buffer trade on. I was mad. When I saw that, though, I thought I was going to make more because mine was a lot wider.
Right. Oh, and did you have yours on in seal?
Yeah.
And it didn't make that much?
It didn't make as much as I thought. When I saw that oil move, I was like, big money, no business.
I know. And you know, my husband, he's he works in the defense industry,
yeah,
I would say. And he kept saying, like, I don't think we're going to war. I don't think we're going to war.
And I called. I was like,
And so I didn't put the oil trade on because he's like, I don't think we're going to war. I don't think we're going to war. What does he know? He's not like in the mix of anything.
He is though, but yes.
I mean, he works in the defense.
They sell things, yes.
Yeah. But this is just like his own personal opinion. He's not working with the.
Yes.
And it's like, well, I don't know. I never had an oil. I didn't have an oil trade on. And then I said to him, I was like, you know, we went to war and oil is skyrocketing. He's like, surprised me.
Well, so from a trading perspective, I liked the trade when we set it up, and I remember saying, because I do put my money where my mouth is, I want to be in so I know where the price of things are. I was lucky than smart. I put it in 3 accounts.
Your oil trade.
The oil trade. Accidentally put it in the wrong one first, so then I had to put it in the second one.
Yeah. So SPU's only up 45 right now. This morning, I don't know about our 0 DTEers. How they're doing. We are taking live tweets. Let me pop into Twitter here.
Can we have some breaking news?
Yeah.
I think we can say it out loud. Well, I say it on the live air, so it doesn't matter either way. We are bringing it back. We're bringing it back. With Jacob. Yes. So these guys, they have asked, and their prayers are answered. We're bringing back our 0 DTE studies back to basics.
I missed so much while I was gone.
Yeah.
This all started while I was leaving for Florida.
It did.
And I'm back, and we've got Jacob back.
We've got Jacob. We're creating buildable, tradable, bite-sized trades, and we're going to break them down, and they will build on each other starting in 2 weeks, I believe.
Yeah.
Yeah.
So trying to see what we've got going on. If you've got any questions, send them in Twitter. Put the hashtag LAZJNY on here. Rolled up puts to reduce yesterday's loss to 195 before fees. Back at it today with 2 tranches of $20 wide iron condors. Thanks for the push to make 0 DD part of my strategy. Now I don't want to say we push anyone where our trades are not trade recommendations. I did the $20 wide. Iron condor today. It was through my calls.
I will tell you only because I've been BJW. Welcome. We've seen each other the last couple of days. He's using the ES futures options before the market opens.
Oh, okay.
Same concept. You can apply this concept to any of those things, but that's what he had been using.
And let's see what Blue Wackadoo has going on here. He has. I'm going to click on this. Let's see. Happy Wednesday, SPX IVR at 27, just dabbling with a 1 lot at the 16 deltas. I did the 20 deltas. You've got the 16 deltas. Call side already getting tested, taking profits elsewhere. So I agree. My account looks pretty good because it's more bullish, but I was getting hurt on that iron condor.
Did you close it?
No. So shortly after the open, 5-10 minutes after the open, I did a $20 wide at the 20 delta. So my call strike is, my short call is the 68.60 call. 68.60 call.
Oh, it's right there.
Spread is worth like $6.50 now or something like that. The 68.60, 60. Oh, I only have $15 wide. You know what? That's weird. I did $20 wide to the downside, 15 on the top. 68.60, 68.75.
It's not bad.
But still, 68.60, and we're trading
68.55. You're right there. You're right there.
We're right there.
You're right there.
And what call does Blue Wackadoo have? 68.95. Much further away.
Yeah, you're in great shape.
No, you're in good shape.
Yeah, that's what I'm saying. You're way better than Jenny.
Yeah, much better than me. Much better.
Oh, and then our Polish warrior, welcome back, Jenny, came across BBW, Bed Bath & Body Works, for earnings yesterday and loved the possible ROI. With an IVR of 98, I put on a straddle, and with only a 1.2% move, was able to close this morning for 42% profit.
Nice, Mikey. Yeah, I heard Vanetta talking about Bath & Body Works, BBWI.
There was a handful of earnings yesterday. I know Crowdstrike was one, and Abercrombie & Finch was another.
Oh, really?
I don't know what they did, but I did do last call with Tony.
So Bath & Body Works, look at this, barely moved on earnings, up $1. So great work, Mikey. I did hear them in the news, and I don't know what kind of premium you can get if earnings are over and you go out to April. You're kind of right there.
Yeah.
You're right. 22.5 put, and we're trading 23.
I mean, I appreciate it, Mikey. I don't know that I want a durational trade in Bath & Body Works.
No, but I'm glad it worked for you.
Can you take a look at Crowdstrike and A&F?
Sure.
We have, I know Bob on Fire's list is coming in. We do have a handful of earnings that we have,
Today?
Yes, that we have things in.
Crowdstrike barely moved. If earnings came out, they barely moved.
Yeah, earnings came out. And then Abercrombie & Finch was another one, too.
And you could see it was up higher. It was up to 402. Now we're trading 393. So it opened up higher.
Which is funny because right after the earnings came out, it started trading lower.
Really?
Last night.
So did you make a Crowdstrike trade?
No, but we looked at it because I was on last call.
It's tricky because it's a $400 product. It's kind of expensive and harder for some like normal, I don't want to say normal, but smaller accounts to trade. Like this account, if we only have $30,000, we can't trade a strangle in Crowd. But it still has, it barely moved and it still has a 41 rank. And you can get far.
I think it's pretty expensive though, so just throw the
But look at this, you can go down 100. You go down 100 to the 290, up 100 to the 490, and you're getting $460. You have a $200 wide strangle.
Yes, you have a $200 wide strangle, and you're putting up about $4,000 to do it. So it's a 10% return on capital.
I know it doesn't.
I mean, these aren't. This is what we touched a little bit with TP and with Tony yesterday. When you've got the implied volatility across the board up, with the VIX up. I mean, granted, it's come down a little bit, but it's still elevated in my opinion. You're in the 20s, right?
Yeah.
So it's still elevated. There is stuff to do across the board, which is why we didn't touch earnings. There was so much other things.
But for larger accounts, this Crowdstrike
is not bad.
No.
And then what did Abercrombie do? I think their earnings were really good. Even through the year, they said their earnings. Okay, look at this. Earnings are down 4%. The story that I heard this morning is they had amazing sales, not just for the quarter, but for the entire year.
But I will say, okay, so let's take a look at this because I've been. Wait, okay.
But this says if you had the news, if they gave you the earnings report in advance, you wouldn't know what to do with it.
So market cap 4.48, and I just want to compare it to American Eagle. American Eagle market cap 4.1. We used to be at a point in time where A&F was like double that of American Eagle. Now American Eagle has come all the way up, and A&F has come down. Now they're like equal market cap. What do you do now? How do you trade that pair? We used to trade that pair. Can't do it anymore.
They're equal market cap, so yeah.
I used to buy American Eagle, selling
Abercrombie until they.
Now they're almost the same. Now I'm just sitting on the sideline. I don't have a position in AEO, and I don't have a position in A&F.
I haven't had positions in those in a long time.
AEO, all I have are my little like residual dividends, like point.
Oh, because you own the stock.
Well, and I got rid of all my stock, but I still have the .00 whatever.
Just to remember.
I keep that so I see the price. So if I see it get too far from that price, then I might look at getting back in.
No, I get it. I understand for sure.
All right.
Let's go back to Twitter because I know Fabio's coming in with a question. It was underneath Mikey. There
Hello,
we go.
ladies. Welcome back. Today, South Korea had the biggest drop of 12%.
Oh, yeah.
What do we think of EWY? IVR is 96, so let's take a look.
IVR is 100 now, Fabio.
EWY.
This was a shocker. We were talking about it yesterday on last call.
So you see the move it had.
Yesterday. The move was yesterday. It's just staying where it is today.
Bouncing back a little bit. Bouncing back a little bit today. Still has 100 rank. I might look at a strangle here, honestly. Let's see where we can go.
So you've got 30 million shares have traded. You've got liquid options. Now, I'm not EWY. I've traded it before, but it's not something that's always in my portfolio. How about that? That's fair enough,
That's
right?
fair.
That's fair.
All right.
I want to make sure these markets are liquid. There are some that are and some that aren't. Like the 86, you're 95 at 145. Some are liquid and some aren't, but there seems to be open interest across the board.
Some have tighter markets.
Yeah.
What has tighter, seems to have a little tighter markets.
Are the round lots.
The $5 increments, right? So if I sell that 90 put, we're trading 134. If I sell that 90 put and I'm getting $1.40 and that's a 7 delta, and I go to the upside.
Which one did you sell?
The 90 put.
I want to go to the volume. I just want to see something.
The 90 put, which is the 7 delta. So it's down, if you see where the crosshairs are, we're right back down here.
Yes.
And then to the upside, I sell, I was at a 7 delta. Let's say I go to a 10 delta here. The 175 call is giving me I'm getting almost $300 using $1,300.
Is that put skew? Wait a minute. So
I don't, let's see, 35, 25, 15.
That looks symmetrical to me almost.
165, 35, 45, 50, 55, 65. I think
it's not a glaringly obviously skew in either direction, right?
Maybe a little bit of call skew. $20, $30 up $2, and $10, $20, $30 up $2.70. No, normal skew. The puts are trading 70 cents higher than the calls.
Normal skew.
So getting $2.70 on this strangle. If I go to the chart here, my put was
the 90.
The 90. My call's the 175.
So that brings your break even down to 87.30 or something.
Call's
like
not
that.
on the board. Puts down at 90.
Okay, now options trading. I'm just gonna talk about options traders. So somebody might look at this and be like, I don't know that I want it at 90. Look how high it rose from the phoenix from the ashes. Well, this is for 44 days. So options traders have a short-term memory cycle, meaning like everything is in a cycle. Versus you're not going out there and saying you want to buy EWY, you're saying, I think that it's going to stay between this range and this range for this amount of time. It's almost like an odds maker trade.
And if someone wanted one side or the other, you don't have to do both sides.
No, but this is a high pop trade. You've got an 86% chance of keeping 50% of it. Your P50 is 92.
But I don't even mind just selling the call.
I know.
What if we said, hey, forget the put, and we just
the one thing I will say is these options are keeping their bids because the 100 IV rank, so it's hard to define your risk. It's expensive to define your risk because of the volatility of these options.
So I moved it down, so $175 using $1,300 with just that 170 call, which would take our break even. I'd like to go back and see. Never before seen.
The break even?
Yeah. 171.
Oh, you're looking at the top. I was looking at the bottom.
At the top, I took the put off.
Yeah.
Now, you'll hear us say quite often that we don't like naked calls, but that's an individual product that can come out with news and just kind of skyrocket. I don't mind this naked call in EWY.
I don't mind it either. I'm just trying to look if you could ratio it, but it doesn't make any sense.
I wouldn't mind the 230 at the 165.
Your standard deviation away. It's not bad. I mean, honestly, I don't. EWY was all the rage the last 2 days. Part of me says, and we can do it. I'm totally fine with it. This is the show account. I like a 3-day rule where it's been only 2.
Let's take a look.
It's been 2.
If it bounces back up, we get to 150. If it continues to move and continues to skyrocket,
I don't mind the short calls here. I actually kind of like one side versus the other.
Yeah. All right, I'll just go.
See if you can get filled. You're pretty wide. That 165 is 230 at 295. See if it comes to you.
That's an 18 delta.
Yeah.
260. I'll go with I'll go with 265.
There you go.
So.
And you will see the 265 offer. There it is.
There it is.
So this is what we're used to doing. She put up her offer. Somebody's got to hit somebody's got to hit it.
If many offers start going in, calls and puts, you're going to see this rank come down because vol will come down because the market makers or just supply and demand will see we've got more sellers than buyers. It'll start making these options cheaper and moving this rank down.
It moves the volatility.
Down.
It moves the volatility, right? And that's how the options get priced by the volatility.
Okay, so we're in there.
Do you want to?
EW?
Yeah, here's Bob's list.
Broadcom, Rigetti, OKTA, AEO.
AEO. Huh. I don't know what CIEN is.
Kroger, JD. Oh, JD.
I know, we have a JD position.
Okay.
And then look, tomorrow is Marvel and Costco.
All right. And perhaps
and Billy.
Can't forget PBR. All right, let's take a look at our JD position. AVGO, that's
Broadcom.
That's expensive.
Can you take a look at the chart? Broadcom's been pretty interesting lately. So it hasn't participated in a lot of the up moves, but it's not down as much as your Microsofts and your other ones that have really taken a hit from that perspective. Yep. So this was kind of kept its wings up and stayed within a range. It hasn't fallen too far. So this should be an interesting one to look at tomorrow.
Okay, so we'll keep an eye on that. I don't know that we'll trade it. JD, we have a position in. We just have. Oh, this zebra, we should do something with. This is totally out of the money. We should have caught this earlier. When was JD's fall? Recent? Oh, just
today, yesterday, the last 2 days.
Couple days. Yeah.
Well, it fell with the rest of the market. It just didn't come back with the rest of the market.
Right. So
let's close the zebra, which is a stock replacement strategy.
Now, did all the Chinese stocks?
Baba. I believe so, yes. I believe all the China stocks fell.
Did they all take a big hit and not really bounce back?
Yes, it looks like it. Try Baba too.
Yeah, look at that.
Yeah.
Down, and not
participating in that bounce.
Making a comeback.
Yeah.
So it'll be interesting. We could change.
Let's close this and sell premium in JD. Let's give ourselves some room to be wrong.
So this is all pretty far out of the money. We do have 16 days left in this trade. We'll take our $55 back.
Yeah, that's a low probability trade right there.
Yeah. And Liz, that was our first ding today.
I was trading up a storm while you were gone.
That was our first ding today.
I'll push things through after the show.
Okay, so now with earnings in the 2-day, the hard thing is there's not a lot of premium here. There's really not. We could take that 55 cents from the zebra and just use it towards buying the 24 call.
And sometimes when we have a zebra, you will do that. You're putting an additional 21 cents in extrinsic value in it. You can go out a little farther in time and sell premium if you wanted to, but I don't mind just buying the call.
But I just don't know that
JD is one that has my number, right? So that's my son's name. My son's name is JD, so I'm always in it. JD's been pretty good to me, but I have stock and I sell premium around it, always.
Well, here's what I would say to you. I, at one point in my life, bought Eli Lilly for my daughter because her name is Lily, and then sold it. I wish I would have hung on to it for dear life because if I would have kept all of her Lilly stock,
she'd be retired at the age of 18.
Yes,
I know. So
I'm not telling you to hold on to JD forever, but one day you might regret it.
It's a tale of two cities because it's been going down. I've been battling it with but yes, he's got it in his account too. So we've got JD, JD.com.
So I don't know what to say here, but you mentioned if we go out further, we could sell puts. Yeah, we can go out and just get aggressive, sell the 125.
Because with this, if it goes up, we're going to get to keep some of this premium. And it's a slow churn instead of, I'm pretty sure we got ourselves into a pickle. That's why we switched it to a zebra.
Yes. Yeah, because JD hasn't been having a good year.
No, it has not.
No.
But I know it looks like it's a downturn. So if you're just holding stock, you're going to lose money. But selling premium around stock hasn't lost that much.
It's been okay.
Yeah, it's been okay.
Because it's kind of been a slow grind down.
Yeah. Yeah.
Yeah.
One day I want to. If JD gets to as high as Lily.
Can you believe? I can't even.
Now we kid about this, but this is kind of how I got into trading. My name is Liz, obviously. Hi, my name is Liz. My dad bought me Liz Claiborne stock when I was a kid, and now granted, R.I.P. Liz Claiborne. But that was one of the things that I always watched and I always had in my account.
Isn't it so funny? Both of our stocks.
Jones,
are
New
gone.
York.
Yeah, so she had Liz Claiborne stock. My trader badge was JNY, Jones, New York. Both of them.
Which is hilarious that it's two female clothing stores.
I know. So Liz Claiborne, gone. Liz not found at all. Jones, New York.
JNY, not found.
Not found. Gone. We've been canceled.
We gotta take a picture of all of those.
Oh, all right. So I am working that put in JD. I put an offer here, 168 to sell the 25 put way out in the 45 days, but we're just going to get on your premium selling bandwagon because I've just been holding on to some long JD. Not working for me.
It doesn't. You have to bob and weave. He's a wily little fellow.
Selling premium, I'll tell you, I like to sell premium against things, but I've been trying to sell premium around my IBIT. Now with the move we've had, it's getting close. I'm short the 43 calls against my IBIT. It's getting close. Not all of it, but enough to, where you do get annoyed. You do get annoyed when you sell calls against something and then goes through it.
No, you do, and I get
like my coin calls. Nothing's going to be madder than my coin calls.
And as your trading buddy, I apologize about that. But look at this. We can ratchet.
Oh. Good news. Good news. All right, before we do that, I'm just going to make sure
that we get to all about.
Was there anything?
That's tomorrow. Those are Marvel and Costco. I will be looking at those tomorrow.
Yeah, I don't know.
And then let's go to Punish Pixels, and then let's ratchet our IBIT.
Punish Pixels is working on something cool for my personal use, a trading bot.
Ooh.
But if it works, I might be able to roll out to the Tasty Live audience, so that's cool.
Punish Pixels, hardest working man at midnight.
Yes.
He's in Singapore, so we know he's our midnight put seller.
Oh, and look at Jack Tucker. Now he's gone from SPX to CL. So in CL, what's he doing? 67, 57, 95, 100, and it's the 43-day.
95, 100, so $5 wide on the top and $10 wide on the bottom. Let's take a look at this.
95, 100, 67, 57.
I'll pull it up so we can look at the strikes.
In CL options.
So CL, yep.
And it was what cycle?
Hold on.
43 day.
So 43 day, April 16th. And it was the 95 100 call. I want to see what you're getting for that. Put that one in first. 95 100.
It's so far.
I know. That's why I want to see what you're getting.
Whoever thought we'd be talking oil 100 again?
Oh, it's been very topical. Yes, the last 2 days, oil 100. So that's why I want to make sure you're getting only 50 cents.
$480.
Yeah, I'm just talking. It's got a different multiplier.
So you can see max loss here 4,500. So this is a big dog. So the that $10 wide is going to be like a $10,000 wide.
But I wanted to make sure you were getting enough for the call spread because the $10 wide put spread.
67, 57.
57.
But we're going to have to. So that is.
Can you do me a favor?
We're getting $3,390.
Yeah, go to the active view because this is Jade Lizard-esque because you're almost covering the width of the. You're getting $335 on a $5 wide. That's the easiest way for me to do it. I understand it's $5,000 wide, but you're getting $335 on a $5 wide.
Okay, so I'm gonna have to.
Yeah, use that. Go up there, yeah.
Because this is wide, so where this arrow is, that's where oil's trading.
Yep.
And you can see our risk to the downside is 6,620.
Yes.
That's that expiration if it's down below this 64 level. And honestly, that's not bad.
Because you
That's not bad. That's not bad.
Because you have a $10 wide put spread and you're taking in I'm taking it down to our nuggets. You have a $10 wide put spread and you're taking in 337. So the inverse of that, which would be 6 something is what you can lose there.
If someone wanted to make this on a smaller scale,
can you just show the upside though? Go all the way up because you didn't cover the width of the call spread
He's
either.
all the way at this 100,
yes.
and your risk to the upside is 1,600, where your risk to the downside
is more.
Is much bigger. So you've got 6,600 in risk that's to the downside, upside 1,600. But I like the collection. I like this $3,370.
The other thing I like is span margining because you're only putting up
2,700.
Now I do thoroughly enjoy good span margining.
I like this. I like it. But I think for our show account,
let's use MCL.
The 6,000 is too much. it's too much for us. So we'll just go to MCL, but I like it, Jack. I think I'm going to put that in my account when the show is over.
Jack Tucker is
43-day.
You can use the exact same strikes. So you're going to go
and it's going to be a tenth of the size. So
yeah, you're going to go 95, 100. And this is going to be dollar to dollar, not so 95, 100. You should be getting 50 cents for it.
Yes.
Yeah, right there.
And then we go to the 67.57.
67.57.
67.
Look at that.
57. So many strikes.
Whoa.
Okay, so we're same thing. We're
exactly
$336, risking $665. It's 1/10 the size.
Take everything and cut it in a tenth. Yeah.
So we'll do this small scale trade. I like, I think they're high pop trades. It's not giving me a P50.
I think it's kind of confused with the MCLs.
These, with the futures.
I will tell you, look at the open interest in this. It's they are tight markets. MCL, it's okay. It's not the most liquid of products, but we're fine.
That's all this has to do.
That's all you have to do. Say it's not the most liquid of products.
Yeah, we just got in and out of the buffer.
We did, but if you look at the open interest in the options in CL versus MCL, people are trading the big dog.
Well, but look at these strikes. There's so many strikes.
I know, and Jack was sticking with your, and I use round lots, meaning like not the 0.25 and not 0.2 whatever. He stuck with the round lots, which I give you a gold star for, Jack.
Okay, Jack, thank you. You got a gold star. This is coming in from Frank. He's on YouTube. He's manning our YouTube chat. Crowdstrike Q4 adjusted earnings per share 112 versus estimated 110 on revenues 1.31 billion. Thank you very much, Frank, for the earnings news. Outperform. Here we go. You can read it all right here.
I like it.
Thanks, Frank, for sharing that. And Mikey, when we were down yesterday, I bought a call spread in XSP and was able to butterfly it off, lock in a profit. Nice work, Mikey.
Okay, Mikey, do you need the genie blank?
Mikey texted me on my birthday. It was a nice surprise, and he was sending me pictures of his puppies because he still has puppies for sale.
Oh.
Yeah. Yeah, he does.
I can't take it. I can't take any more dogs in my house.
I said I would love one, but I have two right now.
Yeah.
Can't have any more.
Yeah. I've got a small one who thinks he's a big one, and I can't have another one. All right, but let's take care of our IBIT, because I think today's a day when we can take some risk off the table and still keep unlimited profit potential in the IBIT options. Options are fascinating when you learn how to use them.
All right, we have a zero extrinsic back ratio, also known as the zebra, this 2-by-1. When we put this on, our longs were the 70 delta, and our short was the 50 delta. Now our short's the 70 delta.
So what do you do here to keep your profit potential and take some risk off the table? You ratchet it. You close the original trade, put another one on with the existing mechanics, and you will be taking in a credit to do such.
I think I'm going to take off. I might take off this other trade.
Oh, that's a jade. You got to because it's through it.
Yeah, it's through it. I'll take that off, and then we'll be able to really see like what we've made on that zebra, what we're going to get in to move it.
See what you can get for it.
It's probably 80 cents, 90 cents.
Yeah, there you go.
I mean,
well, if you don't take it off now, you're not going to get anything.
Yeah, it's through it. When we do a jade lizard, it blows through it. 90 cents would mean this put spread is still worth a dime. 14 cents. We should be able to get out. Okay, while we have, it's only 10:46. While we're waiting for that to fill, and then I'll get to the zebra, I just want to take a look at P&L open, anything that's a huge percent that we would want to get out of.
So I've been keeping an eye on these with TP. We did quite a few trades while you were gone. Okay. Surprisingly, we traded quite a bit. Scalped a lot of stuff and closed some things.
Okay, good.
So it was, I've been keeping an eye on it. The only thing that I'm looking at is that 57%, which is IBIT. And do we want to do something with Robinhood?
So Robinhood, we made 55% on these puts. Mechanics would be, we close it.
I don't mind being in Robinhood. Would you want to roll it? That Robinhood's been beaten down with all of crypto, though.
I know.
So we could put it all in crypto. In my mind, you don't have to put it in Robinhood if you're putting it in IBIT. I think they're all very
right, and they move together.
That's where I might start.
I know, maybe we just leave them. It's tough, but maybe we leave that. That's Robinhood. Palantir is another one. Our puts are almost at 50%. We sold them for $345. Now they're $187.
I sold that yesterday.
Oh, you sold it yesterday? Well, then let's take it off.
Yeah.
45% overnight? Sure.
Yeah, that was yesterday.
Let's take that off. I'll pay $1.88 for those.
We were looking at the defense. Defense. Give it to me, Johnny Andrews. Defense stocks.
Oh. I didn't know where you were going with that.
She's the old cheerleader, so sometimes I can get her to go defense, defense.
I don't think that
I was not a cheerleader, so this is in my mind. In my mind, what they would do: defense. I was playing basketball.
I think you need the wide shot for the
defense.
Yeah, Liz was more of an athlete. You got it. It was just the,
Oh, you got it.
It was just
like
an L, a simple
it was
L.
like this?
A simple L.
Okay, all right.
Yeah, and I think we were staggered, like defense. Yeah, like I'll go on one, you go on the next. D. Then you go on the next.
Well, I have to go D.
That was our old cheer.
Oh, I got it.
The old defense cheer. But playing defense was selling points in the defense stocks.
Yeah, Palantir was on the list that we were looking at yesterday, so we sold that. I think we should close it.
I want to see.
Let's
go back to the platform. Let's see what they were all doing. What was Lockheed Martin doing?
You know what? Do me a favor. Get off this for a second. Go to your watch list. Go to watch list.
Okay. The watch list.
And then hit it, and then go up to the top. Go all the way down. Defense stocks. We put together a watch list. No, keep going.
Here we go.
We put it together for you yesterday.
Okay. So let's see what they're doing today. Lockheed Martin, Northrop Grumman.
They're giving back a little bit. They were all up. Monday they were all up. Yesterday they kind of maintained.
Mm-hmm. Oh, you know what, Liz? Boeing yesterday. I was on
a Boeing
airplane yesterday. I was on a Boeing airplane yesterday, and exciting stuff happened.
I wish you posted the picture because I thought you had a napkin on your head.
I was on a Southwest flight, and they knew it was my birthday, and I got the crown, the happy birthday song, a goodie bag full of treats that I've never seen before. You know when they're passing food out?
You got special stuff?
There were things in there I've never seen before.
She got the special treatment.
Special treat bag.
She sent me a picture. I thought she had a napkin on her head. I was like, "What are you doing?"
No, it was my birthday bag.
That's cool.
It was so funny. So then the plane's playing Happy Birthday. They're singing Happy Birthday. Then everyone on the plane started jumping in with, "It's our anniversary. It's my birthday next week." So then there's just like, "And happy anniversary to this couple, and happy birthday
next week to Joe."
It was funny. All right, so what other defense plays did you make?
No, that's all we did. We picked PLTR. We went through, because the liquidity of it, we looked at the stars, and we picked the one that had the highest liquidity stars, and it was clearly PLTR. So
all right, we closed that because that's a nice one overnight. Hood, we decided we're going to keep our 37%, $18. What the heck do we have going on in 60?
No, yeah, you will notice that this has now been, we had an upside, I think we placed the upside broken wing butterfly. No, yes, I did. So TP and I placed the call broken wing butterfly on Monday, and we placed the put broken wing butterfly on Tuesday.
Okay, got it.
So now that's just to let you know, that was both placed in.
Got it.
Yeah.
All right, Lumen. 35% in Lumen. We have a big lizard, and we've had it on for 28 days, and it's right exactly where it was when we put this trade on.
This has 16 days left till expiration. I will close that.
Yeah.
That's Theta
Close
Decay.
this, and we can put on.
That's Theta Decay at its finest.
35 rank. Close this, and we can put on.
I do want to make sure we ratchet IBIT.
Yeah. I wanted to get out of that other part. I'll go back to IBIT. I want to get out of. But the Jade Lizard, it's not.
It's not imperative.
It's not imperative, right? So we'll just leave it. We'll leave that. We'll ratchet this. This zebra, you can see, if we paid $390 twice, so we're paying $780 minus $210, so we're looking at $570. We paid $570 for this, and now it's worth $850.
Yeah. So we close that. So by closing the original trade and placing a new one with mechanics, you get to keep your upside profit potential, unlimited upside profit potential for 16 days, and you are taking risk off the table if it plummets back down.
So I'm going to sell at the money.
Yep.
And buy 270 deltas.
Or wash extrinsic value. Yeah, you can go 39.5.
Like I'm getting about $2 here, and then I'm paying about $1 twice there. So we're getting $413 to move it. That's really good. And what did I say? We paid $570.
Yes.
So we're taking $400 in risk out of that trade.
By keeping our profit potential. This is what I think is fascinating when you understand how to use options. Not a trade recommendation, but this is, I think we have the ability to control 100 shares of IBIT. Now the capital required is only about $100.
No, yeah, so it's not bad. So now we have this new zebra, the 39.5, 41.5, and if I go to the trade page, the analysis page, you'll see we still have that 1-for-1 profit potential to the upside. If I take off I'm going to take off this jade lizard.
The 2-day jade lizard.
That way you can see it here on the analysis page. We still have this 1-for-1 to the upside. We'll make, for every dollar up in IBIT, we'll make $100. So IBIT moves with Bitcoin, right? It's up 7.5%. Bitcoin's up 7%.
Yeah. It's
never exactly the same if you look at Bitcoin and IBIT, because Bitcoin closes at a different time. IBIT is the regular market hours.
Correct. So they're the same trade, but the pricing might be a little bit different.
Okay, so that's done. Let's try to get into this JD put. I'm going to lower it.
Yeah, we might as well, just because it's got earnings.
Right. I would like to keep, we closed our out of the money position, so let's get into that put.
And I think we're out of time. We have about 30 seconds left.
Oh.
And I'll push all these through right after the show.
There, so we're filled in JD. So today, we have 2 new trades on, at least.
Yeah.
Today, all symbols. We adjusted JD. We put on that new MCL Iron Condor. Palantir we closed. IBIT we ratcheted, and we're still working the EWY short call, which I didn't mind that.
I don't mind it. Those were wide markets.
So EWY.
And it's gotten well away from us.
Well, it could just be the markets are that wide.
True.
So EWY, where did it go? We are working the 165 call, selling it. And, I mean, the market's 235 at 260. I don't know. We'll wait. We've got that order working. If it fills. If it doesn't, we'll look at it tomorrow, because Liz wanted to wait till tomorrow anyway.
I wanted a day 3.
All right. Liz, it's good to be back.
I'm glad to have you back. I like to have you back. The shows with TP were great. The shows with Bat were great, but I thoroughly enjoy our partnership.
So, Spoo's up.
Almost 60.
Yeah, I didn't miss any. I was gone.
Yeah, it's like you were Rip Van Winkle.
I missed all the excitement.
All right, everybody, good luck with your earnings trades, and remember to trade small, trade often.
Laugh with us, learn with us, and watch the Liz and Jenny show. We'll see you tomorrow. Oh, well, actually, tomorrow we're on the morning show.
Oh.
So tomorrow we will be on bright and early. Nikki's going on vacation. Tony's taking the day off. We'll be on the morning show.
Yes, 7 to 10.
Yes.
If you can't get enough of us, you have 3 more hours.
See you in the morning.
Forbes called us best online for options trading. Investopedia, best for options trading, period. With stockbrokers.com, we're number 1 for options and futures trading. The Motley Fool really likes us. And so does Business Insider. So what else can we say other than boom? Trade like a trader. Tasty Trade. Make your move.
Ready to take your trading skills to the next level? Dive into the world of stocks, options, and futures with Tasty Trade courses. Whether you're a beginner or more advanced trader, our courses can empower you with the knowledge to succeed. Watch as our team in Chicago shows you how to use the Tasty Trade platform and go over the basics of trading. Perhaps you'll learn about a new strategy or a potential product for your portfolio. To find our courses, go to the Manage section of our web platform or head to courses.tastytrade.com. Start taking control of your financial future. Visit our courses today.
Feel like your wardrobe is missing something? Like style, purpose, and maybe a dancing dog? Can I pet that dog? The new Tasty Trade and tastylive web store is now live. New merch, bold designs. Did we mention all net proceeds go to one tail at a time? Invest in the real bull market, dogs. Go to tastytrade.threadless.com. Grab some gear and help some pups. You get merch, they get a home.
We built Tasty Trade's web platform for today's traders. See it, click it, trade it. Drill into data, find opportunity, and track the action with hundreds of indicators. Track your options profit and loss history over time per symbol. Note your progress and plan your tactics with a trading journal. Fund your account and start trading right in the app. The tools, the data, the knowledge. See it, click it, trade it. Join the club. Tasty Trade.
Beat the opening bell. Get trade ideas and market insights before the open. From the creator, Tom Sosnoff, and our chief market strategist, Tom Preston. Every weekday. Sign up at tastylive.com/newsletters.
Got friends? Get $250. We'll give you a bonus for each qualified person you refer to Tasty Trade. So spread the word and earn rewards. Terms and conditions apply.
Got the need for speed? No problem! At Tasty Trade, you can turn smart ideas into real trades with just a few clicks. Wow, that's fast. Tasty Trade, make your move.
Chegou, não quero mais acordar. Como dá pra sonhar o que é impossível saber? Sentir o gosto do sol, andar por cima do céu, fingir que nada mudou depois de ter você. Deixa eu te ligar, me faz apaixonar, não vejo a hora de te encontrar. Deixa eu te ligar, me faz apaixonar, não vejo a hora de te encontrar. Um minuto longe de você, eu já não sei esperar. Madrugada chegou, não quero mais acordar. Madrugada chegou.
What's up, Tasty Nation? Welcome back to the show. This is Options Trading Concepts Live. My name is Mike. I'm here with Jamal. And of course, Glenn Freiberger, as it is Glenn's
Day. And a
right.
pleasant one indeed.
Yeah.
How we doing?
I'd say. Doing good. I was able to walk in the sun this morning on the way to work. I saw a brick on the ground and a car with a big dent in it with a brick imprint. So somebody threw a brick at a car.
You've been talking to who?
Yeah. And I was like, I need to take a picture of this, but I didn't want to take a picture like right there.
Yeah.
Just in case people thought it was me.
Coward.
So I walked away and then zoomed in on my phone and got a little.
Like you were scared of a second brick.
Exactly.
How crazy you got to be to throw a brick at somebody's car? Either you don't have a car, you can't empathize, or you're just kind of crazy.
Well, it has to be an ex. It has to be an ex-boyfriend,
I
girlfriend.
mean, it has to
something.
be. That's like a crime of passion, right? I mean, that's really is.
That is. It's the same as like keying a car.
Yeah.
Like you only do that if you really just
I
despise
mean,
that person.
even then, though, like I wouldn't key the car.
Did it look like?
I mean, man, that's tough.
Yeah, keying the car is malicious.
It's extra.
It's really like.
So it's throwing a brick at a car.
Well, see, that's
it
where
wasn't even the window. It was the side of the door.
That's where I would contend it's a little, did the brick look like it was already on the side of the street? Because then I'd contend, we're sitting here, it's a Tuesday, so I'd say.
I'm going to send this picture to Ryan.
This theory is not, it doesn't have as much merit, but if you woke up to a brick dented car on a Sunday, I'd say there's a 5% chance that some rugrat was just leaving the bars.
Maybe
accidentally.
Kind of like
accidentally.
Kind of like when you see like, have you ever seen those situations where like you get up on a Sunday and like a car has been run into from behind and it's parked on the street? You ever seen those? You never seen those? Oh, those are the worst.
But
it's like
but you're thinking it's
like a car is just parked on the street. Clearly, I mean, honestly, clearly somebody was drunk the night before and they were driving home and they hit it from behind and then just kept rolling.
That
and
sucks.
it clearly was parked on the street and it was just hit from behind or something like that, randomly hit and run when they weren't even there. Hit and run on a parked car is like, that's got to be really frustrating.
Yeah.
I mean, you weren't even driving, you weren't doing nothing. You didn't even know that person. This wasn't even a crime of passion. You just randomly got your car hit by somebody who kept going and didn't even have the courtesy to leave you some kind of note.
Well, all I can say is these are what black swan events are. People.
Yeah.
If you think of life as a probability curve.
As I often do.
Yeah. I always do. That's all it is. Everything's just numbers.
That's all it is.
Yeah. But yeah, if you get a brick thrown at your car, you are way on the tail.
It's true. That is tail risk. Yeah. Yeah. There's nothing you
Tail
can do
risk
to
of
prepare
parking
for
on the
it.
street.
It's true.
Anyways, E-mini's up 60. NASDAQ up 400. Bitcoin. What
It's a party.
day
It's a party.
for Bitcoin.
That's the real story. Bitcoin.
Big rally here, up 5K, above 70,000. ETH above 2,000, seeing a nice rally there. And crude oil kind of flat, chopping around. Still has a nice intraday range, though, if you're trading it at these elevated levels, but nothing too surprising there. Natty gas selling off, which is interesting. And then you've got gold and silver just making some small moves to the upside after yesterday's sell-off.
Bitcoin. So proud of you.
Yeah.
Didn't even get hit too hard.
No.
That was the most resounding thing is yesterday watching, NASDAQ chart and Bitcoin just hanging in there.
Mm-hmm.
Yeah. We're
We're looking like Bitcoin in the 60s, 70s fair level. Nobody's too scared.
Yeah, hodlers couldn't imagine selling at 60.
No. I mean, I was willing to. I was ready for a 5. I was ready for a 4.
Ooh.
Yeah, no, it was looking that way. It was looking pretty ugly. Yeah, I guess there was some discussion about, or somewhat I saw, Trump said something positive about Bitcoin and the Bitcoin bill or whatever, something like along those lines. And it's taken that opportunity to jump here. So strong move. That is definitely the story of the day. I feel like each day we've come in, there's been like a lot of moves, but there's one thing that's been the story of all.
Yeah.
It was oil a couple of days ago. The reversal in gold and silver today. It's Bitcoin.
Dude. Yeah, crazy moves here in the market. We do have some earnings coming up on the horizon over the next couple of days. So we'll be keeping our eyes on that, namely Costco after the market closes tomorrow, and Ulta next week. That's a fun one. Ulta, Oracle next week. But AVGO and Costco are the two that we can focus on this week. AVGO's after the close today. Maybe there's a trade in there.
How in the hell did Ulta become a $600 stock? They
That's
just do makeup,
really,
right?
really good question.
Like that's all they do, right? Just makeup. I'm just trying to get my bearings here.
Yeah, but doesn't Mike look great?
Doesn't who?
Mike looks great.
It's a good point. Yeah.
I see you touch up.
That used to
Little bit
happen.
of blush.
We used to do like little blots, with the little bronzer back in the day. Not anymore.
Dang.
You missed it.
I know. Seriously.
Those are the golden days.
Would have, do the contour.
There you go.
Yeah. Exactly.
Someday, hopefully.
Yeah. If you want to join us on the YouTube channel, we're streaming live there. Just pop over to Tasty Live. You'll see this video streaming front and center. I've got the referral program pinned to the top of the YouTube chat. Click on that. Have a friend come over, deposit $2K. You both get $100.
Yeah.
Sounds
bingo,
good to me.
bingo.
But the FX markets, I finally had the opportunity to close some winning trades here.
Oh, yeah.
Not today, but this week, I did close the dollar-yen position. That was like a $50 winner, I think. And then the euro-dollar, that was a bigger one. That was like a $100 winner, something like that.
Nice.
But seeing the dollar rebound is just music to my eyeballs. It's been quite the painful journey I've been on, specifically with the dollar franc. But we're seeing this thing finally catch a bit after such a long drought.
It was one of the few things that was working for me going back a couple of days. I mean, I mostly had long dollar positions in the Tasty FX while I was losing on all this stuff equity-wise. And so, yeah, you're right. Like, it was nice to be able to close out of some things during that time period. I was short euro dollar. I was, what else did I have? I was long, the dollar yen, that worked out well, and short New Zealand dollar.
There you go. Across the board. Yeah, no, it's been a fun start to the week here to monitor these FX markets in particular. Everything, on these major events moving kind of in tandem. But Jamal, yesterday we were unpacking, some of the nuance between the moving markets, and it is one of those scenarios where you can see, at face value, but then we were talking about, and I talked about on the show yesterday, how this geopolitical risk, bolstering dollar, not only just safe haven, but playing through into inflation expectations and by effect into rate cut odds. Just taking a look at where we're at now, because today we're getting a little bit of reprieve for everyone else that isn't a dollar bull. These markets have been very elastic over the past 2 days. I mean, we had at its max euro dollar down 2% over 2 days, which is a very rare occurrence. Finally giving back some today. Dollar weaker across the board as some of this risk sentiment starts to freshen up a little bit. All markets ripping, but we are still seeing, even though we've seen some give back from the safe haven nature of the U.S. dollar, we're still sitting from a rate cut perspective at no cut in June, maybe in July, but over the past, I'm looking at 1 month, but really you could look at 1 week. We went from near a coin toss from CME pricing, a rate cut in June, to now it's looking closer to 60-40 no cut priced in for June. So that's why if you're looking at, if you're seeing across dollar markets, you're like, okay, if everything's fine, markets are back up, equity markets, that is, why hasn't the U.S. dollar given up all its gains, still holding on to some of those inflation expectations? But, and this is where I find it interesting to look at not only the dollar basket, but the individual pairs itself, as you can actually see that play out when you're looking at the euro dollar, which, dropped nearly 200 pips over 2 days. Now it's back up 40. And you compare that to an Australian dollar, US dollar, where that one is much more tied to risk sentiment. And from a central bank perspective, they're hiking right now. If we stay, it's more of an even playing field than some of these other countries or regions like the Euro area that is expected to stay flat. Here, you're getting a lot more of an elastic move back up over 1% today with some of these equity market turnarounds. So if you're looking for different opportunities, all of these US dollar pairs have slightly different characteristics, which is what I find interesting. But yeah, it looks like everything tested yesterday. Maybe over the long term horizon, this means something different for the euro dollar and the dollar in general. But if I'm looking at this Australian dollar now bouncing pretty firmly off this 70-cent level, we're right back in the middle of the range here. So this looking more like equity markets, like business as usual. We'll see what the rest of the week looks like, though. I don't know. The whole, war, geopolitical conflict, so hard for me to keep up with because as civilians just feel so behind. Like I love how, democratic all the information is now, but that's the one area where I'm like, I can't pretend to know
I'm in the same
what any of the latest headlines might mean, if that's even the truth, etc. But
yeah, I'm in the same camp. I just don't know what to I'm not one who's also just like following and trying to look at like different videos. And I'll be honest with you, it's not the kind of content I really feel like digesting. If I'm being totally honest, I was one of the reasons why I like what we do day in and day out. I like looking at markets, and markets kind of tell me what's what. I feel.
Yeah, I think the biggest impact, and you can see this staying elevated, is the crude oil markets. The equity markets are going to do what they're going to do, but we should expect to see bigger intraday ranges with a higher VIX and uncertainty on the horizon, et cetera, et cetera. So just because everything's green today, or most things are green today, doesn't mean we can't revert back down tomorrow. So just keep that in mind. And volatility staying pretty big here into this rally. We're seeing a slight vol crush, but everything is still above 20, easily above 20. So that is a little ominous to me in terms of expecting future downside moves. Because if we saw this rally today and we saw a big vol crush where everything was back in the teens, I would say I would be surprised to see a bigger downside move. But given everything staying bid here, I think we could see these bigger intraday moves going forward.
I completely agree with you. The fact that you're saying that VIX is 21, they're all still pretty close in price, as you mentioned. Also seeing the 10-year above 4%. Also seeing the dollar still kind of hang out where it is, and oil hanging out where they are. So that being the case, yesterday I did flip a few positions, only a couple. I feel like I am not as long as dollars I was, but I'm also not short it yet neither. I mean, is that kind of how you're viewing this? Because like you said, we don't necessarily know. We're not in the weeds of I'm calling it a conflict, by the way. I don't necessarily know if it's a war until we have boots on the ground.
I know. Yeah, I've heard conflict as
I think
the
it should
headline.
be conflict, right? We can debate over conflict and war, but I think conflict. I mean, it's tax. So nevertheless, besides that, because those things are hanging out where they are, because we're at 68.80, which is really close to 68.50, we're not over 6,900. We've talked about the channel ad nauseum, 6,800 to 7,000 in S&P. Because VIX is still doing where it is, what it's doing, and the futures are doing what they're doing, because 10 years above 4%, does that mean we should kind of expect the dollar to hang out and hang up to some degree, be up?
You're absolutely right that the combination of that yield story and that this isn't expected to go away anytime soon, I think it's still in such a very dynamic landscape, might be the most advantageous to stay relatively flat. and try and capture. I mean, it might even favor more short-term strategies in directional markets rather than getting pinned on, one day or another as they kind of whipsaw back and forth. But you're right that there are not only just this conflict staying present, but multiple factors like the interest rate and inflation expectations that are keeping this dollar bid for now, at least.
With that said, I know you've got some slides for us. Should we hop on the slides, see what's heating up in this dollar world?
Everything's heating up. Dollar volatility heating up as well. Quick little overview from some number crunching I did. If we go straight to the first slide, we can see exactly what I'm talking about. This FX volatility heating up, hitting fresh highs. And this is monthly numbers, right? So just came in numbers from February, and we're ticking upwards in a pretty positive direction. And if you're looking all the way to the left of that graph, wow, that's a big month. That was, of course, the Liberation Day shakeout, April 2025. And so that, if you're contextualizing, was a very elastic time for FX markets, all markets, really. And so now we're at a pretty elevated level, but I will also say that December we had in 2025 was historically very low for these dollar markets. And it kind of fits in with the narrative that, of course, this administration has been a lot more prone to volatility, but we're still in the equity space, very close to all-time highs. And while there's so much action there, you tend to see a little bit less volatility in the currency space if there's less demand for U.S. dollar. U.S. dollar is such a driver in the global landscape for FX markets. So it's no surprise that while a lot of other asset classes, more speculative asset classes, are interesting, that this volatility dips to as low as it has. But this means a lot of different things. So this is kind of the zoomed out view, but want to dive into which pairs are moving the most on the next slide, which gives us a more granular view of things. And this is, what you might expect, but if you aren't tracking individual dollar pairs as closely, this reveals, the very current trends that we've seen not only over the past, couple days, but couple months now, where you're getting the Australian dollar with its correlation to not only U.S. equities, risk sentiment, and metals exposure. That one's been whipping around. And then we have our yen pairs, not only the U.S. dollar, Japanese yen, but pound yen and euro yen, very liquid pairs to trade. Those as well, very volatile as of late with the Japanese new administration and their policy and politics starting to really move that yen that's been pressed at historic lows recently, not only on one occasion, right? Since, the latter half of last year. I think 3 times we've been pressed into, really extreme territory, 30-year lows for that currency. But bouncing off of it, and when it does to a pretty violent degree, as we saw earlier in January, a 3-day shakeout of around 3%. So those are the markets moving the most. Interesting point to call out that this pound dollar has been moving a little bit more than the euro dollar as of late, but both in the same ballpark. And that gets you to the lower end of the range, where you see, not surprising, two very highly correlated currencies in the euro and the pound due to their geographic proximity and economic ties. No surprise that that's a lower volatility option. And U.S. dollar, Canadian dollar, similar dynamic actually when you think about geographic proximity, but that one lower volatility lately, less the eye of Trump, less fixated on tariffs in Canada and with these recent geopolitical conflicts, very removed geographically Canada is. And even though historically you might think Canadian dollar tied to oil prices just because of the percentage of their GDP that relies on oil exports, this recent conflict hasn't really sparked that correlation in a positive way, just because the actual play out, right, isn't purely in price action for oil, but more so about the trickle down effects into what it means for energy prices in the regions more specifically. So that's why you're seeing even that euro dollar move more from the recent headlines than this Canadian dollar. Does anything surprise you from this breakdown?
You?
The pound dollar is interesting. I don't think I've traded that all too recently.
I just did yesterday.
So that one's a pretty interesting one when you're comparing pound dollar and euro dollar for retail traders like us, because you're getting a pretty high correlation between the two. You have seen recently some idiosyncratic risks to the British pound, where you are getting headlines from the UK government, from their economic landscape that's caused some more sensitivity there around budget spending and whatnot. But from a tradable aspect for retail traders here in the US, it's important to note that the margin requirement currently for British pound US dollar is held at 5%, whereas the euro dollar is still at 2%. And so if you're actively trading these markets, while the British pound might be slightly more volatile, the actual exposure you could get if you were, leveraging up to near max, you can capitalize potentially on a lot more moves in that euro dollar just because of how the retail landscape is currently for U.S. clients. Similar dynamic with the yen, but that difference makes it a more tradable asset. But that one, because of its historic volatility, also held at a higher rate at 5%. Just on now.
Does anything surprise me? I would say no. Mostly because, look, I like times like this, and by that I don't necessarily mean like volatility, but truthfully, when it happens, you get to things make more sense, I would say. I mean, there's times where, like, absent of this situation, these things are kind of moving independently. Like you said, a lot of it is based off of policy, and you just can't necessarily depend on what direction things are going to go because of the crazy outperformance by the dollar. You kind of knew exactly what was going to happen, and there was nothing left to the imagination. They made the moves that they made on purpose. And so as a result, like I said yesterday, I mean, I still have a couple of long dollar trades, but two trades in particular that I decided to go short dollar, and we're getting long the euro dollar and long pound dollar. And I only got long like 2 micro lots of pound dollar. But yeah, for that reason, because of the moves that happened, I decided to do that.
Yeah, absolutely. And what I like about this landscape here with dollar volatility picking up, especially how it has, is you're still getting a wide range of movements. You have this euro pound, which has been kept pretty muted because, as I've done on some other, strategy analyses, lower volatility markets can behave differently, may favor mean reversion more than trend following. So still a wide selection of potential opportunities out there and pairs to select from. But just want to wrap it up on the last slide, what this means for traders. A lot of things to consider, but recognizing that it is perhaps a changing environment is the first step, and especially coming off of such muted levels where you would have to, for certain strategies, really tighten up your profit expectations and your potential stop losses. Widening your levels might be something necessary to consider, especially on potential stop losses. This morning's movements across asset classes, especially around the U.S. Open, right? We've seen a few head fakes, which could leave you out of the bigger move, even if you end up being directionally right on the day. Tight stop losses might get dinged during more volatile environments, and you're not able to hold that position. Shortening your time frame, I think, is an interesting one, and kind of speaks to what I was saying earlier about considering staying flat and being more reactive, just because different strategies work for different time horizons and different people. It's all about finding what works for you. But if you are looking for mean reversion in more volatile environments, you might only get a pullback as you expect, and be right away. But trying to hold on for too long, you might be fighting the trend over a longer term horizon. So important to take profits perhaps while you have them, and then sizing down. You guys are familiar with this, no strangers to the tasty mentality of staying small, but it's especially in your portfolio, Mike, just what you've seen, being able to weather the storm and not be out of the game completely keeps you sustainable more than anything else. These are leveraged products that can get out of control pretty quickly, but keeping your trade size small and even respecting a higher volatility environment by lowering your average trade size, even if it is something you are familiar with. If these markets start moving twice as much as they have been over the past few months, then for your trade setups, for your personal analysis, might get very different if you don't size down. So that's what I got for you on respecting the volatility environment FX markets are currently in.
RESPCT.
Before we let you out of here, I don't even know what lunch is today. You know what lunch is today?
Dude, it's Dave's Hot Chicken, and I'm excited.
Okay, so there's some spice to the chicken. How about a spicy pear that's not US dollar, that's not the pound yen?
Is it like a Korean?
else?
Do we have any Korean currencies on the platform?
We do not.
That would
we
be
have,
spicy, wouldn't it?
I mean, we have the Chinese yuan, but that's offshore and has pretty nuanced dynamics with the actual government controls. So that's a harder one to trade. We have Singapore dollar as well in that kind of geographic realm. We, of course, have the Israeli shekel, but that one's been very strong as this conflict has unfolded. Huge gains for the shekel across the euro, the dollar. So this brings out you call for a pair people might not look for, and it's actually a pretty interesting callback to what we've talked about on the show a few weeks ago. If you pull up the US dollar Mexican peso or the US dollar ZAR South African rand, not to say it's playing out exactly how I told you so, because I didn't, personally profit from this, but it is an interesting validation when you're looking at these markets. If you can tighten it up a little bit, what I talked about a few weeks ago, maybe a month ago, was these emerging market currencies and their tendencies, specifically around magnitudes of moves that, directionally as a very risky asset, you can start to get more inflows, and that can lead to a grind higher over time, which we've seen the South African rand appreciating a ton against this US dollar in the past half year, whatever time horizon you want to look at. But when we do get very risk-off moves, the magnitude of those moves can erase, not only 1, 2, 3 day gains, but weeks even at a time. Yesterday alone, we had a 3% snap up in this market, taking us all the way back to where we started the year. So just an interesting dynamic when trading some of these emerging market currencies, that the safe haven aspect can be very much exaggerated in these markets compared to the more liquid major dollar pairs, even though those are still outsized moves as well.
Yeah, the Mexican peso had a huge move yesterday. I did see that.
Yeah, so
so you keep this in your back pocket for like when you see these trends happening, like an emerging market well outside of expectation in terms of returns relative to dollars. That do you start to like layer into positions for the opposite, especially if there's global turmoil?
Right. I mean, you still have to be directionally right. I think, of course, some people were right, some people were wrong. But similarly, waking up on Tuesday morning to a very risk-off move, you already had overnight. If you didn't make that speculation on Monday night, which was a pretty good head fake of markets respecting from Sunday night open, this conflict going on, but then really bidding that up, buying the dip in all markets, you had to expect that things were going to sour further because much of that 3% move was overnight. So it's more similar to other assets than you'd think, even the way I'm talking about it. But yeah, it's definitely one to look for, these emerging market currencies, when you have some potential conflict on the horizon.
0.01 is a micro lot, right?
Correct.
Sold. So I can say one micro lot if I sold 0.01?
You can.
Sold one micro lot of the U.S. Mexican dollar.
Oh yeah. So hoping for a bit more of that retracement.
I didn't do the South African rand. That's a little spicy.
Yeah. That's all right. Whatever you're comfortable with.
Yeah. I like to do 5 micro lot positions. That's what I've been doing this whole time. Actually, I started with 2 and then I moved up to 3 and now I'm sitting at 5. But I've had 5 is a decent number because you can get sizable returns and you can hold through volatility. Most importantly, to Glenn's earlier point. So yeah, all these are losers right now, but I can hold these positions basically forever.
Exactly right, and it wouldn't be ridiculous to, even though this is your average, trade size, if you're trading something like a yen pair or a British pound, to cut that in half because your margin requirement can be double or more than double in some cases. So not as much exposure then, but also not as much keeping your margin requirements flatter more consistent across your portfolio.
Yeah, no, Mike's big dog. I mean, we're not all big dogs like Mike.
He's not a pea shooter.
But I do feel pain. 5 times the amount of pain. Thank you, Glenn.
Oh, thank you guys.
If you want to shoot Glenn a note on Twitter, he's at Glenn Freibarger. And give TastyFX a follow as well.
Do that.
TastyFX.com. You can open an account through the Tasty platform, or you can go to TastyFX.com.
Okay.
But yeah, thank you for the dollar analysis. Enjoy your spicy chicken.
Thank you guys.
Yeah,
We'll see you on the other side.
Yeah.
All right. See
Just
you guys.
because Glenn leaves the show doesn't mean Glenn's day is over, okay, folks? Just so you know.
Just getting started. E-minis up 55, NASDAQ up 390, Bitcoin staying afloat up 5K. You love to see it.
Hanging out here. Yeah.
I unfortunately got filled on a 0-day iron condor yesterday, or
What do you
1
mean?
day.
The next day? Oh, yeah, right.
From yesterday going to today, and then right when I was filled, the market started ripping higher, and now we're up 50 points. But I need a 20-point sell-off through the end of the day, and this will be a full winner. So I'm not closing this. I mean, I'm just going to hold on to this. Someone asked me, what's the advantage of a setup where you're collecting $200? There's no advantage, really. You're going closer to the current price of the product, but if there's a big blowout move to the upside or downside, you're losing less compared to if you had collecting $1 to the risk 4 with wider strikes. Like if you have slightly wider strikes, it doesn't matter if the market's up down 100 points. In this case, we've had 100-point swings from the lows to where we are now. So I would rather collect more, risk less, and have a slightly tighter window, especially when I know if I'm doing this every day. I'll have tons of occurrences, and I'd rather have just more profitability in those scenarios. So
Yeah.
we'll see what happens.
Yeah, everything's kind of hanging out at the same level for the last, I don't know, hour and a half or so. Nothing's really moved much. Bitcoin did touch some highs, touched 74 a little bit earlier in the show, but it's pulled back just a bit here. But yeah, I mean, I don't think this is all over, even though we're getting a move to the upside today. I mean, crude oil is still hanging out at 75. VIX futures are still at 21, and they're all pretty close together, to about 10 to 20 cents apart, which is not much. And 10-year still above 4%. The only other thing I'd probably add to that, what's the dollar doing? The dollar is still at, is it 90? It's basically 99. So I would say just about everything it's off of their highs, not near lows, and still hanging out. I think it's literally just hanging and waiting for the next headline, essentially.
That's what it feels like, for sure. I see you were pretty active after the show yesterday.
Gotta be, bro. Gotta be.
Yeah.
Into the rallies we had.
Yeah.
It's a good point. I'm glad you pulled up the stuff from yesterday, because I'm actually I'm proud of that, because it's my way of trying to manage risk. And so into the rallies that we had, I basically, as we had that rally yesterday, of course it started earlier, but as we started to move a little bit higher, I think we were down we were down 160 at one point, right, to start the day. We're down like 40 or so, 48, 40. I decided I was going to try and get a little short delta, that in case we do fall again, I can sort of have something to do, which is nice. I mean, it's such a nice thing, because I spent yesterday morning trying to find things to do. I didn't have a whole lot to do. And so I liked that ability. I decided to sell call spreads against the upper bound of all of these, basically these indices. And I did it in the form of the ETFs. And so for Qs, it doesn't relate obviously to MNQ, but the upper bound basically is like 25.5. For Qs, it's basically 625. For SPYs, it's a lot easier. It's 700, right? We know that. So I did the 700, 710 call spreads. So I'll try to sell call spreads on all of these. I was able to get like a third of the width of the strikes in just about all of them. IWM is basically 2,700, sold it against 270. Diamonds, I mean, we know 50,000 and the Dow 500 in this is essentially it. So yeah, that was my big trade. And that's why I feel good, like not having to take off a whole lot here where we are, even though we're essentially still in the middle of the range. This morning, I did have a couple of things to take off in the financial space. Put spread, I was able to take that off for 50% gain in Visa. And then Hood, same deal. This short put that I've had on for a while, since these bounced today, was able to take that off.
Love it. Yeah. It's always nice to be able to throw on some layers, especially when we are now in the heat of everything going on, and these products have not had the ability to stay above these levels for any long period of time. So I definitely like layering those in. We both closed our downside butterfly in SPX. I think it's interesting to consider getting back in here. I closed this for $9.10, the 66, 67, 6800, 100-point wide. There's no way it's trading for that anymore. Yeah, right back down to 645. So we initially bought this for like $5,
right? Yeah.
Something like that. Going to 15-day is interesting, because if you do this and you just get right back in, I messed this all up. Let's do similar order swap. Oh, I have this highlighted for some reason.
What's that?
I'm gonna swap this. Or just triple down. Let's just do this. If we set this up again, the 6,600, this again would just wrap around the risk in my other positions. But I think it's an interesting re-add to the portfolio, even at 650, just because, as you saw yesterday, this was trading for $900, and then we had a 100-point rally from when I sold it, basically, and it's trading for $650. So this will be super volatile, but paying $100 more than we normally do, but with way less time, only 2 weeks. If this market continues to be turbulent and we end up around 6,700, this is an absolute home run smash. Like $9,000 and change is max profit on a $6 debit. And if we continue to rally, all these other positions that we've added will benefit, and I'm not too worried about it. So I think I'm just going to get right back into this one because we got the timing right in such a big way. Like when we closed this, we were at 67.84. We are now at 68.71. So almost literally 100 points higher.
Yeah.
When we got out of that. Actually, no, sorry. This is what it was, 67.29. And we are now
I was
at
about to say
68.
you were that because I got out at 67.65.
Yeah. So we're 150 points higher.
Yeah.
Which is absolutely just nuts. So yeah, I'm going to get back into this one. See if we can get filled at 650. Immediately filled. Should never have done it. But no, I like this trade a lot because it's completely wrapped around my risk in these other positions, as you can see. This analysis is based on the March expiration. March 4th is today.
Mm-hmm.
But yeah, if we look at just before the March 20th expiration, this is what we have. Basically flat in between, profit higher with a call spread there, and then this big wide butterfly. So yeah, happy to get back in there. And if we get a sell-off, if we get a sell-off tomorrow of 100 points, we could probably close that for $9 again and just keep rinsing, repeating.
I like it.
But yeah.
I'm going to wait just because, again, I sold those call spreads yesterday, but
Yeah.
I like the idea. If we go higher, if we're like somehow 69.50, I get interested and I'd probably get in. But I think the key to this is, like you said, I don't know if people know how long we are. I mean, we got like all these different long deltas. So that's what makes it easier to do it.
Yeah, you can see basically this whole portfolio is up pretty substantially into this market move higher.
Have I said how much I love this SLV position? I love this SLV position.
It is nice.
I think it's so nice.
It's funny. It's not funny, but actually, I guess it is funny. We're 12 points in the money, and we're basically flat on this position. Just goes to show how much premium we've collected along the way here.
Mm-hmm.
But yeah, it's a beautiful position because it's silver at the end of the day. Yes, it's been volatile. It'll continue to be volatile, but it's not every day where you can sell strangles in SLV with a 90% implied volatility. Pretty wild. Super liquid markets. That's the environment I want to be in. We want to be in.
I hope it keeps doing this. I mean, I would love to be able to put on a short May position at some point too. Once April gets a little closer to 21 days, I would love to keep this going.
Yeah, you can see here just by the quick roll in the positions tab. Nice feature here. Just rolling the same strikes out to the next expiration, you're looking at $4 credit, which is crazy. That would bring us to almost $2,000 on a $75 product in premium collected. Just wild. Let's look at the YouTube chat, see if anyone's got some trade ideas here. Any trade ideas on Affirm? Do they have earnings?
AFRM? Oh gosh, I haven't looked at this name in a while. I assume Vol's high.
Yeah, Vol's decent, 75%. 26 Ivy rank, but Ivy rank doesn't really mean much to me if Vol's at 70%. You can do whatever you want to do because this Vol is where you're getting your premium from at the end of the day. But yeah, if you want to play it to the upside, given the chart, if you're just looking for a bounce here and we found a potential bottom here at 50, I like the idea of going like May, April or May, March and just setting up a traditional diagonal spread. Long the 50, short the 60, long May, short April, $5 for a 10-point wide. Cookie cutter setup where you're paying about half the width of your max profit. In March, you can get a similar setup. You're not collecting nearly as much on the short option. So yeah, that's what I would be looking for, especially in a product that's gone from 80 down to 50 in just this year. I would stay defined risk in here, personally.
Sure. For sure.
But yeah, nice to see a rally here. NBIS short strangle 75-130. Nebius Group.
Nebius.
44 days 75-130.
Sounds good. Imagine it's not. Oh, that's not bad at all.
Yeah, it's not too bad.
That must mean it's going to rip your face off.
Yeah, markets are okay. I mean, 20 cents wide isn't terrible, but you only have 2 strikes, so that makes a big difference. If this was an iron condor or something, the markets wouldn't be good enough to do it for me. But yeah, if you're willing to take the risk here, $900 buying power.
Feels like March is higher than April.
Yeah,
like something going on.
Decent vol in March. Maybe there's some kind of announcement.
Right. That's what I would think. Just be careful with that.
Yeah. It's an AI Amsterdam.
You don't see that as much. That used to be such a regular thing to see in options markets. Something like that where, the near term had some event and it wasn't earnings. And then the next term is like a little lower, and you would see this all the time. You don't see it as much.
Yeah.
In a way, I kind of like the idea of seeing this because, again, all the news is just known these days. You really don't see this as much, but that to me says there's an event.
Yeah, that's a good call out for like biotech stocks. Like if you ever see a big implied volatility and expected move in some cycle without earnings, it has to be some trial or something along those lines.
Oh my God, the food smell is seeping in here. You smell it, right?
I do.
Oh my God.
I do smell the chicken. I am ravenous.
Yeah.
Microsoft's starting to wake up.
Yes, sir.
Mm-hmm. Yeah, we love to see it. Finally, I mean, this is really nice to see, but this is like the trade of the year, I think, for me.
I agree. I'm not coming off this yet. I think it's going to run into some resistance probably at 4. I don't know. We'll see. But that's why I went with May. I thought May was a good idea because it gives you a little time. And again, we just remarked on how much this one was down and this was the one. So we got time and we don't have to worry about anything for a while.
Yeah, I like this trade a lot because we collected a credit here, 70 cents in this neutral zone. So it's still profitable if everything expires worthless, but big profit potential if you get the continuation above 440. This is a 10-point wide put spread to finance a 15-point wide call spread. So you have a big delta adjustment here if you continue to get the rally because your premium from the short put finances the call spread that's 15 points wide. So you're never going to set up a 10-point wide put spread where you can make $1,500. It just doesn't make sense.
Yeah.
Unless you're legging into it or something like that. But yeah, love to see it. And yeah, May is a long period of time and we really don't need that much. 440, if you look at a chart, is not even halfway through this level that we've dropped from. If we look at the highs here, above 500. So plenty of opportunity there. And yeah, Microsoft was one of the worst beaten up Mag 7 stocks. So we will jump all over that in a responsible risk-defined way, or undefined risk if your account size can handle it. But yeah.
Yeah, if the software, is getting eaten by AI news cycle is over, then there's nothing standing in the way of this heading higher.
Indeed. Shop call diagonal. Let's take a look here. Shop call diagonal, long the 130 April, short the 150 March. Okay. Question is, I can roll the 150 to a weekly expiration for a credit. Would you do this or just peel the 150 off? So the 150 into this rally, moving a little bit, but not too much. Only 70 cents relative to your $1,000 in the 130. So I assume you're trying to move this 1 week out or 2 weeks out. I wouldn't move it too much further than that. If you go to the April 10th or April 17th, you basically just verticalize this thing and it kills the speed of this trade if shop continues to rally. But yeah, you can pick up 70 cents by rolling out a week into this rally. And I wouldn't go, again, further than April 2nd to just give some space between these options. And even if you go here, like you could move this up to the 155 or even the 160 and do it for a scratch. But if you're trying to pick up some premium, yeah, I don't mind going to the same strike.
This one got caught up in some of the software stuff too.
Yeah, indeed. But yeah, if you're trying to emphasize this kind of position, don't mind going out 1 week or 2 weeks, but same strike 1 week out, or if you want to move it higher, going 2 weeks out, I wouldn't go any further than that.
This is a good strangle actually in April. Would love to put it on, but I'm actually trying to be responsible today and take things off.
Yeah.
So I'm not going to add.
Okta calendar spread for earnings.
Wow. Where do you guys find these names?
Okta. Can't say I've ever traded this, but let's look at these markets.
I'm aware of it. I just never trade it. Every time I see the name, it makes me think of okra.
Yeah. Same. I thought it was Akla.
Yeah.
But it's neither here nor there. 74.78. Yeah. So a short-term diagonal spread, long March 13th, short March 6th. You can see there's not too much difference in implied move here. We just have to go through the motions here. Look at these back month expirations. You're looking at low 60s, high 50s. I would expect all of these expirations to go to, let's say, 55. Let's just assume there's a 5% collapse in these longer dated ones, but we're going to have to really crush this long option here. So if we do that, curve analysis, and we look at the Theo zones here for curve analysis, let's evaluate on the 6th. So we will go to expiration, but then we have to crush this option. Let's bring this down to 55. There you go. So a 40% vol crush in the long option, and we're evaluating at the expiration of your short, so you don't have to do anything there. This is your profit potential here. So $200, best case scenario, if you get a rally and there's a 40% vol crush. So risk one to make one, feels like. That's it. Thanks for tuning in. If you got any further questions, you can find us on Twitter. I'm at Trader Mikey B. Jamal's at Jamal Chandler, and Glenn is at Glenn Freiberg if you want to give him a follow as well. TastyFX, you can give them a follow too, or just head to tastyfx.com. Check out everything they've got to offer. But we've got plenty more content coming your way on the YouTube channel as well as tastylive.com. So stay tuned, and we'll see you same time, same place, live from the SIBO floor tomorrow. We'll see you then. Peace.
Your crypto needs a wallet, and crypto is better when it's tasty. You can now do more with your digital currencies with the Tasty Crypto app. We're proud to offer a self-custody wallet for Bitcoin, Ethereum, and Polygon. Transfer your digital tokens directly in-app and access thousands of tokens available only on-chain. Your wallet is your key to decentralized finance. Download the Tasty Crypto app and get started today.
Delta, Vega, Gamma, Theta. It's all Greek to you. Well, guess what? Millions of people speak Greek, so you've got no excuse. Here's your alphabet. Theta is time decay. Time itself has value in the options world, and that value slips away the closer you get to expiration. Theta is how fast that happens. Tick-tock, time value drops. Delta is difference. How much does a $1 move in the underlying affect the price of the option? Long options have a positive delta because their value moves with the stock. And short options have a negative delta because their value moves opposite the stock. Gamma is get up and go. It's how fast delta changes. Gamma increases when the options start trading much more like the stock. Like the closer to the at the money and the last few days till expiration. Vega is not a Greek letter, but it does start with a V, and so does volatility. Vega measures how much the options price is affected by the changes in volatility. Now you know your alpha, beta, gammas. Well, gamma anyway. Pretty simple.
The market doesn't stop. So why should you? Diversify your portfolio with stocks, options, futures, crypto, and more from Tasty Trade. Focus on the markets that matter to you. See the odds before you trade using curve analysis, IV rank, and more tools. Get industry insights that help you find your next trade right where you need it. Tasty Trade. Download today.
Grow a strong community with Tasty Trade's referral program. When your friend joins Tasty Trade, you'll both receive $100. As your community grows, you get more bonuses. Only at Tasty Trade.
There's a beast in the financial world, and it's not the bull. If that's you, join us on Tasty Trade. Genius loves company.
Madrugada chegou. Madrugada, madrugada, madrugada chegou. Madrugada, madrugada, madrugada chegou. Não quero mais, não quero mais, não quero mais. Não quero mais acordar, não quero mais. Não quero mais. Madrugada chegou. Madrugada chegou. Madrugada. Não quero mais, não quero mais, não quero mais.
I gotta play it cool, you gotta look right. I gotta keep it smooth, you gonna want it right. They gonna bring it down, I gotta feel good. You wanna see my moves, let's party all night. We gonna build it up, and then we tear it down. They gonna know our name all over this town. We gonna stir it up, and do things our way. So if
What is going on, everybody? Happy Wednesday and welcome back to Risk and Reward. The market cares not for frivolous things such as war. Crypto is going to the moon. Bitcoin to 1 million. And I'm joined as always by my wonderful co-host Errol. Errol, how we feeling? What's going on?
Doing well, brother. Dip? What dip? I don't know what dip. I don't know what you're talking about. Never heard of her. Yeah.
Like chips and dip.
Chips and dip. Yeah. Nvidia chips.
We talking Buffalo Ranch dip.
Whatever we want to talk. Nvidia. I mean, chips. This, chips that. The dip. Too much tip on our dip here, I guess. No. But with that being said, a lot of volatility in the market here. A lot more headlines popping out. I know we just got the war headlines going left and right, like it's nobody's business. Excuse me. All these war headlines, like it's nobody's business, and it just seems like it continues to pump the entire market. I know one of the posts that I keep seeing on all my timelines is the submarine shooting down the Iranian warship in the international waters.
Yes.
So it's just crazy to see, like, things feel like they're kind of
pops out of the water.
Yeah, that was wild.
Yeah.
I legitimately thought that was like a Modern Warfare 2 like kill cam. Not even joking. That looks exactly like it. But no, with that being said, it seems like some of those things are escalating in the background. A little bit quieter here. So it just it has my eyes on metals a little bit more here too. But a lot of headlines, a lot of craziness to catch up on.
Yeah. Jared, getting out ahead of me here. Look at our ETHA leaps. ETHA and Netflix got me eating steak this week. That's right. Very well put, Jared. We can go ahead and jump into the Tasty Trade platform here. We got a whole lot of winners to look at going on in the portfolio today.
Go.
Yes, ETHA, as we discussed. I brilliantly timed this. I almost didn't put it on yesterday and then decided to just go ahead and go for it. At the chat convinced me, so thank you, everybody. But yeah, ETHA taking a nice little jump along with IBIT, deeply long IBIT, as we've discussed. Long way to go because I've been legging in on the way down. You can see we have a nice set of stairs on these positions here. But everything green today as Bitcoin rallies a little bit. I also got long MicroStrategy amid the crypto frenzy. So a long way to go on those as well. But happy to see everything finally moving in the right direction. Hoping this isn't a dead cat bounce. Hoping this is a what's the opposite we decided?
What was it?
It's obviously an alive cat.
Dolphin dive.
The dolphin. No, dolphin dive Is that the opposite?
It might have been. I don't think it's the opposite.
That implies down.
It does imply down.
It has to be an alive cat, something.
Okay. Something that a melt up, something
an alive cat in the air, and an alive cat flying.
We'll coin something.
I don't know. We'll figure it out.
Yeah.
We'll workshop that. If anybody has any suggestions, feel free to let us know. Someone in the chat talked to you at the ether leave clears throat. Yes, Jared was definitely the primary
suspect.
Yes, the primary factor in getting me to move on that. So shout out to Jared. Shout out to the state of Iowa, man. Go to Iowa.
All right.
Go
to
Iowa.
Now we're going
something.
a little too far. Shout out to Jared. Now we're going too far. No, I'm just fine.
But that's that's what we have going on in the crypto realm there in the portfolio.
So when I first pulled up this morning, the first thing Kai says, "Have you seen crypto?" I said, "No, not really. Crypto's not necessarily one that I check." And he had just pointed out it was above 70. So I guess there's a lot of eyes on it.
Yes.
So shout out to the crypto.
Finally got the break over 70. We tested that 70 level so many times. Finally getting the run here. It seems to be something of a sustained run. Like I said, we could just as easily dead cat bounce and test these lows again. But I'm hoping that we will at least establish 70 as a support now and begin some new levels as we begin to move legs up. Super cat, salmon ladder.
I like both of those. Not the salmon. The salmon ladder is kind of weird. I don't know. That's kind of weird, Barton. The salmon ladder, that's weird.
No, the salmon ladder, it's a real thing.
Okay, I'm mistaken. What's a salmon ladder?
Well, a salmon ladder is like, it's a thing. It's like it's like when you've ever seen a picture or a video of a bear like standing over a creek and the salmon are jumping out and the bear is like catching the salmon.
Yes.
Salmon ladder. I'm not a big nature guy. Something to do with breeding. As they breed, they swim upstream or something and they pop out of the water.
Okay.
So that's a salmon ladder. So they are jumping.
Reference makes sense.
Jumping
directionally.
Salmon. Yes, directionally makes sense.
I do like the one from Tasty right here. The live dog jump, that was kind of funny.
Live dog jump.
That was pretty funny.
Okay, I'm with that.
Salmon ladder is kind of...
But is a jump the same as a bounce? You know, a jump you got to come down. I'm looking for something like a launch, like the live dog launch, perhaps.
There you go.
Is more accurate. We could call it a roaring kitty as a nod to our boy from the GME days. I'm with that. Roaring kitty rally. Okay, maybe going a little too far there. I feel like we're pushing things into being meme stocks that I don't want to be meme stocks with throwing around those names. But crypto absolutely flying. But not the king of the port today. The king of the port for me today is Meta.
Let's go.
Which is logging another good day. Meta, we've talked a lot about just the moves that this thing makes. When Meta moves, it moves aggressively. And so we're getting another one of those upside moves today, starting to give some of the gains back. But nice 2% day that we're logging there on Meta. Meta is one of the things that I'm equally long as I am IBIT. IBIT, obviously, all nakeds. Meta, I have a ladder going on here. As we discuss salmon ladders, we can talk Meta ladders.
Meta ladders.
At 640, 650, 710, 715, 820, 830. You can see the days to expiration there, 44, 106, 653 on those 850s, giving it plenty of time. But yeah, we just, pretty much what I led with. It's the market does not seem to care about uncertainty, does not seem to care about turmoil in the Middle East, about this war. I know that oil is logging its first. Oh, well, I guess we flip back to green now. Opened down. It was beginning to log one of its first real red days since the start of this conflict. But I suppose we are pushing a little bit higher on that. And then VIX still elevated, still hanging over 20, but has collapsed pretty aggressively from the levels that we closed yesterday at, down to this 20 level. No sustained VIX pressure. It looks like we might just be getting another one of these, man.
I'm hoping that. I'm really hoping that at least where VIX is sitting right now is our new. That makes sense. I hope that's our new norm. I'm sorry, our new norm. Even though we didn't see a continued expansion in volatility, I'll take what we can get.
Yes, I see Crowdstrike being mentioned. Yes, Crowdstrike had reported earnings. It's moving. Not moving at all, and earnings report has bothered me. Yeah, it's moving. We're over 400 on Crowdstrike. This isn't one that I've dabbled in a little while, but it's kind of an attractive buy spot here. I don't know if I want to get involved with how elevated these premiums are. I wish I had noticed this a few days ago amid this sell-off. What was the thing that I put on yesterday? Broadcom, I think I threw on yesterday on air. Am I mistaken?
Broads of the com.
I definitely have some Broadcom. I don't know if this is what I threw on yesterday or not. Let's check the activity tab. Ah, yes, Philip Morris. Are we still dying? I haven't even thought about this. No, we are up. So happy.
We are so up.
Happy to see that. Looks like I might have perfectly caught the very bottom there on Philip Morris. So hopefully a rise to the upside. Just needed over 180. That's a pretty generous range. Sometimes you can catch a falling knife. You just got to grab it by the handle.
We always leave that last part out. Just grab it by the handle.
Just don't catch it by the blade. That's the whole point. Don't try to catch it with your foot either. That's really how you get in some danger. You got to reach down there and grab that thing by the blade. Other movers in the portfolio, Netflix, as Jared alluded to, just keeps on chugging. We are pushing for the 100 level on Netflix. I'm hoping that there's no psychological resistance there. I don't know why there would be. We've obviously hung over the 100 level for a long time. Coming out of the doldrums now, I don't see why there would be any tangible resistance at that level, but you never know. And then Paramount moving right along with it, logging a green day, even though it did give some of the gains back, has not been quite as parabolic as Netflix. CoreWeave, another winner in the portfolio for me, at least on the day here. Still needed over 85 in the next 44 days, but happy to see CoreWeave taking a rally off the lows. This hurt a lot, so it's always good when we can start to right the ship a little bit.
Here we go.
And then what I got down here in the losers column. KMB, is this what was this, Keller Williams or something? I don't even remember. Kimberly Clark. There you go.
What is that? Yes. That sounds like a department store. What is that?
I don't know what this
Sounds
is.
like
This is another one of those positions that I just threw on when I saw this gap down. I was like, man, this has to be too much.
Valid.
Got involved in some KMB. Turns out it might have been the right amount. We'll see. We're down, just a little bit on those right now, but still plenty of time on these contracts. 160 TE and just needed over 115, which is very reasonable. Just right here, looking for the gap fill. So hopefully we'll get it. Hopefully this is a stairs up situation. But yeah, that's pretty much the synopsis for me today. Have been thinking about getting involved with Crowdstrike. Not too sure if I'm going to pull the trigger on that one yet. I don't know, just flying. I don't know if this is a move I necessarily want to step in front of. Seems logical that we could maybe get a better entry a couple days from now before moving towards higher highs. But I don't know, holding off on that.
I hear you.
Another day of booze and sig stocks. Yes, we didn't get enough time to talk booze stocks yesterday. Let's look at some beer. We got STZ trading down. We talked TAP, Morrison Coors, hurting a little bit. Are the booze stocks just down today? What else? Anheuser-Busch, which is Bud, of course, hurting. Yeah, bad day to be a beer company. Good day to be a tobacco company. So. Contango, if you will.
When those companies are in backwardations, you should be scared. No, I'm just kidding. That's hilarious. Wars have to be declared. Conflicts avoid the legal part.
I suppose that's true.
That's true. From what I've seen in the past, yeah. From what I've seen, and especially from our administration, it's typically make the decision and then argue in the courts later. And it seems to now be strategic, especially even looking at the submarine. Shooting down the warship, I was like, oh, this seems to be a pattern. I think it's like act now, do whatever you want to do, and then go back and argue if it was legal or not, and try and ask for permission. It does seem like that's
who cares what some people in Switzerland said 70 years ago, man. We care not for such things. Okay, shoot the missiles. All right, forgiveness, not permission, is the phrase of the year.
Yeah.
I think it could be a live dog splat. Well, splat implies down. I'm looking for something up. We're getting
live dog splat. That's like on the way down, right? If the dog didn't catch any cushion on the way down.
KMB is a janitorial supply. Lots of toilet paper and toilet paper dispensers.
Okay, that sounds like it kind of sounds like the ballpark of companies I would think, like KMB or like a little products like toilets, something like so.
Kimberly Clark, I could see that.
In
a public bathroom somewhere.
I could see it.
Got the rolls of toilet paper.
I think it's because it's that one baby brand. What is it? You know what I'm talking about? Very popular. And was it Johnson & Johnson?
Well, Johnson & Johnson is a baby brand.
Is a baby brand. But there was another brand where I was like, I had no idea you guys developed these type of products either. You guys are so known for this. So whenever I see a name, I'm like, I don't know what you guys have. You guys could have, again, with Kanye, what does Lady Gaga know about selling cameras? You know what I'm saying?
It's true. It's the Yamaha pianos and motorcycles situation.
Exactly.
Like, how did we begin manufacturing these two things?
100%.
As a millennial, this is the 14th once-in-a-lifetime event we're trying to live through at this point. It's true, and I mean, and the thing is, like, especially in a broader context and in a long-term investing, retirement investing sort of context, the time in the market greater than timing the market thing is just so true. We're going to see 50 wars in the next 30 years, and trying to pick the best entries throughout all those conflicts doesn't matter. Things just keep on chugging.
Michael Burry would like to have a word.
The broader market. But yes, I don't know who mentioned the thinking about the 6850 JT. Maybe it was you. Was thinking about the 6850 Iron Condors on SPX yesterday. But if you threw on some of those Iron Condors centered around that, we've plinked right back into the middle of that range. Obviously not right smack on 6850, but you'd be sitting pretty. But But yeah, that's pretty much all the excitement on my side today. Just kind of crypto leading the charge, Netflix continuing to work upward, and yeah, Meta logging a good day. Just hoping it can string together a few in a row because Meta kind of low key starting to do the Rivian thing to me, where we get these giant pops and then just immediately give it right back. Speaking of Rivian, where's that? Which side of the portfolio does that find itself on today?
Yeah, what have these EVs been up to lately?
Where is it?
The
bad
EV
one.
space been a little quiet.
The bad side is the answer to that
The
question.
dark side. The good guys, the bad
That's right.
guys.
It's the loading phase. This is what Rivian does. Sometime in the next 4 weeks, Rivian will say something and it will go to 20. And if you're smart, you will get out. I am not smart. I will keep holding until all of these are in the money and it's over 25, over 30, that is. So we'll see what comes of that. But yeah, that's pretty much the synopsis for me. You got any action going on over there?
Nothing as exciting, but we can jump over here to this Tasty Trade platform. Nothing as exciting. I've been trying to get out of this semiconductor. I don't even want to get out of it now. I'm going to give it a little bit more time. But yesterday it was so difficult to catch a fill on the semiconductors over here. So we kind of gave back about half of our profit already. You can see the recovery it's been making over the last 24 hours. So we're going to try and get a fill over there. But now, I'm going to give it a little bit more time to the downside since we still have 16 days. The contracts are still sitting out of the money. So give that one a little bit more time. SLV, we had trimmed down some of the long deltas on some of the metals just because of all the uncertainty. I didn't even feel confident enough to have too much long deltas, so I switched to a defined risk. Short calls getting tested right now, so it's just a matter of being patient. I think silver and gold will recover a little bit more. I mean, this gold position this one expires in about 5 days, but I don't know, again, especially seeing that submarine and seeing a lot of these things feeling like they could escalate in the background made me feel a little bit more comfortable, at least to hold, just a little bit of a handful of these long deltas in the metals. So that's the approach there. And then last night, we traded a little bit of the micro NASDAQ. We were able to catch a couple shorts to the downside. I mean, the market's been so volatile. I don't know if anybody's been looking at the market during the Asia session. But if you're, looking at these levels of value, we tend to get some pretty good responsiveness off of these levels. And just taking a look at them last night, without much of an intention to trade necessarily, sometimes it'll give you an opportunity as you kind of observe. So a lot of volatility in the Asia session. I don't know if the rumors of war and the escalation of war is creating more volatility in the Asia session. I don't know, but it's been offering some directional moves. And a little bit more directional sometimes than, it's felt like the New York session has been offering us. Granted, today we've been ripping to the upside in one direction all day as we look to try and make a new day high here. But that's what we got in the portfolio. We also have this QQQ call spread. It's an out-of-the-money call spread that we sold. Still sitting out of the money despite this massive rally we've seen all day since the market has opened. And I'm comfortable with the short delta in the QQQ. At first, I felt a little bit... I felt some type of way not having even more short delta on, but whenever the market shows the power of reversals like it can do in the last 24 to 48 hours, I'm comfortable with what we have on in QQQ. So we're going to give that more time to cook, 16 days left till expiration. And I feel very balanced right now. I feel very comfortable. I don't feel too over-leveraged in the metals. I don't feel too over-leveraged in the indices or the semiconductors or whatever it might be. So it's been calm. It's been good though, but it's been calm and just looking out for these headlines. So with that being said,
something's just come across my desk over here.
That?
Actually, we can talk about. I'm going to throw in a position here if we want to jump back over to my platform.
Yeah, absolutely.
This is Alight Incorporated, ALIT is the ticker. Caught my eye over here on the fast movers watch list due to the low price and the change that we're seeing today, up about 6% today. I think that this could be another Resolute. For those unaware, Resolute here is a biotech company that I got involved with some months ago. Down here, 129 is my spot on some shares. I also picked up some call options at that price. It's been a decisive winner. I picked up 150 shares initially. I've since legged out of 100 of them. Continuing to hold these 10 calls, which I only have one left. I believe I had 5 initially. I've been taking some profits there. But this was one that just took this giant gap down. They had a bad lab result, fell from 11 all the way down to $1. And this was one where I said, are they going bankrupt? No, they're not. I'm going to get involved. I've just stumbled across this Alight in the fast movers list, and this seems to be a very similar situation to me as I sit here and look at this. I've just done 5 seconds of research, which is plenty of due diligence, in my opinion, on whether they're going bankrupt. They are not. This stock has been as high as $9 in the last couple of years here. Late 2024, peaked at $9. We're now down under $1. This is a HR payroll benefits company for businesses. Seems like we might have found a bottom, especially after this gap down. I'm liking the look of this gap fill here. These are insanely cheap. So I'm going to actually just exercise basically the exact same line of logic here. We're going to pick up some shares and we're going to pick up some options. I think I want to load. These are incredibly cheap. Let's think here. I think I want to pick up 100 shares, so that's basically $100 cost basis. I don't want to be too long into this, but I guess I'm willing to pick up another $100 worth of these. So let's see if we can get a fill on 12 of these 5 calls. This is 317-day leaps at the 5 strike on a light. We're going to fire that off. While we wait for a fill there, also just going to pick up some shares, just the old-fashioned way, which is something you can you do with these penny stocks a little bit more. 100 of them sounds good to me. And those should go through right away.
Instant
slightly better fill. We're talking thousandths of a cent better, but every thousandth of a cent counts. And then, I might have to push the envelope a little bit to get a fill on these 5s, which is fine. Don't know a whole lot about this company, but they are not going bankrupt. And that's pretty much all I care about when you're talking about a company that has been this high and is now this cheap. Screw it, man. Just slip me. I don't care. Give me the fill. So yeah, that puts us pretty much $200 of cost basis into a light. We'll keep an eye on that one. Obviously looking down right now as I just let myself get a terrible fill, which is always a great idea. But look at that chart. You're telling me that's not attractive when I tell you
it is a good one. I like
company's
that.
Not going bankrupt. So logging a good day today. Hopefully some more good days to come. But I don't see any reason this couldn't chase back down $3 or something like that. Yeah, 74.
IV rank is up there. The volume, 13.5 million shares traded just today alone. So
adds a light to the retirement port based on Gus's 5 seconds of research. Yes, it was very sophisticated research. I Google searched Alight Inc. bankruptcy, and nothing came up, only things about the company as a whole. So we're good. That means we're good, and this thing's going to 100. So,
100.
Always fun to fire on a penny every now and then. I don't really think penny stock trading is a viable way to go about things at large. But with how cheap this is, being able to load some shares, being able to load some calls, and keep our cost basis very low on something with disproportionate upside, I'm happy to get involved with some Alight at this level. So count me in as a fan of Alight. I'm going to start petitioning for us to move our benefits to this company around the office. I'll do some. It's not insider trading per se. It's
look,
insider action.
Yeah, insider action. Look, I get the initial skepticism we might get when we throw this one across the desk. But whenever it returns 100%, 150%, I'm sure everybody will calm their senses.
Of course. I know Grumpy Mike's in Resolute with me. And yeah, Resolute's been a big winner in this regard on basically the same line of logic. So really all I'm doing is just taking the house money I have from Resolute, throwing it into a light over here. When I think of HR payroll, I think Workday Paycor, ADP. My Cincinnati Bengals play in Paycor Stadium, so I'm entirely aware of them. Workday, it's W Day, I believe. Yes. They're kind of down in the dumps here. Seems like it's a good day for HR stocks. What's Paycor? Is it PCOR? That's Procore. Paycor. P-A-Y. Paycom? Are they not publicly traded? I suppose not. How about FIO? Is that a ticker?
FIO.
FIO Pharmaceuticals? Oh, how about this? This is your classic penny stock situation.
I thought we pulled up the VIX for a second. I thought I was looking at the volatility index.
Yeah, pharmaceutical companies, and this is
that's a penny stock for real though.
Yeah,
that is like a classic penny stock looking chart.
Yeah, and this is very typical of these penny pharmaceutical companies. Without knowing anything about this company, I would speculate that each one of these is some kind of successful lab or test result comes through, and everybody gets a little bit excited, or perhaps it's leading up to a test result, and everybody gets a little bit excited, and then the thing goes poorly and it sells back off. But
usually some BS news they drop too.
Yes.
And then usually some BS news get it hyped up. And you'd be surprised. A lot of these smaller cap stocks, they are typically trying to sell shares on the inside to take advantage of their stock price being higher. And it's crazy. Like they take advantage of people, but just seeing the headlines and legitimately using them as liquidity, right? It might sound illegal. I'm not saying it absolutely is illegal. Right? But when you read between the lines, clearly a lot of these companies love doing those things, especially because a lot of the times, like these companies, maybe aren't supposed to be trading at those price levels. So when they are, they take advantage of that for sure.
Yeah.
It's not very often.
Yeah, and this one, to answer the question, not as attractive as Resolute to me just because the levels haven't really been sustained in a long time. I mean, early 2024 is the last time we're actually sustaining these levels. Although as I go further back here, as I go further back here, holy cow, what are we talking about here? How high was this thing? Oh my gosh. we were over $100 at one point. Okay, you know what? Maybe I'm talking myself into this here. Let's go down and down and down. There it is. Yeah, this is interesting. You know what? All right, screw it. No options available. 100 shares, 109 cost, but yeah, why not? Boom. All right, cheapies. This is a penny stock show now, apparently. I'm not endorsing FIO as heavily as I'm endorsing a light there as it's catching a bid. But who knows? If I catch one of those $9 days one of these times,
that's true.
Get the hell out.
What's the account minimum to be able to trade one SPX vertical versus an iron condor? Not exactly sure what the account minimum would be, but just by selling options alone, I do know you need a margin account, and typically with a margin account. Again, anybody correct me if I'm wrong, don't quote me on this, but it's going to be $2,000, $2,500. It's usually in that range that you need for a margin account, typically across brokers across the board for the most part. So
yes. I believe 2,000 as well. That's the number that I was going to say. But the more that you have, the less likely you are to be closed out by our wonderful risk team for taking on, say, I don't know. Let's pick something arbitrary that I definitely haven't heard of happening before. $300,000 of risk in your $5,000 account. Okay, that'll get you closed. Okay, so just be careful about how you go about those things in smaller accounts.
Oh yeah.
But anyway, we got like 2-3 minutes left here. You have any M&Q action you'd like to show off real quick?
I would, but it actually logged me out over here. Going to have to do gateway, whatever.
I see.
We'll look at the entries and exits another time.
I like how the companies have moved away from saying two-factor authentication. Now it's often multi-factor.
Yeah, that's why every time I call it just the 8-way factor.
Yeah, they're
show a little bit of hyperbole in there
whenever any number of levels of authentication.
Yep.
Could be reverse splits also. Yeah, I suppose you're right. Hey, what if I get split all the way down to, if I get split down to 10 shares, it's like then all I needed to do is the goalposts move up a little bit, but the thing's been over $100 before. It's like these things could happen. I don't know. FIO really just getting involved with that one for funsies, but this Alight I like a little more. This one kind of has some promise. This doesn't look as much like a penny stock chart. This looks like a medium float stock that has gotten really walloped and maybe has some potential back to the upside. So we'll let that run a little bit. But yeah, adding some pennies. Pennies are always fun. Look at Plug, new CEO for Plug. Oh yeah, how about that? Yeah, Plug Power, another one of these ones. This was during the quantum materials insanity run-up that we were seeing in all those stocks. I know that this one was one that was widely discussed, but this does seem to be some insane gains, some Netflix price action happening here, if you will.
Just a little bit.
But yeah, I know this has kind of been a darling of the penny stock space. I'd say anything under 5, I'm still calling a penny. But yeah, not like exactly penny stock action we see happening with it. Much more stable, sustained thing going on here. I'll pop over and have a look at ASTS as well as our last one of the day here. Yeah, they're long on another great day here. I was just eyeing this one yesterday and decided I didn't want to get involved at those highs, but I'm wishing that I did at this time. Light your cash on fire. I like it.
Hey, he's somebody that likes to play on words. Look at his username.
Money wandering. That's true. That's good. A real
That's a good one
over here.
That's a good one.
I like to say it can only go down 94 cents. It can only go to 0, but it could go up as high as it wants to. Disproportionate risk. No, that's not a viable strategy. If I could catch a gap fill, I'd be very content. That's pretty much what I'm looking for at this time. So.
Money wandering. That's good.
Yeah, no, it's going to be pretty much all the time we got here. You have any closing remarks?
No, that'll be it on our end. We'll wrap back and see how these indices play out. We should get some directional movements. I'm hoping for the short side, but don't want to step in front of the train. So we'll see whenever that does come. But appreciate you guys taking the time.
Yeah, absolutely. Thanks so much, everybody, for coming to hang out with us. We really appreciate you taking the time out of your day. We never take it for granted. Errol and I will be back here same time, same place, 12 o'clock noon at Central Standard Time tomorrow. Be sure to come hang out. And be sure to stay tuned for Futures Power Hour coming on next. We will see you guys next time.
We wanted to call in because recently some traders may have known there was some crazy activity in the SPX, and for some reason they were stopped out 200 or 300%. And what happened, unbeknownst to us, is the trade desk just emailed us and said these trades have been busted and you're not going to have to pay it. It saved us about $10,000. And then Marty calls us this morning and says, I just want to explain to you guys what a trade bust is. When you really get down into the nitty gritty and you're in the foxhole and things are going bad, when you can reach out to the trade desk and you talk to someone that you've spoken with before who understands your account and the way you trade, that is a feature of Tasty Trade, which I think you guys need to emphasize more, because it certainly has meant a lot to us. It saved us a lot of money, and it's taught us how to trade a lot better, and that's really helped a lot.
Well, thank you. This was not a paid, you're not getting paid for this advertisement.
If your trade's not going how you expected, it's not necessarily that your assumption is wrong. Maybe it's just not right. Yet. Rolling is managing a trade by closing your position and opening another one like it for a credit all in one order. The cool part is that you can change the expiration to get more time, or you can tweak the strike for a higher probability. Usually we want to roll the expiration instead of the strike. Remember, duration over direction. Exactly when and how to roll trades is a learned art, and it can be a little bit subjective. Usually we only roll if we haven't changed our assumption, and we almost never roll winning trades. If you have changed your mind, don't roll. Instead, you probably want to close it if it has undefined risk, or just let the probabilities play out if it has defined risk. So before you cut your losses, consider rolling the expiration or maybe even the strike. Pretty simple.
We built Tasty Trade's web platform for today's traders. Drill into data, find opportunity, and track the action with hundreds of indicators. Fund your account and start trading right in the app. Join the club. Tasty Trade.
Grow a strong community with Tasty Trade's referral program. When your friend joins Tasty Trade, you'll both receive $100. As your community grows, you get more bonuses. Only at Tasty Trade.
Tasty Trade has crypto, and you can trade with zero commissions. Bitcoin, Ethereum, Litecoin, and more. Diversify in one place. Crypto, we got it, we get it.
We're back. It's still Wednesday, March 4th, 2026. This is Futures Power Hour, sponsored by CME Group. I'm your host, Chris Vecchio. He's Thomas Westwater. Thomas, if I told you on day 6 of the Iran war, the S&P 500 would be up on the week, would you have said that was crazy?
I mean, not too crazy. You're going to expect some up and down. I think one day up isn't, anything to write home about.
Well, there's a lot to write home about today. If you're looking abroad, foreign equities are getting hit fairly hard. The stronger dollar combined with higher energy prices. Bad news for countries like South Korea, Japan, even China, which for many of these places, they pay their oil and their energy imports in US dollars, Thomas. So when oil prices go up, whatever. But when they surge and the local currency goes down, it changes the equation for a lot of these companies. The Kospi getting hit the hardest since 2008, the global financial crisis. But you know what, here in the United States, we're going to take a page out of the Steelers Wheel famous song from 1972, Thomas. There are clowns to the left of me and jokers to the right, because the S&P 500 is stuck right in the middle of its 2026 year-to-date trading range, to the point as we start the show.
It's a good title. I like it.
I appreciate it. I've been working to impress our producers here, because one of them, James, gives me quite a hard time for the titles, and I'm tired of being bullied at work. Thomas, what moves through the Strait of Hormuz here? I think that's the question we're asking ourselves today after the Maersk headline that came out. They are temporarily suspending shipments through the Gulf for a number of countries, UAE, Saudi Arabia, or just name something there, Bahrain, Dubai. Likewise, Qatar announced today that they're temporarily halting their LNG production, which, given the focus of yesterday's show and some of the commentary on air about the maritime insurance being a good thing because it prevents a worst-case scenario of Saudi wells from being shut in as inventories are saturated, Qatar is just getting ahead of it. It takes about 2 weeks to restart energy production, Thomas, and 2 weeks henceforth thereafter for those shipments to resume. So about, we'll call it, 20% of global LNG trade comes to the Strait of Hormuz, and Qatar is one of the world's 3 biggest producers. There seems to be an energy shock that is becoming embedded in the market, even if our U.S. equity markets aren't suggesting that's a cause of concern here on this Wednesday.
Yeah, I mean, that's a lot of natural gas. It's a lot of oil. I think 5-6 tankers or ships have been attacked in some way. So, the insurance is going, insurers are increasing the rates even if they're dropping coverage. The LNG terminals, once you shut those down, you can't just start it back up a day after. It takes a couple weeks. So these effects will be prolonged even if we get a quicker resolution in the war.
Folks saying it's not going to be that big of a deal. Remember 2022, Thomas? No, I'm kidding. 2020. Oh, it's worse than the Russia war with Ukraine. It's COVID reference time. We had a temporary stop to trade, right? 15 days to stop the spread. What was the bullwhip effect of that pause in global trade, even just for a few weeks? We felt that for years down the line. The S&P 500 right now is ignoring this news, Thomas, but 80% of LNG passing through the strait goes to Asia, which I think is noteworthy. So Korea, Japan, China, they have a different set of circumstances they're dealing with economically than we are here in the US. And it's that divergence, Thomas, that I think really underscores the difference in performance between foreign equities and their American counterparts in recent days. Stocks are definitely stuck in the middle right now. I point to our S&P 500, which, I guess we're not right there at the point directly. But if we were to take a move off of the high here from the start of the year, the high comes in on January 27th. The low comes in earlier this week. The midpoint of the 2026 trading range is 68.80 or so. So just maybe 0.1% north of that right now. As we continue to digest these headlines around Iran, given the resiliency our markets have showed in recent days, do you find yourselves looking at an opportunity here to ride this to the upside, to sell a rally, to put on something like a short iron condor as we sit directly in between the highs and lows of the year?
I think for me, an iron condor still makes sense. Still a dynamic situation. Volatility's come in, but I mean, this could change any minute. So I want to range trade it. I don't want to be too directional.
Range trading and not directional has been working out for a number of months, Thomas. There was a report that came across my desk this morning from Citadel, which we talked about in this morning's Tasty Report, which I'd encourage people to go watch, where we looked at the dispersion trade, a focus of ours for the past few weeks. Citadel points out that as of February 6th, so they have data available as of a month ago from today, we see that the dispersion trade is in the 97th percentile right now. So that's the average move of that 30-day average move of the average stock in the S&P 500 minus the S&P 500's absolute move over that same period. So it's a single stock picker's market right now. You're going to get a lot of differentiated performance depending upon what sector you're looking at, depending upon what name you're looking at. That hasn't changed, but it's an extreme. Rare has been the occasion where this has been such a stock picker's market. And so it would stand to reason, Thomas, that we make our way into March. We're getting through the seasonally weak window. Volatility is coming down fairly aggressively today. I know I'm short iron condor with a little sprinkle of MES in there, but a VIX below 20 has a little bit of a different implication for how we should be treating this market as we exit the ugly time of the year, at least as we wind down the winter months.
Yeah, I mean, stock pickers market, I think that's a good point. Going with things that have been beaten down already is kind of what I'm doing along CRM. Looking, IGV is up 2.3% today. It's getting some upside versus the market. I think that's what to do. You look at individual picks, be a little more tactical.
IGV has been a strong performer here in recent sessions. Thomas, I think many of us last week on our bingo card, if you said, oh yeah, by the way, we're going to get the Citrini note and we're going to get war with Iran. That's a sentiment washout, it feels like, when it comes to some of these names. I mean, if those catalysts couldn't drive this market lower, then what will? So the NASDAQ right now is finding itself in a position of strength, 1.78% to the upside. I want to go to the MAG 7 ETF here, Thomas, even though it's not a futures product. It is something that can greatly influence the NASDAQ, one of our futures products here in the equity market. Double bottom potentially in play here, right around, we'll call it 60. We haven't quite cleared the key levels yet. The key level, of course, being that 1 month moving average, which we ran into just last week and were turned away from. Incidentally, the underside of support for several months going back to September. But a little bit more here, the MAG 7 turned the corner and your NASDAQ doesn't look so bad all of a sudden.
Yeah, kind of a flag pattern coming out of this triangle here. I don't know. I'm not loving it too much. I think a range trade is still, the best case there.
Well, the NASDAQ has bounced back to its 50-day moving average. So if we're thinking that there is a place where the market, is resetting itself and not ready to make the leap into higher territory just yet, 25,250 or so, right around here. almost equidistant between the highs and lows that we've seen since last October, not quite to the 50% mark. Thomas, but to that end, if we were to take a Fibonacci retracement and go to that October high and go down to our low here that we had in November, you could see that we're getting into that territory near 25,400. And there is a little bit more volatility in the product with a 29.2 IVR than its S&P 500 counterpart. So to that end, I want to go out to 44 days here. And if we were to look at the expected move at 44 days, we do see that the one standard deviation bounds are up near 27,300 and down to 23,000, we'll call it, in the NQM6 contract. So taking a look at our charts, where does that line up right now? 23,600. We can go north of 27. That would be a play that the trading range that we've been in since this contract really became active and a bit more liquid, it would hold. Now, maybe the NASDAQ's not the place to do it, or NQ is not the place to do it, because it is a fairly large product, all things considered. It's not as approachable as maybe an S&P 500, yes. But if we were to think about this structure here going 250 points wide on either end, you could still get something in the neighborhood of a high 60% probability of profit. The risk to reward leaves something to be desired, closer to a 5-to-1. The market's compensating you less today than it was yesterday to be directionally neutral, as it were. The trade's there, just you may have to be a little bit more careful with how you structure this, because I don't like 5-to-1s. That to me is not a good use of capital.
Yeah, the 4-to-1 you were getting yesterday is a lot. It's a lot nicer. You know, it's not terrible. NQ is too big of a product for me to do an iron condor. Looking in ES, I don't know. I gotta look around a little bit more. I have a long IWM position because I wasn't liking the Russell liquidity the other day for the strikes I was at. But yeah, I do want to do something directionally neutral somewhere. I think it's going to be ES for me.
There's two ES positions that are sitting in the follow account right now, both short iron condor trades, 6,600, 6,625 on one end. If we wanted to monetize this today and get out, where would we get out at? Small winner. Nothing to write home about, Thomas. Quick $90. We're starting to drift away from the midpoints of some of these other ranges that were established for, aforementioned reasons, like the halfway mark between the lows that we had here in November and the highs that we had in January. We're a little bit removed from that now. We're starting to get into the upper half of this range. Where would a turning point be? It is a question that I think we should ask ourselves. So 618 retracement coming up on the screen. Let's do 0.618, and we're going to get rid of you. Okay. I pay attention to the 618. It's the inverse of 5 for technicians. It's the level with which you want to stay above in a trend to substantiate the idea that ultimately uptrend remains. In this case, though, I have this drawn backwards. So I would want to go from range high down to low to get the 618 this way, and that's better. And Thomas, it's this sell-offs that we had in December, January, now in February, we never really got through the 618 retracement. And so the market is still very much in the throes of the possibility for a breakout to the upside. Seasonally, March is a very good month for stocks. It's the end of the period when volatility tends to rise. It's likewise the period when volatility has peaked and tends to decline. We're looking at 10, 20, 30-year metrics. It tends to decline from now through August, okay? We're not believers in sell in May and go away. That's a conspiracy from institutional investors to let you sell them your stock so they can continue to buy through July, all right? But volatility tends to go down here henceforth. So covered calls, could we sprinkle in something else, Thomas? I mean, I look at a chart like this and it feels like a corner may be getting turned here. We're not out of the woods just yet. And the Qatar news frightens me. But also we have so much natural gas in this country, it's not going to really impact us, will it? So we look through the noise. Volatility is down today.
Yeah, I mean, we're an exporter of natural gas in a big way, producing around 106 billion cubic feet a day. So the energy... That's one reason I think Asia markets got hit so hard. They're going to be they're going to be impacted by this a lot more. Like you said, a lot of that LNG does go to Asia.
Yesterday, with our timeline for a potential war horizon here, Thomas, given the scope and scale of the activities the U.S. and Israel have embarked upon in Iran, it would appear, absent an invocation of the Defense Production Act, that we have 23 more days of munitions remaining in the Asia theater of war, or rather the Central Asia theater of war. We talk about the shipping issues around inventory storage problems regarding Saudi Arabia and the other Gulf countries, with, we'll call it ballpark, 400 million barrels of storage available onshore and floating. So it feels like there's a 3 to 4 week window whereby this effort can be prosecuted. I'm not expecting Trump to parachute down onto the USS Abraham Lincoln akin to a former president of the United States, but I could see him declaring some sort of, we're winding this down in the next few weeks. It leads me to believe that if we're going to try to play for anything for a sustained equity market rebound, we should be playing it on the other side of that 20, 25, 30-day window. Because if the US does wind this down and signal that everything's going back to normal, or not normal, the Ayatollah is still dead, they're going back to a condition where trade can flow without ballistic missiles being threatened at ships transiting the Strait of Hormuz. 44, 51 days. I'm not loving the strikes at 51 days here. I really would like a 70, 50, 7100 call spread that I could size up right now. This is not necessarily the trade I'm comfortable with, but it is something that I'm actively looking at right now. I don't think we can dismiss the fact that this is going to be a market that is looking for a reason to rally again. Given how poor sentiment is right now, given how uncrowded the trading is on the long side of this market.
Yeah, I mean, do you think, is the market hyper-focused on the war? Do the ADP numbers mean anything this morning? Does the upcoming jobs report mean anything? It seems like if we get bad news, that'll be taken as bad news. If we get good news, that's something to help us look past the war risk.
ADP came out today. The labor market's still choppy. I don't think, Thomas, 5 or 10 years ago, you and I would have been looking at an ADP in the 60Ks and saying, oh, that's a great pace of private sector jobs growth. It's very sluggish. And then you look beneath the surface and it gets even uglier. It's all education and healthcare, which important jobs, not to diminish them whatsoever. But in terms of jobs that add productivity and help accelerate growth in the economy on a quarter by quarter basis, they're not really going to show up there. That impact isn't really felt. Fiscal multiplier for public school education in this country is like a 5 to 1. Every dollar you put in, you get $5 of economic activity realized. That's over like 10 years. So more jobs in the education sector today doesn't translate into faster growth necessarily tomorrow. It's really the next time horizon they're out. The point is, though, Thomas, you're not seeing tech add jobs. You're not seeing manufacturing add jobs. You're not seeing shipping, logistics, accounting, finance. There's jobs growth is very constrained at present time. So what does NFP tell us that we don't already know about a March Fed meeting that will not give us any rate decision whatsoever? Right? We're still looking beyond Powell. I don't know if the market's going to be too sensitive unless it's a really good jobs report. Because we don't want rate hikes. We want cuts. So don't give us anything that pushes us further away from cuts.
Yeah. Yeah, no, I agree for the most part. It has to be a good jobs report to take some of that edge off. Otherwise, the sentiment is going to contained to the war risk.
Maybe, Thomas, this is one of those situations because there's concern of an energy shock. We don't want to have that energy shock against an already weak economy. It's much easier for the Fed to navigate a policy shock like this if if the Fed was thinking about raising rates and oil prices just jumped. You know how easy it would be for them to just say, yeah, we're going to hike this month now. Not that hiking rates would stop oil prices from going up. We've joked before. I don't think the Ayatollah or Putin particularly cares for what Jerome Powell and the Fed does when they're implementing their war efforts, nor do I think Donald Trump does to that degree. But maybe a good jobs market actually is what we need. It's the antidote. We don't want good news is bad news right now. We want good news is good news. We want to see that the economy is positioned that it can absorb any disruptions without needing the Fed's imminent support because they find themselves looking at a stagflationary mess.
Yeah, I mean, that's what bonds have signaled is, towards stagflation, selling off hard, but we've kind of moderated a bit there. Overall, yeah, I'm going to take a neutral position in the ES. Like you said, it's not the greatest compared to what you get yesterday, but I think there's still a trade there.
Just don't trust the market with these headlines. I don't need to make sense of things, but from my worldview, these headlines that are coming out suggest that there are going to be more embedded energy issues, Thomas. I want to keep it small if I'm going to get any upside exposure in ES. ES M6 here on the screen. That's the expiry cycle that goes out beyond 40 days, and that gives you a 7,100 year-to-date high. You're talking 160 points from here, 2+%. That's nothing. This is not hero ball. Looking for a move up to 71, 71.50, risking 1 to make 1.5. That's not the kind of out of the money call exposure I want to have. So I find myself looking at a market right now where I need to do a little bit more creative thinking for how to express my very complicated and wish-washy views that seem to be evolving on a day-by-day basis in this market, which always scares me because I like having a concrete view, a lodestar to trade around and stick to it.
It scares me too. I've been scared every day to log into the platform, and nothing horrible yet, but it's been a little nerve-wracking going through this.
It's so funny. I got up this morning and I said, oh man, I looked at the news flow first, which really, quite frankly, don't do that to yourself. Look at the prices first. And if they're bad, then go see what caused the prices to be so bad. But I looked at the news list when I said, oh my gosh, look at all this war is getting worse. And then I looked at the charts and I went, is the war getting worse? Because the market does not seem to think so.
There's some headline about a secret, proposal to the U.S. to end the war, showing that, Iran has some incentive to try to get out versus a hardline stance that, people thought they were in before. If we see more of that, I think that kind of helped jolt the market a little bit.
It's funny that you mentioned secret talks because Axios reported a little while ago that Netanyahu reached out to Trump to ask him, hey, are there secret talks going on? So
probably doesn't want that.
Given Netanyahu's politics and his stance on Israel for my lifetime, I think he's quite delighted to continue the campaign to neuter Israel as a threat to Israel and the broader region. So Thomas, 68.90 here. What a market. Long MES still, directionally neutral in ES on 2 different time horizons. I'm looking for a little bit more upside exposure here. Inside up, as Nick would say. Maybe that's the way to do it. We do have a Russell up 1.07% yesterday, saved by the bell, if it ever was. We do see going into the close, we trade sharply higher back to that 50-day, and today we are back to our 50-day. But as has been the story for what feels like weeks now, the day is defined by a bounce between the 50-day and the 1 month, 50-day and the 1 month, 50-day and the 1 month. Time immemorial, apparently. That has not changed, Thomas. So I'm still looking at this as a market that's holding the 50. It's been bouncing off the 50. It can't break down through the 50. You just threw private credit concerns, AI SaaS apocalypse, World War III because of Iran at this market, and it is doing nothing but take it on the chin and keep moving forward. I like resiliency. So I'm going to stick through it now. 2750 could be in the cards. Getting rid of the Iran threat, though, and not saying that means toppling the regime and Iran becomes an ally. I'm saying taking this off the table as a risk, energy calms down. Inflation expectations calm down. Treasury yields calm down. These smaller cap companies that have more duration risk, thanks to the state of their balance sheets, they look less risky. So while the NASDAQ is leading on the way up here today, I would think that the Russell would be one of the more sensitive names on the board. Should we have an off ramp with Iran? And it is outperforming the S&P and the Dow Jones right now. So you're kind of getting what you want to see if you think that maybe we're narratively going to be turning a corner here. But of course, I'm probably going to have a very different view tomorrow morning, Thomas.
Yeah, it's going to change based on what's changing. Markets are moving, or at least the headlines are moving fast right now. It is resilient, If you told me, if I didn't see a chart since last week when this started, and saw all the headlines, saw all the videos, what's going on with energy, I would think that equities would be down a lot more. So, that is encouraging.
Felt like they were down a lot more. Well, they were down a lot more when the U.S. invaded Iraq in 2003. We were down 5.2%. Felt like we really started coming in a little bit more in 2022 when Russia invaded Ukraine. I'm just looking at the charts here. Not really, actually. February 24th, ES opened at 42.15. That's a cute number. A low of 4101.75, closed at 42.84. We did not clear that low until Monday, May 2nd. So even, if we're talking about Iraq 2003, you get a bounce within 2 weeks. You get a bounce within 2 weeks of the Russian invasion of Ukraine. I mean, whatever happens, this next 45 and 21 day out window, Thomas, could be defined by a market that's rallying and goes back towards the highs and maybe even pushes through them. And it doesn't tell us anything about whether or not the market's reaction to the downside and to the war is finished. If recent history is a guide.
Resiliency through war. Could the catalyst for, the next move higher out of these ranges that we've been trading in, can that do it? Do you think that is enough?
Yes. I'm a believer in the corrections occur not just in price, but in time. So if, the S&P 500 went from 7,000 down to, 6,500 in the span of a few days, that's a correction in price. If it gets up to 7,000 and does nothing for 6 months, that's a correction in time. We've shaken off all of that overbought momentum. We've shaken off all of that, too much too quickly type of attitude. Now the prevailing attitude is like we've done nothing for months, even though we're at the same. When we were at 68.88, Thomas, in October, were people saying like this market's going nowhere? Or are they going, this thing is ridiculous, it's too high, too fast? So yeah. Sentiment changes.
It does.
It's a good thing.
Yeah.
It's a good thing. It's a good thing to correct in time, not in price.
I think timing that is the hard thing to do. Like when is there going to be a conclusion? And I think that's what's holding me back from getting bullish, is trying to time the conclusion or whatever you want to call it, whenever that happens.
Markets are forward looking. And if we can see a way out of this quagmire, and it's not, spending 20 years in Afghanistan and Iraq again, then stocks don't really have much of a concern. Bonds are a different story. However, bonds at the long end of the curve have seen volatility collapse in recent days. Now a single-digit IVR in ZB once more. ZN, it's back to about 20. We did have a high IVR in notes recent sessions that spiked up to 36. So a vol compression as we're seeing the market come in right now. I want to draw a parallel before we get into the discussion here, Thomas, between what's happening in the treasury market and what's happening here in rate cut odds. Because we did see throughout much of February, as treasury yields were rising, rate cut odds for this year and next year end were going up and in tandem. That's important because that's different than what we've seen over the past year or two, or even three, when a Fed telling us that they were going to give us rate cuts against a backdrop of a better than expected labor market and better than expected GDP and still above target inflation. Rate cuts meant higher yields, and the expectations of rate cuts meant higher yields. So this return to normal, if you will, dare I say return to a typical relationship, bond yields are falling as cut odds go up because we're pricing recession. That seemed to be in play. And that switch seems to have continued here now into March, because now cut odds are down and treasury yields are going back up. as if to say that because we have more inflation, we can't give you the cuts. Thomas, where is the place where you think that bonds and notes are a good buy, seeing this dynamic at play? Because with volatility coming in, if we get away from energy shock, we still are dealing with are we moving towards recession, AI capex, SaaS pocket, like all those concerns that were precipitating the move higher in notes and bonds, they'll move lower in yields. So is this a dip buying opportunity?
I'm not dip buying here yet. I'm not a huge bond trader. I only take a position when I have, high conviction here. I think rate cut bets could still keep going down. There's not enough. I mean, if we get to a point where IV juice is up a lot more and I could get farther out, could take some duration, I would do it, but I'm not there yet.
The range that we have traded in, Thomas, we want to keep things typical tasty. Dispersion trading in stocks has a different implication than what's happening in the bond market, although periods of high dispersion in the equity market tend to be periods where bonds and notes do well. I point out the trading range that we have for this year so far in notes, keeping it real simple. We are basically back to the 1 month. We are basically back to the midpoint. We'll call it 112 and 22 ticks. At 51 days to expiration, I have some things doing here, like a short put spread where I need this 1 month moving average to hold. But moreover than that, because of the volatility profile that's still accessible to us, I see a low near 111 and a high up near 114. And then I'm incentivized to go, where can I look to do a short iron condor in this market to help maybe take advantage of this perspective? It's not a great high convexity trade. It is at 63%. It is just inside of a 4-to-1 risk to reward. But I can absolutely make the argument more so than the short put spread one. And maybe this requires taking off the short put spread, but I can make the argument here that we should be looking for bonds to stabilize now at the midpoint of its 2026 trading range, that if oil prices have been contained, that Thomas, oil prices today down, the threat to treasuries at the long end of the curve may be subsiding as well.
Yeah, I mean, the upside in oil does, at least for today. I mean, we had a tail off the highs yesterday. We're down today, a tail from the highs. I think it's still a little too early to say oil prices can't keep going up, but it looks like maybe we've started to carve out a top here.
Maybe we've started to carve out a top. It's a question we're going to have to get to in a few minutes' time, because first we're taking a jaunt. We're going to take a jaunt over to the world of metals. Maybe there's a new narrative emerging here, Thomas. Put on some shoes. Take a walk with me down this path. Prior to the start of the Iran war, there was an understanding that the globe was de-dollarizing to a certain degree. Maybe not explicitly, but the dollar was selling and traders were looking for alternative means of transactions. They were going over into things like gold, silver, platinum, palladium, copper, the real hard assets, the stuff that people want and need to store value, not that flimsy paper that the Federal Reserve can print ad infinitum anytime there's a crisis. So we've been told. Let's entertain that idea. What happens when the world's major shipping lanes are shut down? Do you have ease to transport gold? Can you keep the gold that you're using to pay for that oil now instead of US dollars secure? Maybe you can't. Maybe reminded that the dollar is still king here through this episode, Thomas.
Yeah, gold is usually not transported by air, usually by ship. So the shipping does impact it to a degree. Oh no, so we had this like really pure safe haven play on the war. The dollar doing very well, gold not doing well. If you thought we'd have a war, naturally you could say gold would be one of the places you might go, but that wasn't the case. Oil was the place you went. Dollar was the place you went, I think gold playing a bottom here makes sense. Just I wouldn't get short here. I'm not in a gold position. Definitely not in silver, but I'm starting to look at gold more.
It's an ugly, I mean, I feel like I'm already long and I'm leaning long still for, myriad reason, but it feels like this is an ugly place to try to get long again, perhaps. I mean, I know it's 5,100 and we're still holding it. The backside of the trend line off the lows that we had in February, yeah, this is only a 4-hour chart, so it's not like this is a 1 month moving average, but just looking at the momentum indicators here, you could see how we're getting back up into this envelope, which was support on the way up and starting to act as resistance on the way down. It's not a great feeling. Likewise, during this fall, oil vol 82.5 down to 73.3. We typically like the relationship between vol and prices. We want higher vol to indicate that higher prices are sustainable, and that's not necessarily the case here. So there are some concerns. Silver, likewise, it had a nice session earlier. It's not at the high. We had that feeling better territory written on the chart yesterday, Thomas, on the 4-hour time frame, and you could see how we tried to get into it today. And then we stopped. And then we couldn't make any further advance. So the market's not ready to get back into its feel-good territory. It's also not in the feeling worse territory. But gold and silver here, such a dominant narrative. Central banks are buying. It's the Middle East. It's Asia. How are Middle Eastern central banks going to get their gold right now? You're going to put it on trains, trucks, and drive them across the desert?
Yeah.
Aren't those sitting targets?
What other choice? But you're not going to do that.
I mean, I think maybe we're in a window where as long as the straight is closed, the marginal demand for gold could be negatively impacted. I don't know. This came to me. I was talking to producer Josh earlier on the phone, and it hit me like, why, the dollar's doing really quite well through this episode, and metals are doing a little bit worse than I would have thought, given history. What if this is the dollar effectively reasserting itself as the petrocurrency?
I think that's possible. The dollar still has a little more work to do. We're still under the January swing highs, under November highs. But we've made a big rally, all the way since the end of January. We've DXY from around 95.5, now almost got up to 100 earlier this week.
We almost got there. I mean, right now, if we're thinking about the relationship and the interplay between treasuries and the dollar, and there clearly has been a rush to safety, and yet treasuries have not benefited from it, and neither has gold. The clear signal, hindsight being 2020, is that this is a situation where people are looking for liquidity. Not just I need to park my capital somewhere to have it hide out. It's I need as much cash on hand where possible to ride out the storm because I still have bills to pay. And I may not be able to pay those bills right now with the means that I have been using elsewhere. The digital realm is doing better today than the physical realm, Thomas. The dollar, while it's down versus its other major counterparts, it's been on a tear this week. Bitcoin is up. Gold is down. That to me is really fascinating. So I'm, every day I'm coming in here now with a new idea. I said before, I like to have a lodestar. If for the next few months, because of the disruption to trade in the Middle East, the marginal incremental buyer out of the Gulf region is going to be, they're not going to buy gold because they don't want it sinking at sea, Thomas, and they can't get it insured anymore. Maybe this is a problem.
It makes sense. I mean, yeah, if you're worried about your shipment getting hit by a missile, you have no insurance, you have no other way to ship it, you can't get it. So why are you going to buy it? It makes sense. I mean, it's a simple explanation. When you have a simple explanation for something, go with it.
Feeling better above 87, feeling worse below 79.5. That hasn't changed in silver, hasn't changed in gold. We're still holding above $5,100 an ounce, which is where we need to be. I'm going to take a page out of Ilya's book in this case. I'm more of a horizontal man than a diagonal one, just for the sake of my own sanity and substantiating my own view that gold still has some opportunity here to hold up right now. 5,100 or bust. Stay above there. We're golden. If not, time to perhaps think about think about other opportunities. Email comes in here. Chris, don't forget they can transport gold on camels. So I don't think that is going to solve the shipping problem here into the Middle East. But to me, it means nothing changes for now. Yesterday, Thomas, and days before, we were talking about potentially getting into the copper market, looking for a way to take advantage of higher IVR in the event of a pullback. That was our discussion on Monday. We were able to get it yesterday on the chart with a bit of a flush down here. And so I myself am back in with the short 5.5, 5.6 put spread at 54 days to expiration. Right now, if it were put back on, it's still effectively risking 2 to make 1 at a 64% probability of profit. And that's why I was so turned off by that ES trade earlier. Some of the opportunities we were looking at where I can get a 68% pop, but it's a 5-to-1. That's gross. I'd rather do a 64% pop that's a 2-to-1. Way better use of capital, in my view. Definitely worth the trade-off of 4% probability of profit. So I think that maybe this is something where if we want to ignore the noise of gold and silver and the precious metals and the alternative payment systems, blah, blah, blah. If copper is holding that clear line in the sand, we have a level with which we can operate around.
Yeah, copper, I'm still holding my position. I have a short put spread at 5.7, 5.75. March 26, 22 days out. I have to roll this position pretty soon. I feel fine staying long copper or directionally neutral to a bullish tilt. China is coming back from their holiday. The smelters are getting back to activity. It's really all about China, though, into the summer. But it still looks like we're going to build into more of a deficit, even though stocks have risen more than expected over the past few months. We need economic activity to come back. That summer construction spending in China, we'll see if we could get there.
We'll see if we can get there. Metals have been a bit of a grind chop fest today. They were up a little bit more in the session. Now they're down some, in part perhaps because oil volatility has been subsiding off of the highs. That is one of the more important developments during the session, which not really captured on that 4-hour chart. We do need to go down to that 5-minute time frame. We could see here earlier in the day, just quite frankly, shortly after I woke up, oil vol peaked in the 120 area. We got to a high of 126.37 in the IVR, and we're back down to 112. And so as oil vol has subsided, we've seen prices come off a little bit here. The news that Maersk, that Qatar, the shipments are stopping through the region isn't helping calm things down. However, the news that there could be a secret meeting between the U.S. and Iran to wind down hostilities has been enough to keep a lid on the market today. So what do we do here, Thomas? I mean, that is the constant question for those who are trading oil. If you were short oil, what are you doing? If you're long oil, do you monetize? Do you get out? Do you redeploy? Do you take a look at the vol? I'm still playing this twofold. I think the best bet had been the past few weeks was getting some exposure on the upside. It is a 70-71 call spread. This thing is very jumpy right now. I could sell it today and make $440, Thomas. You know something? On Monday, I could have sold this for about $440. Has the past 2 days of sitting here, watching every headline, choking down these tubs, has that been worth it to go unchanged in oil and make no more money despite this market jumping around and bouncing around? No, not at all. For any more significant upside, I need $2, $3, $4 here. Maybe I could turn this into, another $200, $600 here total if this thing rallies another $2. But you know what? If oil does rally, a lot of the other stuff I'm holding might get hit hard. So at least there's that as a buffer. If this trade were to go out flat, right? If I were to try to sell this tomorrow and I make no money on it, it would probably mean that there's a big equity market rally that's transpired, which I would benefit from. It probably means that there's stability in the bond market, which those ZB calls up at 120 would benefit from, right? I don't want to take it off and put too many eggs in one basket right now. So maybe there's a way I can thread the needle here where I can get a little bit more profit without other stuff getting hit. It's 13 days. It's highly sensitive. It's a hedge. So I'm not expecting it to be like the thing I write home about. That aside, 43 days out, looking to sell vol, you can go deep. You could sell 93, 92, 94 on the call spread side. You can go 58, 56 here on the put spread side. You can get paid still to take the risk of a short iron condor right now in a market with a near 100 IVR. You're telling me we could sell oil 75, nearly $20 in either direction and get paid at a 3-to-1 clip? That is what we got to be doing right now. I mean, let's not get too cute here and overthink this. High oil vol, don't look it in the mouth. It's a gift.
Yeah, I agree. That's what you have to do is sell the volatility here. I'm looking at the 43-day out right now. I'm going to put something on. I tried to get into a short call spread yesterday afternoon. It would not fill. I'm going to get in something here around 80. Try to do that. You know, the market is focused on the war, of course, but we did have crude inventories come out from the EIA for the week, increased 3.5 million barrels from the previous week. 439.3 million barrels. U.S. inventories are 3% below the 5-year average. Motor gasoline inventories decreased 1.7 million barrels, 4% above the 5-year average. And finished gasoline inventories increased. Distillates increased 400,000 barrels, 3% below the 5-year average. We've had a lot of build in these diesel inventories, distillate fuels over the past few months. I think we were around 8 to 9% below the 5-year average just a couple months ago. So we've made, a lot of room there. But these inventory figures that have come out, especially last week, have been bearish. So, when this geopolitical premium does come out of the market, I think we're definitely getting some good downside.
We've seen natural gas volatility bump up here at the start of March. Prices have not really gone anywhere, though, net, all things considered. I'm sitting short a put spread here at 54 days to expiration, just underneath the lows that we saw back here in January. The European market's still a mess, Thomas. I don't think there's any question about that. Have we seen prices continue to rally? Today, they came off about 10%, a little under 9.5%. And at absolute price levels, they're nowhere near where they were back in 2022. That's going to be the most consequential factor here, right? What drove our natural gas boom in 2022 into 2023 was the fact that Europe had no alternatives. That there was just no supply available with the pipelines from Russia effectively being shut off for the sanctions. And I know that there's energy carve-outs now, but at the time, this wasn't the case. So, yeah.
Asian LNG flows disrupted heavily. Most of our LNG goes to Europe, but there's going to be more competition now. So that increases the price. People are bidding more to get that LNG. Asia is going to be trying to get that. Tankers being diverted. At the same time, I don't know. I'm not loving a long natural gas trade here. The weather isn't supportive in the U.S. Oh no!
It's not.
I don't. Oh no! I don't want to trade this. I just don't feel good about it. I want to say if I had to pick a direction, I'd actually say down. If we get down to the 2.8, 2.9 even, I would be a buyer there.
2.8, 2.9. Well, if that holds, then we're in good shape, Thomas. So we can keep moving here and make our way over to the currency portion of this market, where the dollar being down is probably a good thing. It means the reach for global liquidity isn't necessarily persisting. I have commented in recent days about how bonds and notes were falling while the dollar was rallying here. Why would people be selling treasuries but also purchasing the US dollar? Why selling stocks and treasuries? Bonds and stocks are down. Why are you buying the US dollar? Why is that going up? In those environments, it's an environment where people are buying liquidity effectively. They're not necessarily looking for a return on their capital. They're just looking to make sure their capital is preserved. which is why this gold move lower is all the more fascinating, because it's almost as if some people are saying, the reason why I was buying gold, maybe it's not as attainable as I want it to be. So the dollar coming back in here, Dixie, you mentioned it nearly traded 100 the other day. It's back down into the 98. This is a bump into the highs that we had from January before having a minor pullback. I think we need to be a little bit more constructive on the dollar here if we are going to see any semblance of this continue. And moreover, if the U.S. Navy is once again going to be exerting itself as the world's guarantor of free trade, do you think that the United States is going to help secure that trade for Saudi Arabia? If Saudi Arabia is saying, yeah, you can settle your oil purchases in something other than greenbacks. I mean, this may be a chapter in a bigger story, Thomas, in the currency world, where dollar primacy had been threatened, and now the world is being reminded of why it really can't be in the short run. It's a nice macro story to tell myself, at least tell the audience as well. Volatility has come across the FX space before I kick it over to you, even with the stability we're seeing here and the dollar being slightly down. IVR, for example, the low in British pound IVR, we saw the low today hit the lowest level since January 22nd. You go over to the Canadian dollar. While volatility is obviously still high here, we did see a move back into the 50s at one point today. The euro volatility, it's stabilized too in the high 20s. It's an inside day for the euro after hitting the lowest level of 2026. So stability right now on the currency front, less of a need for liquidity. That's a good enough read through. For me, it's better than Thomas today being a day where the dollar's up with stocks and bonds. Yeah, capital's coming into the US, but is that the way that we want to see it? Is the dollar rally going to continue? That's the question I want to leave the audience with today. What say you?
Ultimately, probably. I think there's a chance for, to play a retracement in the euro. If the war risk comes off, the euro's definitely been impacted there. We have some technical support. I've been ordering for a short put spread at 116, 115.5, the 65 days out. And that is 2-to-1 risk to reward. So we're risking 412 to make 212 at 67 POP. I'm okay with that.
That's a good risk to reward. I myself find a need here today to try to get out of a position. There has not been much trading volume in the 135, 136 calls. However, in the 6B, this is why if you're trading under 21 DT and you're on the other side of the decay curve, it might be better to use Spot FX, which is available here on the platform just simply by highlighting this tab. Although this is a futures show, so we're not going to head over there. Thomas, this is something I'm going to have to ride into the ground. I mean, I could try to get out here. Maybe someone picks it up. It's theoretical pricing. But one of the downsides of using the currency futures, if you're not using the euro and even the yen to a lesser degree, you may have to just ride things out. So does that mean I buy the British pound in the spot market to lock in these gains? I could do that, right? To ensure that over the next 2 days, I don't lose any money. That would be the typical hedging thing to do. And so if I can't get liquidity here today, Thomas, that will be something I do in the follow account. I'm going to buy a little bit of spot British pound to offset the expiry that I have coming up here. That way, whatever happens, if this thing's moved back to the upside, at least I'm not out $50, $100, $200 for no reason.
Yeah, that makes sense. I like it.
Let's wind this thing down and take it into the close. What's next on the calendar? There's nothing of high interest tomorrow, although initial jobless claims have their weekly spotlight on them as usual. We are getting ready for a non-farm payrolls report on Friday, which to my knowledge is still on. Maybe the government shutdown this turn through the calendar won't impact the release schedule. Other than that, all eyes on Iran, and trust me on this. Don't look at the news in the morning when you first wake up. Look at the charts first. Don't get yourself all panicked before your morning coffee, whatever. Have a nice morning for yourself. I thought today was going to be terrible. It's fine. Thomas, we're keeping our head above water here on Futures Power Hour. We'll be back later today for the last call. Myself and Nick winding things down, 3:30 Eastern, 2:30 Central, right here on Tasty Live. So for Thomas Westwood, I've been Chris Vecchio. Good luck trading. We do have More Tasty Live coming at you. Just a quick break here coming up. Get a kombucha. Come back. See you on the other side.
It's option. Jive. Nicky, we are back, son. And you know what that means? Time for a little bit more Tasty Live with an option jive. 3 decisions that make or break a trade.
Let's do it.
Are there really only 3?
This is just kind of a, overview.
25,000. And by the way, the $64,000 show I was told was on even before my time in the 50s. My mom must have been telling me about it. So she must have mentioned it, and now I'm carrying it on 75 years later.
It's beautiful. It's a beautiful thing.
It is a beautiful thing. You think you're not a product of who raised you. You are.
Of course.
Much as you hate it. Go ahead. Option jive. I'm kidding. Come on.
The 3 decisions that make or break a trade, we're just going to give you a primer on all the things you hear us say from, rolling up the untested side, managing delta, all those good things. We're going to give you a little primer on that. So when we're taking a trade, there are 3 main mechanical trading areas we need to look at. So we talk about entering the trade, we talk about defense of a trade, and we talk about exiting a trade. Those are the 3 main things that you can do. That's all you really can control is when you enter the position, what you're doing to defend the trade, and then when you exit. It's also probably the most powerful thing that a retail trader has is that you have flexibility here. You can make this decision. When you're managing a portfolio, big portfolio or a hedge fund or something like that, there's not a lot of flexibility here. You have to, kind of sit with positions. So one of the great things that we have the power to do manage positions and control our entry. We can choose when to enter trades and when to exit them.
Yep.
And so with all of our content, we have talked about the different important factors that we should consider when entering a trade, including the directional assumption. We talked about the IV environment, time frame, and delta. Those are all very important parts of our trading style. And for this study, we're going to focus on how to defend and exit trades, and what we're talking about when we say things are phrases that you might not be used to. So when we talk about defense of a trade, what that means is that after we enter the trade, we can defend our trade with a plan if our trade is tested. When you're tested on a trade, it means that that trade is going against you. If you sell a put spread and you are being tested, it means the short strike is close to at the money. The stock has fallen from when you originally put that trade on. If you're doing an iron condor, you have risk on both sides. When you are tested, it means that the stock is close to one of your short strikes. Today, we're going to talk about and look at 2 examples, including how we defend strangles and wide iron condors, and kind of just talk through what that mechanic is at its core. We're not going to give you exact specifics because that depends on your own directional assumption, risk tolerance, how big the position is, etc. But just give you an idea of if you hear us say, I'm tested on the call strike, I'm rolling up the puts, here is what we mean and why we are doing those sort of things.
Yeah, I mean, we've been saying and doing this for forever, but you get a lot of new viewers, and it's new to them. So this is a good little exercise on the silly things that we say.
Yes. So when we are defending a strangle, when we say we are tested on the upside call or tested on the calls, what we are saying is that the stock has gone up from where we put this trade on. So we put the trade on and the stock was at 50, stock has gone to 60, and our 60 strike short call is being tested. There's loss on that call. The untested side is the side that is out of the money. It's now further out of the money. That option is going to lose value. So you're going to have, anytime you're trading a neutral position, you're typically going to have, for a period of time, one option, quote unquote, winning, meaning the stock is moving away from that option, and one option that is quote unquote losing, the stock is going closer to that option. And over time, those options both decay. That's really what you're playing for with the neutral strangle. And they decay because of time decay, because of changes in implied volatility. Hopefully you're starting at high volatility. By the time you close the trade, it's low volatility. But in between that time frame, that period of time where those 2 factors play out,
you're going to have movement in the stock. It's very rare that a stock just sits where it is. You're going to be tested on one, if not both.
Although that'd be cool if you sold premium on both sides.
That would be really great.
Horrible if you bought it or sold it, one directional trade.
I wish every trade I put on, the stock went nowhere and I just, collected my paycheck every day. But that's not how it happens. And that is a rare occurrence. And so when we say you're tested on the upside, we usually take our untested side, which is the put side, and roll that up. That's our adjustment to a tested call. Same thing on the downside. If we say we are tested on the puts, we're taking that untested call. This is just flipping the graph and the stock is going down. We roll the call down. Those are the two adjustments intra expiration. So you put the trade on at 45 days, 10 days later, you're tested on the call side, you're looking to roll up the put. When we talk about time, when we manage at 21 days, what are we doing when we manage the trade? We're taking that position and we're rolling it out in time. We're reestablishing the time value that has decayed over the original start. So you start with 40 days, you're at 21, you roll that position to a new 40-day time period. You're adding that 20 days to try and capture that extrinsic value and that value over time. So these are the three mechanics of just defending a strangle. You either can, or we could put do nothing on this too.
Sure.
Lean directional. But if you are looking to manage a trade, you're managing the untested side or rolling out in time. Those are the two things you can do. So things change a little bit with iron condor. So when we're defending an iron condor, these are defined risk trades. So you have to keep in mind that these are, when you put the trade on, you can only lose so much. So you have an embedded.
And you can only make so much.
You can only make so much, of course. With short premium.
I'm just giving both sides. Yeah.
Yes. But when you're giving up some of the value, the extrinsic value, to put on a stop loss. That's what it's a strangle
synthetic stop loss.
With a synthetic stop loss.
Yeah.
The long options are further out of the money. That is going to be relative to whatever your spread width is and how much capital you can use. But these sort of trades, you typically have to be a little bit less aggressive with the management, because when you put the trade on, your management is baked into the trade. Like you can only lose so much. Your defined risk on these trades. And so typically when we look at defending iron condors, we usually have to kind of take a little bit more risk than with the strangle in terms of delta, like move against you.
Yeah.
You have to be a little bit more tested, so to speak, on an iron condor, because you already have that hedge in place. And so we get this question a lot of why don't you manage the iron condor a little bit more, aggressively or the same as you do with strangles? Well, it's because you're already putting that management on at entry. The same mechanics apply. Like you're still going to roll the untested side closer to at the money, but you got to kind of be a little bit more flexible with defending an iron condor versus a strangle where you have a lot more extrinsic value, a lot more risk on the trade, a lot more flexibility with what you can do here versus the iron condor, which you define your risk on entry. It is what it is. And so you have that, embedded stop loss too. Mm-hmm. So when we exit trades, we look to exit around 50% of the max profit. Again, this is just kind of a metric to hang your hat on. If you get something that moves 20% in a couple days, you're well ahead of the curve, right? The 50% should take 50% of the days. So if you start a trade with 40 days, it should take you 20 days to get to 50% of the max profit. That's just roughly how the math works. If you get to 20% in 2 days or 5 days, you're well ahead.
You've overperformed.
Well, things have worked faster than what you expected. Volatility.
So it's probably time to do something.
Volatility has contracted. You've gotten a directional assumption right if you sold just one side, if you did one side of the trade. Those are the things that are influencing you getting to 50% faster than half the duration. Assuming volatility stays the same and time just passes and the stock chops around between your strikes, it's going to take you roughly half the time. You need to get volatility to work in your favor for this to go faster than that. That's pretty much it.
That is pretty much it.
If by 21 days we have not achieved our 50% of the max profit or somewhere around there, again, I don't sit and say, okay, I'm at 49%. I have to wait till 50. I trade it. If you want to sit and wait, that's totally cool too. But like, that's a flexibility that you have with being able to manage your own trades. If you're not at your spot at 21 days, you take the position, roll the trade out. That's your next adjustment. And we prefer this to holding until expiration because it reduces the overall risk. You're still taking advantage of volatility. You're adding duration, so you don't have to be directionally correct in the shorter duration that you have, et cetera. So those are just the three mechanics of strangles and iron condors.
Beautiful.
And so we look to exit around 50% of the max profit, and then at 21 days, the 50% max profit is not reached if it is not reached at 21 days. And so we're giving you just a SPY strangle from 2010 to present. Looking at the win ratios for at expiration earlier than 21 days. So like you're just rolling at 21 days and managing at 50% and 21 days. And you can see when you add in the components of rolling at 21 days and managing winners at 50%, you increase basically everything, right? So your win rate is basically the same as at expiration, which is what you would expect. But your average P&L is going to increase, and that's a function of reducing your largest losses, which you're doing because you're managing that trade at 21 days. You're not taking the same risk that you have at that expiration, which you can see is $6,000. If you're just holding this expiration, that's your max pain that you've experienced, you reduce that down to 2,400, which is a 60, 70-ish% reduction in the overall max loss that you experience over this data set. And so that's why your average P&L is going to increase, is because your losses are tighter. Like they're not as big. And that goes in line with your standard deviation of P&L. $600, if you're making that, is a better number than $300. But when you're thinking about profits and losses of $300 average versus $600 average, it's a much tighter range. And when you have a more consistent win ratio, a lesser drawdown, and higher average P&L, all those things are going to compound with with that tighter range of P&L. That tighter range of P&L is going to allow you to kind of stair step forward.
Perfect.
So just to sum it up, after we enter a trade, we can defend our trade with a plan. If our trade is tested, we usually roll the untested side, roll out in time. Those are the two mechanics that we have there. When exiting the trade, we look to exit around 50% on the max profit. And then again, our 21-day and 50% profit marks together is the optimal for managing neutral type positions like a strangle or an iron condor.
Great job out of you. Let's take a quick 90-second break so we can catch this opening bell in about 2.5 minutes. You listen to Tasty Live. Nikki, we are back, son. Market isn't just hanging out here up $2.50, $2.50. NASDAQ up 115, right where it was when where it was when I quoted it last time. Bonds 117 right there. Volatility in by 22 cents. Good sign for the bulls, maybe sitting here at 21.88. Mm-hmm. But the world still is your oyster. There's plenty of volatility out there in the market.
This would go to the question that we get all the time of like, should I wait until it's over?
Yeah, like
you're in the spot where there's still, like, if you have been waiting, you still have high volatility right now. And if we stay like this the rest of the day, you might not have this opportunity tomorrow.
You're right. And if you want to go to, March 2nd, the last time we were 68.50, which was only 2 days ago, volatility did get above 22 or 21 and change what it is right now, but it was as low as 20.5. Yeah. So it was a full point lower than this. And if you want to go back to the times before that, volatility never got over 21 and it's 21.75 now. So you have even the S&Ps at the same exact price that they've been in the past. And I only mean a week or so ago, or 2 weeks at the most, if you want to go all the way back there. And you got volatility a full point higher. So if you did wait, good on you. Now what? Like
Now what?
Is it the perfect time? I don't know.
Who knows?
But you got to do something eventually, or you just sit on the sidelines forever, waiting for the perfect time.
Yeah, I can't do that. I can't do that.
Me either.
You do that? Can you sit on the
No, I've never been able to. I'm very impulsive.
Yeah.
Probably too impulsive.
A little bit too much.
Yeah. But that's what's given me opportunities in life too. So you got to take everything with the good and the bad, as long as you realize that everything's not going to be perfect. Even the S&P is up 3. What's your assumption? Let's look at the first assumption. You ready?
Yeah.
Oh, we had it. I thought you were going to be behind. You were good. You were good. Yeah.
I was slow playing you.
You did slow play me. You did slow play me. Like I wasn't going to do it, and then I have to catch up. Yeah.
You thought I was going to be late, and I wasn't late.
You're right.
I was right there.
Yep.
I was right there.
EWZ is going to be the first one.
EWZ, all right, neutral market.
I just talked about it by mistake. Said EWZ instead of EWY, so they must have heard me.
I like it. So they were looking for, waiting for this level. Ivy looks great here, setting up a neutral strangle in April. All right. EWZ. We shockingly made money to both our prize on that double calendar. Keep in mind,
you did some beautiful scrambling.
I closed the shorts here because they were basically worth
Some would say you were gifted, not I, but some would say.
And we got blessed with about a 7% overnight move, 10%.
Which you can't play for, but
which is the only way you can make money on the double calendar is if you somehow catch that, and that is very, very rare. Okay, so we're thinking delta neutral strangle.
Good Ivy rank of 76.
No, it's just such a cheapie.
It really is such a cheapie. Volatility has been expanding over the last 5 days by almost 10%. If that gets you to pull the trigger a little bit sooner on this trade.
What about just selling the 36 strike puts?
Just selling puts? They're neutral here. Are you going to be bullish in here?
Do you want to do the 36.39? 36.40 for $2?
Yeah. I think you sell both sides. You support Marcus here in Albuquerque, New Mexico.
36.40.
And I would be looking for
50 cents.
Yeah, I was going to say 40 cents. I was going to say $2 wherever you basically sold it. Yes, exactly. Oh, you did the 36.40. Oh, you did the 36.40. You went a little bit for 207.
I mean, which strikes would you use?
Oh, I was doing
36.39.
Yeah, that's what I was looking at, and closing it at $2. Yeah,
tiny bit long double.
Yeah, 50 cents would be a home run here.
Yes, agreed.
Now you're only using in a margin account $200 and $300 in buying power. So I mean, there'll be those who will look at it from a buying power percentage. It's a
for sure
phenomenal trade. So one man's floor is another man's ceiling.
Yes.
Next one, please.
AVGO bullish.
Got earnings.
Earnings
we have
play,
a position.
Trevor.
I think we have short puts in there. Stock's basically unchanged.
Can you do the puts for?
I did for option trades today. It's now in your account. We're trying to get the
we're working on it. We're working
the bad account, but you can always see option trades today every day now if you can find it on YouTube.
Yes, it's on our YouTube.
Yep.
Slightly bullish on AVGO after the pullback. Could be a short-term earnings trade, but I'm fine holding medium term in a regular cycle. Okay. Slightly bullish. How would you do a slightly bullish?
You kind of did it already with that naked put, which uses a lot of buying power. So if we're going to do something else that's slightly bullish in AVGO, let's do it with less buying power if you want to support Trevor in Des Moines, Iowa. Would you do a 2-day trade here? If you're looking at the 2-day options, you got volatility at 57. Ivy rank in AVGO has been unchanged to down small, down 2% over the last 5 days. Still 57 and was climbing up until this point. What kind of?
I think you do if you want it. So the other part of this is
you got a $25 expected move.
Term. So you want to, let's say you can hold this through April. You want to hold this through April.
Okay.
You do something like the 340, 355 call diagonal. You do this April, March. So you have a little bit more time. Until
you're going 16 days, 73%
for the March option.
Yeah, 73% monthly implied volatility. That's going to go into the low 50s, maybe even 40, high 40s. You're going to get 30, 25 to 30 vol point differential. So I like the trade. And
it leans you 15 deltas long right now, but after the earnings, you'll probably have more long delta just because that volatility in the short term is going to contract.
355 is your short strike, 35.
340. 340 is a long, 355 short, yes.
Yep, 355 is a short strike in March with a 35, just rounding here, dollar expected move over the next 16 days. So you're just at or outside the expected move. So what you're saying is that's not going to, hopefully, if it stays inside the expected move up, that option that you're short doesn't really move. The one that you're long can expands, maybe even the one that you're short goes down. So that's what you're playing there. $9.90 of total risk on the trade. And you could double your money if you held it, through the 16 days and the stock goes above 355.
Yeah.
Yeah. So good risk reward. Relatively, definitely a directional trade. Even the S&P is up 13.
Cool. I'm with you. I'm bullish. I think
You see, you supported two people that wrote into you. Does that make you feel good?
Yeah, of course. I try to support them.
Wasn't a trick question.
I know sometimes they get a little,
exotic. Next one, please.
An exotic guy.
C is for Cookie, and Cookie is for me. Citigroup. Sorry, that was just a little harken back to the days of what is that? Muppets.
Sesame Street. Wasn't that Cookie Monsters?
Yeah, Cookie Monster.
Yeah, Cookie Monster.
Yeah.
Muppets, Sesame Street. Yeah.
Same thing.
C, bullish.
Give you the win. Grant, Madison, Wisconsin. Nice area.
All right, so we're going to April. Citigroup. We actually did do a strangle in here a little while back. We did the, actually not that far back. It was only like 2 weeks ago.
It seems like forever with the type of movement.
Seems like forever.
Right?
Yeah.
You age a couple of extra months through these periods.
Seriously.
Mm-hmm.
I kind of like the idea of a jade lizard. We don't trade a ton of jade lizards. So
okay. Definitely a bullish strategy. You know what? Yeah. I like it too.
I think, what do you think about like the 105 put, which is about a 30 delta? You do the 115, 120.
You do it in April, April 17 options, got earnings April 14th. I don't think that matters at this point for this trade. If it works, it's going to work in 2 weeks or so. You're trying to collect over $5. Is that you go $5 wide?
525.
Classic. You're collecting more than the width of the strikes, which is $5. So you have no risk
to the upside.
Very good. Very good. Which makes it a very high probability trade, maybe 75% plus.
Yes.
Top on the trade.
Rocking and rolling here. That's 3 for 3.
3 for 3. Keep it going.
Do it.
Thank you for your support. Next one, please. AAL.
I actually have some long stock here from a cover call.
Stock's up 16 cents.
Oof. Rolling in it.
Rolling it.
Brandon, Los Angeles. Looking at an April bullish position. Looks like 12 is a solid long-term support with IV elevated, either a cover call or short puts. So I have stock.
And you bought it right around here, maybe a
little bit higher, but I did the cover call I did at 12.83, and I scalped out of the 14 call
20 cents
for 20 cents. So I own the stock at 13. So we're out small on it. What do you think about selling maybe the 12 strike puts?
That would be doubling up on the position that you have now.
Yeah.
So what about since you're going to?
I mean, it's kind of near the lows.
Yeah.
You want to do more stock?
No. So I was thinking, I was doing less actually. Why don't you do the 12 put and the 14 call? So you'd be doing the 14 call against your stock that you're long at 13, and you'd be selling your put around 70 cents. It's a 2 delta long spread itself, but you're kind of putting on a synthetic covered call with 44 days to go that you can make $1 on. I mean, it's 10%, less than 10%, but return on.
So you do one put to 2 calls?
You could do that. I was going to do 1 to 1, but you can do 1 to 2.
Oh, so you'd have more.
How much stock do you have?
About 100 shares, small.
If you have 100 shares of stock that you're long at 13, you sell the 14 call and you sell the 12 put. So you're picking up 30, 40 deltas on the put. You're selling 30-ish deltas on the call. You still have 100 deltas on your overall position. You haven't changed your delta position really, but now you've got a much more short premium position. I mean, I like that you have the stock. So you got a covered straddle. Does that make sense?
Yeah.
Okay. You could do that for like $1.20-ish or something like that.
Do this a couple times.
Okay. Okay. You can.
Thank you.
I mean, it's a no delta position.
Yeah,
you already have a long delta position.
Yes. It's just that if you're selling the strangles, you're not technically covered on the upside. Your portion of it is covered. Johnny trade, I like it. AAL, Brandon.
Yeah, it is kind of like a Johnny trade.
Yeah, this would be a good one for a Johnny trade. A couple $100.
It would be.
You do the covered call if you're a little, hesitant.
Yep.
Cool. Microsoft, 45 to 60 days out bullish. I am with you, brother. Brother Scott in Pittsburgh. Microsoft has lagged the Mag 7. Feels like it's time for a catch-up.
Good IV rank of 35 in there. It's basically unchanged over the last 5 days. So it's nice implied volatility. No earnings looming. You have some Microsoft positions on, right?
Yeah, I have. Yeah. That 400 strike put is basically a scratch. But I have a short strangle in March. Actually, let's see what those go to. 257. So I have a short strangle in March, and I have a diagonal spread, the 400, 425. So I'm net long, and then you got that put ratio on the downside.
Okay.
I think that was
mine.
The option trades today. So we've got long delta net. All right, you want to do 45 to 60 day. What about, okay.
Yeah, that 1x2 is in by about 40-ish cents or so. I'm trying to make a buck on it. And Microsoft need a little bit more up to the upside. But I mean, if you want to take it, it's been a loser, it's been a winner. Microsoft sold that 1x2 back on the 27th. It's the 365, 355, and I sold it for 230, and it's trading around 170. I don't know. If you want to free up the buying power, you certainly can take it off for a small winner. It has not. When I put it on Microsoft, I believe it was actually a little bit higher than here. So directionally, I wasn't correct.
What do you think about we sell the 375 put. I'm looking at April. So you do the 375 put, 20-ish delta.
Okay.
And then you do the 425, 440 call ratio spread. You basically do it at flat. So you you're bullish, obviously. You have long delta. But you have a cap on the upside. You have a little bit of you have gamma.
Yep.
A little bit of extra pop to the upside. You hate it?
I don't hate it.
Okay, good. Because
good job out of you.
All right, short put call ratio spread on the upside. So it's synthetically a strangle, but you got
about 70 cents on your oil if you want to close it. Oil down 44. It just traded $74, which would give you a 73-cent profit. It's trading 74.11 right now.
We'll take one at 70 because we did them at 75, right?
Say again?
No, we're gonna wait. So we did that. Microsoft short put call ratio. Synthetically, you're short the strangle, but you have a lot more upside room. It leans you bullish, no doubt. So we're in, Scott. I like it. Next one, please. SPX. What do you think of an SPX? I think today might actually be a good one. You want to do it?
Sure.
Because you still have volatility still high. I mean,
yeah,
coming in, but
even the S&P just rallied 20, so that's going to kind of hurt your entry point here. I got about $39 expected move. It is 9 o'clock. We've done a lot of research. 9 o'clock's a decent time to trade on. Put it in at your price. You mean S&P's up 17.
485.
Okay.
All right. So we did the 68.75, 68.90, and then on the downside, 67.90, 67.75. So we did this 15 points wide, selling the 20 delta.
On each side.
With
your short.
And going $15 wide. Cool. We're in. We're so far, we're basically all of these.
We're what?
We've done all these.
Yeah, no, it's been good. It's been good.
Day.
Yeah, so far it's been great. Next one, please.
Okta has earnings after the close today. Software stock.
I've never looked. I don't remember looking at the stock. I apologize.
You've never looked at this?
I mean, I've never looked at it to trade it. We've talked about it. I mean, it's a stock that's gone from around 100 to 70 and change. The markets are
not good.
Not good in here.
Yeah, these markets stink. You have earnings after the close today. I'm going to shy away from this one. I think there's a lot better plays in the software names that are very liquid.
Yeah, I agree with you.
So I would avoid this one. I'm going to avoid this one. I'm going to pass on this one, Aaron. But thank you for writing in.
Yes. If you're going to do anything here, do it something with defined risk. You know, if you're selling a 30 delta option and going $5 wide, it should trade around 1/3 the width of the strikes. You know what I mean? So try to get your pricing here when these options are, you know, if you go 44 days out, they're $1.50 wide. If you go a little bit tighter than that, they're still $1 wide, just to give you pricing, how to price an option. Got it.
Very good, sir.
Got it.
Next one, please. Netflix. So funny. We had the long shares, and then you get this move, and I sold those calls day 2 of the rally. So we went from 75 to like 85, and then I sold the 90 calls. I was like, oh, this is great. And then all of a sudden, you wake up and it's 97. You're $7 in the money. So I'm basically done with my position here. It's slightly short delta. We put diagonals on to kind of hedge that a little bit. Okay, so neutral April. Closed my longs a few days ago. Good job out of you. Now sitting neutral after this parabolic move, expecting a wide. I don't know if this is parabolic. I mean, this stock is not. I mean, it's not. It's gone up. What would we call it?
Yeah, I mean, I wouldn't say that Netflix is parabolic either. I mean, it's up $1 and change. It's under $100. I mean, if you're looking at it from when it was $75, I guess. Hey, 25% in a week. I guess that's parabolic. I'll give Kyle in Boise the win for that. Sure.
I did the 85-110 strangle.
Okay. Last time it was 110 was back in December, and the last time it was 85. Just to put things in perspective.
It was last week.
It was last week. Right.
Oh, that's okay. But if 85, this has a slightly short delta lean to it.
It does.
85 would be a good, not 85. I'd like to see 90.
Of course.
Thank you, Kyle. We are in with you. Next one. Google has not done anything. I actually I got some long delta there, but I also have a strangle on.
I remember Netflix got that whole breakup dowry, the
2.8 billion.
Yeah, that's why it rallied. Yeah,
that's nothing.
Evidently not.
Yeah. They should pay that out as a dividend. If they do that, they're back at 110. Yeah. They announce a special dividend. That would be smart. All right, Google, bullish, long term. Gemini is gaining.
Wouldn't be smart for the strangle you just sold. But
no. I would be in pain, but It's okay. Gemini is gaining traction while Google hasn't done anything terribly wrong. Short term, neutral, long term, bullish. Okay. So I actually have your short term neutral. I'm short the strangle. I added a diagonal spread, which is April, March, which leans a little bit long. So I actually have your sort of thinking here. I'll give you what I'm short. I'm short the 275, 340 strangle. And then I'm long the April 310 call and the March 320 call. So my net delta on this position is pretty flat at this point, slightly long delta, but I'm with you on this trade. I think it's an interesting one. I think even adding like a diagonal spread here. I mean, Google, it's down, I guess when you look at the numbers, it's down 10% from the highs.
Yeah.
Had a big move.
Yeah.
I don't know if I want to add to it,
but languishing near its recent lows. I mean, lows that it hasn't seen since November of last year.
I like the idea. I have it on strangle and a call diagonal.
IB rank at 22 really doesn't make it too much of a premium selling. Maybe for those who don't have positions on some sort of diagonal trade, you don't have a big vol differential, but maybe that's the way I would play it on a $300 stock. Doesn't have earnings until April 23rd. Crowd.
I close out of the strangle, the 350, 430.
915. You got
I did that at like 1260. It was like $350 out of that.
Nice.
I sold the put, and then I sold the put. The software stocks had a face ripper to the downside, and I was like 20 points in the money, and I sold the call. So I made a couple dollars on the call, and the put obviously.
A nice scramble.
By dollars, I mean like cents in option speak. Like I made like 25 cents on the call, and all of it was really on the put bouncing back. So
got it.
And
got it. Good
but I
job,
still
Eddie.
have the long call from the diagonal spread. I'm out a couple bucks there. I'm gonna let that sit, see what happens.
Beautiful.
All right, so I'm in with you, Justin, on this, but I'm not a new position. I'm already in it.
Got it.
We're thinking same, but different.
Got it.
Next one, please. Next one.
JD.
Oh no.
I think this is a Liz favorite.
I have this.
Down 37 cents. I might have earnings coming.
Yeah. Near 1 year lows. I have laddered puts, which don't look great here.
Mm-hmm.
Stock is getting killed.
Earnings are March 5th, I believe. Laddered puts, stock's down 37 cents and it's making its lows. $25 stock. What are you looking to do?
Do something.
Really cray-cray?
Because I hate trading these. I hate trading these China stocks. I'm gonna just buy 100.
You inherited that from your father. Okay, I hate.
No, I didn't. This chair gave me that. The chair gave me.
No, he liked trading.
He likes trading these. I don't know if I.
That's why I say I
just
don't.
bought 100 shares of stock.
Mm-hmm.
Well, I've had the ladder puts, so
it's basically a well, I call it a stupid, but
it's definitely a stupid.
You're just adding long delta.
Yeah.
And it's not the long delta that's stupid. It's just that you already have that trade on,
Yes.
so you're really just adding to it.
Yes. Solidarity with you, Sean.
Mm-hmm. Yep.
So that's it. I think that was about as good as it gets from a.
Yep. We passed on OKTA, right?
Yeah, that was it.
Yep.
That was the one. That was the only one we said, meh.
Yeah, well, the team's got it. I got it up there.
Yeah,
Look
they
at that.
got it. They know us.
Didn't have the markets that we need. Even the S&P is up 29. That's about as high as they've been, just a skosh off of their highs. Volatility in by 65 cents on its lows too, so that's cooperating. Nasdaq up 240, 25,000 again. Get your 25,000 hats back.
Get the hats out
on the Nasdaq. I mean, it was 26,000. It was down to 24 and a half or so. So, sorry, 24 and a half or so. So still relatively lower end for the Nasdaq, right in the middle, lower end for the E-mini S&Ps. Russell doing the same, right in the middle, lower end of its most recent range, and the Dow is probably the weakest of the group right now, at the lower end of its range. Even the S&Ps up 31, that's a new high or close enough to it, and bonds down 10.
Is it over? That's my
Liz, I did the show with yesterday with Liz. I was talking about the upside seems to be the path that nobody's talking about. Like it's the hardest trade to get long the market here, I thought, at least from the crowd. And it's almost like being short oil. It's probably the hardest trade to make, probably the reason why you should make it. And the same thing with the upside. But we've had both. I don't want to toot my horn. We've had both sides.
Yeah.
We went down to 67.70 and change on the E-mini S&Ps last night, and we're up to 68.50 on the E-mini S&P. So what does that prove? Nobody knows nothing, and there's opportunities on both sides of the market. Premium has been high. Let's concentrate on that. It's in by 3% with the market really doing nothing. So maybe we've got that chop fest that we've been talking about we might get in a tighter range, which would be a nice breather for the years that we've lost off our life in the last couple of days.
Yeah. I like it.
When you least expect it. Let's take a quick 90-second break and come back. We've got more Tasty Live after this. We've got, fan favorite, Mr. TP, and he's up right now. We've got his camera all beautiful. He looks so handsome. You want to watch this in about 90 seconds, Tasty Live. Growing up in Brooklyn, New York, in Bensonhurst, Brooklyn, where I was born, there's no social climbing of the ladder. So if your father's a bricklayer, you become a bricklayer. If your father's a doctor, you become a doctor. If your father's a hoodlum, you become a hoodlum. My dad was, he was an original market maker, let's put it that way. Only not an exchange-regulated entity. My mom was a waitress, just trying to make ends meet. My parents were divorced when I was 11. And my mom did everything. Legit did everything for me, but I idolized my dad. I was a good student. I didn't want to disappoint my mom. I was boy leader of Arista and Archon, which is the honor society in junior high school. I wanted to be a police officer or an attorney. And then I realized we were on the opposite side of the street to become a police officer, but that my dad was going to need the attorney, so I wanted to be an attorney. I did go to college for 3 months. I became the best air hockey player that John Jay College of Criminal Justice had ever seen, but I wasn't learning anything, and I just didn't think I was going to go anywhere. So I had a cousin who was working on the New York Stock Exchange, and they transferred him to Chicago for a new exchange that was opening up, the Chicago Board Options Exchange. He said, hey, why don't you stop hanging out on the street corners, come out here and I'll get you a job, maybe make something of yourself. I left on a Thursday. I started working on a Monday as a runner. I always thought when I bought my seat in 1987, I actually bought my seat the day of the crash, that there would always be a Batista on the floor of the CBOE, and I thought that was my legacy that I was going to leave to my family. And then computers came along and ruined all of that. I coached my son in football and baseball and basketball, and my dad never did that with me. So I always wanted to be a good parent, do the right thing. And I thought, at 18, he would be the first one to go to college, which he was. My job was done, and to have him come here and then teach him, my craft, it's one of the most rewarding things I've ever done. Traders for all eternity have been looking for the reason to make a trade, whether they were looking at charts or they were looking at fundamentals. They just had to figure out what direction the trade had to be. With the research that we provide now, we kind of take the direction out, because it's just a 50-50 shot, and say, what's the best strategy that we can apply? I mean, there's so many smart people out there. I mean, I'm not the smartest guy out there, and Tom's not the smartest guy out there. There are so many smart people out there that just need a little bit of knowledge. So I think the future is bright. Where we go, what direction, I don't know, but we're going to change the world.
Look who's backtesting. tastytrade now has options backtesting for free. Test your trades with over 10 years of data for the most popular symbols. See how your trades would have performed in the past. Look back at profit and loss and take the guess out of guesswork. Oh, did we mention that it's free? Get backtesting at tastytrade.
So I see you're taking an interest in open interest. Open interest, open trades. It's right there. Imagine all the trades are in XYZ at the same strike and expiration. Day 1, Brittany buys 4 options to open a trade. Dean also opens, but he only buys 2 options. And then, closing bell. Day 2, open interest is 6 because of yesterday's trades. Now, Jessica gets in on XYZ, and she buys 2 options. Day 3, since no one has closed any trades yet, open interest is at 8. Watch this. Brittany closes her trades, Dean closes his, and Jessica keeps her eyes open. On day 4, open interest is now down to 2. That's because Brittany and Dean closed their positions and there are only 2 still left open. That's how open interest is different from volume, and both of them are parts of liquidity, which is something we look for before we enter into any trade. Pretty simple.
Ready to take your trading skills to the next level? Dive into the world of stocks, options, and futures with tastytrade courses. Whether you're a beginner or more advanced trader, our courses can empower you with the knowledge to succeed. Watch as our team in Chicago shows you how to use the tastytrade platform and go over the basics of trading. Perhaps you'll learn about a new strategy or a potential product for your portfolio. To find our courses, go to the Manage section of our web platform or head to courses.tastytrade.com. Start taking control of your financial future. Visit our courses today.
tastytrade has crypto, and you can trade with 0 commissions: Bitcoin, Ethereum, Litecoin, and more. Diversify in one place. Crypto, we got it, we get it.
Beat the opening bell. Get trade ideas and market insights before the open. From the creator, Tom Sosnoff, and our chief market strategist, Tom Preston. Every weekday. Sign up at tastylive.com/newsletters.
global markets never sleep. Explore them with Forex on Tasty Trade. Get in on 80 plus Forex pairs, 24 hours a day, 5 days a week. FX marks the spot. Trade it on Tasty Trade.
Hello, everybody. Well, this is the Bull's Revenge today. We got a very green day on our hands. The incur is up about 400 points. Everything's green. And the strongest one is the incur. The weakest of the big equity indexes is, I guess, the Dow. The YM is up about 0.6%. That's okay. That's okay. I lightened up considerably. Lightened up even more this morning. And later on in the day, once things were good and strong, got into a few more positions. So yeah, I had dialed it down to like under 50%, but I'm up to almost 100 again. as I say, trying to take advantage of this strength, which I think is kind of ill-advised right now. The strength, not the shorting. The big event this week, war notwithstanding, is a Friday morning's jobs report. And the uncertainty of war is the looming fact in our lives now. I just did a video last night on Slope where I was talking about how poor folks are at estimating how long war will go on. My understanding of history is that typically any war that starts, people, they don't say, we're at war, this will probably be 5 years. No, it's usually like, this is going to be weeks. This is going to be 2 months, some modest amount of time. Like the American Civil War. I believe during some durations, like, there's just another month or so to go. And that went on for 4 years. The only exception, it seems, where it went the other direction was in 1991 with the first Iraq War. And in that instance, there's a lot of media hand-wringing because the Vietnam War was the last major conflict we had been in, and that was, that's where the word quagmire practically came from. And as the Iraqi War approached, there's like, this is going to be another Vietnam. We're going to be there for years and years and years. And in a way, they were right, but they were wrong about the war because the war lasted like a day, and then it was over. So suffice to say, we're always wrong in one direction or another. And so when this war began, or kinetic exercise, or whatever euphemism they're giving it, it's been said, this will last a week, and it became several weeks. And I guess that might just keep going on. A lot of uncertainty out there. Markets typically have a disdain for uncertainty. It doesn't seem too shaken up by this one. I mean, witness today's market, things are recovering. Indeed, the NQ is higher than it was before the war began. So it's completely recovered. More than 100% of that drop, poof, gone. But we shall see. I've got more aggressive on the bear side, and we'll see if that works out or not, as it has in the days prior. Let's jump into the charts. We begin with the diamonds, which is kind of, I used to always start with the spider, but now the diamonds become my go-to obsession because of the clarity of the chart. As I said yesterday, we did get below support. We rallied. We closed above support. That is to say, this blue line. We are rallying some more today. Interestingly, the low today was just, look, this is amazing. Both, I guess, Monday and today, the lows were like just exactly at support, which I think affirms the importance of that line. And this line here is the gap, which is a very important resistance. Okay, well, what if we get above it? Is the bear case over? It's damaged, but not completely. The real test is this line here. The failure of that Liberation Day line was the real key. This top is kind of icing on the cake. So resistance here, support here, and mega resistance up here. The small caps are also up a little more than 1%. They cracked below their trend line yesterday. They're above it again now, but there's damage, and I think we're going to see that damage express itself in the days to come. Emerging markets, EEM, are also up about the same amount, 1.2%. And I looked at my own charts, that is slope charts as well as tasty charts, and they both have this giant shooting star. So maybe it is accurate because that's two different data sources, and they seem to agree. If it is accurate, this is an amazing shooting star, and kind of makes sense that we fell so hard. So we had this on, what would that be, Friday, I guess. And we had our fall on Monday, and then the big fall yesterday, and then the beginning of the recovery today. Resistance in this case would be, again, a price gap. That is to say, the price gap between Monday's low, just Monday's low period. That's the price gap. You don't need two data points there. EFA, another outside the U.S. Guide, is right at the trend line. That is to say, it's grasping hold of that broken support line. Just for fun, let's sauce this up a little bit with some different colors because it just helps clarify things. So the major resistance had been up there. Oddly, there's no straight up red that I can see at all, but that's pretty good. That's red enough. But anyway, huge fall, particularly South Korea, as we talked about yesterday. I read that it was like one of the biggest overnight drops in its history. And then we've got a gap on this one too, which is right around there. So in this case, there's two major price gaps, obviously. So let's just put another one there just to kind of keep things tidy. So that's been our big gaps on EWY. EWJ, Japan, same deal. Sorry to be so repetitive, but the international markets are very consistent these days. Japan had been ambling along in this channel. It burst above it with tremendous force. Everybody was running around talking about Japan and South Korea back in these days. Settled down, had our gap down. So a couple of weeks back, this is all I talked about when it came to this. This gap was key, and then fall. And so, you know what? Let's be a little more conservative. Let's focus on this gap instead. Because that is substantial. So that's the first important point of resistance. And I'm not showing it here, but on the NQ chart, if you look at it over the course of, let me see here, from Feb 26 to date, it was hitting a certain level time and time again, 25,101. And so it kept going conk, kept hitting its head on that resistance level. It defeated it today, which I do not celebrate as a bear. It did beat that today. So that's why I said earlier, we're at price levels now that we were at, not just before the war, but like last Thursday, before even I was talking about this stuff. And we are above that level. And we have, over the past, when did we peak on this? About 70, 80 minutes ago. We have been slipping on that slowly. We're still above it. My point is, if we slip below that level again, that's kind of a cute little failed bullish breakout, something worth noting. So we have shaved off some of today's gain in the past hour and a half or thereabouts. With all this going on, of course, people are settling down, they're calming down, volatility is diminishing. Here's a UVIX, and it burst forth yesterday, and then we're back into the saucer again. So, and you've seen this sort of thing also like in FNGD, the triple bearish on the FANG stock fund. This nice rounded bottom that we're trying to break out of. FNGD is not quite like this. It's fallen really hard in the past few days, and is approaching what I think is important support, which is why I bought some. I bought a lot today, which is kind of crazy because it's triple leverage, but yeah, going to give that a shot. The big earnings news last night was Crowdstrike, CRWD, and it was funny watching after hours because first it blasted higher, then it collapsed lower, and then it went to like almost unchanged. So I'm sure those with aggressive options positions, owners, not the sellers, are probably pulling their hair out. As it is now, it did wind up rallying, so it is up over 3%. We still have a general downtrend going. As I said, I didn't have a position in this, so I was sort of able to look at it pretty objectively. But you can quite plainly see that this rally we've seen is no different than this one or this one, any of these other counter-trend rallies, because this has been kind of scalloping lower, like a bouncing ball for a while. What else is cooking? We've got about 5 minutes left. Let's pick up the pace, Tim. NVIDIA didn't have earnings, of course, but I think it's worth noting because of a certain price level right along Boink there. It's a gap that took place last week, and it's kind of a midline in this long grinding range we've been in. NVIDIA's been really a dull stock lately. Incredibly since like August. I mean, that if you look at the line, we just kind of ambling like the Mississippi River, meandering in little tributaries there, here and there, left and right, and not going anywhere. So, I mean, net, we're at the same price now that we were back in July, end of July. But just putting that line there is kind of a guide to see whether the bulls or bears are taking control of it. As it is now, it's just neutral as we reach a point of equilibrium. The SMH, of course, has NVIDIA as its biggest component, but the broad semiconductor index has broken support. It has broken its ascending channel. And we are rallying today, but take note, today's high just below the broken resistance line now. It used to be support, but it's changed roles. So that's pretty spiffy. The cubes, as I said, this is the strongest index today, and it too has been meandering for many, many months. And there's no real clear pattern here. At this point, I would say the only a slightly important price point to take note of would be right there, which is the most recent multi-week high. We'll be a little more generous with this. It's just a little bit higher, but let's just say that I would say is the important resistance level, because we've been banging underneath that for a few weeks now. As far as gold goes, pretty tepid day, relatively speaking. GLD is up less than 1%, and it's kind of settled down from the mayhem we'd seen recently. But the more interesting one, way more interesting, is finally Bitcoin gets its day in the sun. Bitcoin's having a tremendous day, up over 5,300 points. And in this case, the gap, the resistance, is way up around 81,000. So as I said a couple of days ago, I had thrown my arms up at being bearish against Bitcoin because it was just too much upside potential. This is exactly what I was talking about. This is something I would not want to be in on the bear side. And so, but it's important to watch just because it is such an outsized influence on risk on, risk off psychology. Just in passing, I'll mention that IBIT is a quite heavily traded ETF, which one could employ to take on positions in this. There's the equivalent price gap on that one. And then the upside down version of that is BITI, B-I-T-I, which whose own gap worth watching would be round about, is it that low? I don't think so. Well, we'll just leave that there for now. That was an interesting price gap, which we've matched up against today, but I'm staying away from all this stuff for the moment. Too saucy. Axon, AXON, I went ahead today and shorted that again, tilting at this windmill, because I really do, as with Crowdstrike, look at the downtrend, look at the lower lows and lower highs. And we're well past earnings on this. We are triple digits higher, 200 points, $200 higher than we were recently. So that's, I think, worth a bearish play. HAL, that is Halliburton. This is reversed nicely away from its own piercing of that price gap, so I'm short that right now. Monroe, another good day. MNRO, down a little bit, not quite 0.5%, but again, with the market so green, not a bad defiance. And then Royal Caribbean, that short's looking really good today, down about 3.5%, still above the trend line though. So I will definitely make a point of telling you if we break that. A couple of interesting ETFs out there, because their price gaps, XLB, materials, there's the price gap like so, and that's Dookie. And XLP, same. There's a similar price gap there, so those are worth noting for maybe a short-term ETF play. The only earnings of note tonight is Avgo, that is Broadcom, and we have a pretty decent top on this one, and I'll be watching it closely because I've got a short position. Nothing huge, but it's important to me to see if this breaks down, because that'll help contribute, I think, to a resumption of any tech weakness. And with that, hooting and hollering, that's my signal to go. So I hope you're doing all right in this volatile market of ours, and I will see you here tomorrow. Thank you for coming by. Bye-bye.
Forbes called us best online for options trading. Investopedia, best for options trading, period. With stockbrokers.com, we're #1 for options and futures trading. The Motley Fool really likes us. And so does Business Insider. So what else can we say other than boom? Trade like a trader. Tasty Trade. Make your move.
Your crypto needs a wallet. And crypto is better when it's tasty. You can now do more with your digital currencies with the Tasty Crypto app. We're proud to offer a self-custody wallet for Bitcoin, Ethereum, and Polygon. Transfer your digital tokens directly in-app and access thousands of tokens available only on-chain. Your wallet is your key to decentralized finance. Download the Tasty Crypto app and get started today.
Global markets never sleep. Explore them with Forex on Tasty Trade. Get in on 80 plus Forex pairs, 24 hours a day, 5 days a week. FX marks the spot. Trade it on Tasty Trade.
Ready to take your trading skills to the next level? Dive into the world of stocks, options, and futures with Tasty Trade courses. Whether you're a beginner or more advanced trader, our courses can empower you with the knowledge to succeed. Watch as our team in Chicago shows you how to use the Tasty Trade platform and go over the basics of trading. Perhaps you'll learn about a new strategy or a potential product for your portfolio. To find our courses, go to the Manage section of our web platform or head to courses.tastytrade.com. Start taking control of your financial future. Visit our courses today.
Grow a strong community with Tasty Trade's referral program. When your friend joins Tasty Trade, you'll both receive $100. As your community grows, you get more bonuses. Only at Tasty Trade.
Got trader's block? We've got the cure. Get data-driven trade ideas with Cherry Picks, our weekly newsletter that gives you insights into the market. Sign up at tastylive.com/newsletters.
Got friends? Get $250. We'll give you a bonus for each qualified person you refer to Tasty Trade. So spread the word and earn rewards. Terms and conditions apply.
Ring the alarm, hey, ring the alarm, boys. Turn up the charm. Listen up, y'all. Get out the damn stall. It's the last call. Hey, the last call. The last call. The last call.
Tony, we're back. It's still Wednesday, March 4th, 2026. This is the last call. You're watching Tasty Live. I'm your host, Chris Vecchio. He's your co-host, Tony Batista. Tony, what a day. Really haven't done much this afternoon. Let's get into it quickly here. S&P 500 up nearly 0.9% right now, 68.83. Volatility has come in. I'm looking at a 26 IVR here on my chart. That's nearly 60 points. The NASDAQ up 1.57%. Your Russell up 1.2. Nice day for Ethereum, for Bitcoin, both up strong. Bitcoin 7.5%, Ethereum 9.8%. With stocks rebounding, Tony, our beloved US dollar getting a touch weaker here on the session versus some of its counterparts. U.S. Treasury yields are selling off maybe in a risk-on move, where gold and silver aren't doing much either. It's really all about stocks and the fact that oil has not been able to rally throughout the session as the headlines and as the eyes remain on Iran. 75.20 cents oil here. It's only up by 0.8% right now. Sector rotation-wise, though, good day all around. We track 25 sector ETFs here, at least I do. Don't want to speak for you, Mr. Batista. 4 of the 5 that are in the red are energy related. The one that isn't, staples. So pretty good day for this market coming on the other side of what have been 2 days of nice two-way trading. Tony, are you surprised by how this market just got up and stayed up this morning? We really haven't done much the past few hours.
Well, sure. Before we talk about the market, you mentioned oil, and that seems to be on everybody's lips. IV rank of 109. It was in the 120, 130 handle earlier today, so it has come in a little bit, but not a lot. So the world is still at your oyster there if you're looking for any trades in oil. I got a bunch of emails about that as the play over in oil. Oil's not over with, at least as volatility is concerned. I don't know what price is going to do, but at least as volatility is concerned. Now let's talk about the market, because that's what I like to talk about a lot more. That's where I live and breathe. Chris, I don't know how much you watched last call yesterday, but I was on with Liz and I was pounding the pavement looking for 69.20 or so. That was just a number I threw out because we were around 68.20. I said a much higher chance of 69.20 versus 67.20 where we were just yesterday. And I only said that for only one reason. And volatility was high, so we're both inside either range. Maybe your lines on some of your charts will show that at that time they were pretty much, I could have equal 50-50 shot on either one. The reason why I thought we were going higher was I just said to myself, the market always does what you least expect it, at least for the short term. And yesterday, after the market action, the way we've been so weak and the way we made new lows, I think it was an easier call to say that, the market was going to get a little bit heavy here, retest those lows again, not, get back above its mean of the 6850 or wherever you want to say the mean is for this big channel move that we've had over the last 2 months or so. I just thought yesterday was the last kind of hurrah in volatility, getting up to 24, 25. I'm talking about /VX. And I thought short term, 24, 48 hours, that we would get a little bit of a relief rally. Now, today, I got nothing for your show. Yesterday, I shot it all. I have no idea what to do right now. I guess I would look to sell premium on both sides because 21 is still relatively high. I'm talking about /VX, still relatively high for premium selling on either side of the market.
Yeah, 21 VIX here, volatility /VX. The VIX itself, I should say, is coming to about 21 as well. Just bounding around that number. So we haven't really gotten back to where we were on Friday at the close, even though stocks have crossed that Rubicon. There's no real big standout thus far today in terms of options volume, as Frank's noting here on the screen. In terms of those numbers, SPX is at 4 million. Your triple Qs are at 5 million, 2.4 for Tesla, 2.6 million for NVIDIA, 1 million for Amazon, which is double the norm. I suppose that's something that we could just take a quick look at here. The Mag 7 stocks are having a good day. Amazon up by 4% right now. And the NASDAQ itself is the leader on the board overall. What do you make of this market where tech leadership is back in vogue? And do you want to comment on the irony of software being the leadership group?
I don't know about just the irony of software being the leader group, but it is encouraging when the NASDAQ and the E-mini S&Ps are the leader, although the Russell and the Dow are up almost as much today. Now they've been lagging a little. NASDAQ's been lagging a little bit. It's catching up now, which is nice. I mean, the NASDAQ took us to these highs, which, by the way, we're right where we were January 1st. I mean, the whole, violently unchanged is completely right. I mean, the E-mini S&Ps are right where they were at the end of the year, beginning January 2nd of this year, but volatility is not, right? And the last time, one of the more recent times we were back at this number, 68, 85 or 90, wherever we are, was February 24th. And February 24th, we were coming from volatility that was, in its 20, like 19, 20, coming up to 21. Different environment than when you've come from 24 in volatility like we were yesterday and coming down to 20. I think it gives a little bit of, maybe 60-40 bulls here, but it's not. I don't have a lot of conviction like I did yesterday. We've been getting a rotation in stocks, meaning Russell gets a little bit weaker and the Nasdaq gets a little bit stronger, and then it's vice versa. And you might kind of see a little bit of that action tomorrow. I mean, I think for a healthy market would be a chop around 30 handle. E-mini S&P move, something that we have not seen in what seems like forever, but it's probably just the last 7 to 10 trading days.
You mentioned the Russell here up 1.25%. It is kind of emerging as a silent winner today after all this is said and done. I'm trying to figure out if this is just going to be a relief rally or something more, because I do recall last week, Tony, we were all worried about the AI SaaS apocalypse and even private credit issues starting to bubble up, hitting some of those names in banking. The regional banks had a really bad day in KRE not too long ago. We're looking at Apollo or KKR. Those names have been really down in the dumps. They're off 20, 30, 40% over the past several weeks. Do you look at any rally opportunity as a reason to look to maybe fade it, perhaps as we head back to all-time highs in the S&P, if that were to occur?
I like IWM to trade. I don't like when E-mini S&Ps, NASDAQ, IWM, the Dow all have around the same IV rank, basically the same implied volatility as compared to themselves. The Russell's the last place I like to go, and I'll tell you why. SPY has SPX. You got big players in SPX. You've got medium and small time players in SPY. The markets are really deep and liquid, and they come with some velocity to them. when you look at, the Russell, you've got IWM, which is good markets, not as good and deep as even the S&Ps and even the NASDAQ, which you have the Qs and NDX. RUT, you don't have any big players, I don't think, relatively speaking. You don't have the big players in the Russell as you do the even the S&Ps and the NASDAQ because the products aren't there to support it. That's just my own, I don't know, maybe my own naive way of saying Russells and the Dow are the last two things that I like to look at.
Fair enough. I mean, the Dow, for your perspective, at least the futures, there aren't listed options on the platform, so why would we be paying much attention to it at all? I'm curious. I want to go through some of those high option volume names here that are on the platform, Tony. When we take a look at this market move to the upside, it's a lot of the familiar faces. Your NVIDIAs of the world are making an appearance here. They, like the market, feels like violently unchanged thus far in 2026.
Yeah.
It's also listed IVR is a little bit lower than the broader market right now. So I think the places where traders may want to look, like an NVIDIA at 21.5, that's below the S&P. Mm-hmm. How do you pick and choose where to place your capital when you have this general rise in vol, even at the index level? Do you prefer more index trading, or do you look to the individual stocks themselves?
Yeah, I actually mentioned this really early on in the show with Nick this morning, and we didn't really run with it or talk about it much more than just casually mentioning. I think it was on a confirm and send, if I remember correctly. I said when volatility is high like it is now, if you want to kind of smooth out your volatility curve a little bit, you can forsake the individual names and go into the ETFs. Like, if you're a newer trader and you're looking to sell premium and you're looking to do it for the first time kind of thing, or you've been doing it for a while, but you're still not certain about it, I think going into the ETFs with high implied volatility right now kind of makes the volatility play more muted, a little bit smaller than if you want to do individual stocks, if that makes sense, because you have outlier moves in individual stocks, and you also, they don't have to follow the market. If you're trading, SPY and you get the move correctly, it's going to go in that direction. If you're bullish, SPY is going to be S&P 500. It's going to go higher. I mean, that's easy stuff.
We've been talking about the dispersion trading here, Tony, across our morning note, across the Tasty Report in the morning, here on the show recently. The fact that we're looking at a market where you're seeing single stocks move so discordantly across the board, it actually made Citadel's morning note today. The way that they measure this is the SPX constituent average 30-day move minus the SPX absolute move. This is the most, we haven't seen this kind of move in many years, since 2009. Mm-hmm. So in terms of this dispersion, we're in the 97th percentile over the past 30 years. It really is a stock picker's market, is the point that they're trying to get at right now, where if you're looking at the indexes, you're not really getting the full picture of what's actually happening. There's a lot more movement than what S&P or NASDAQ or even the Russell is suggesting if you're simply just looking at those charts.
Yeah, nothing to add there. Totally agree with it, though.
And Tony, before we go any further, I think we could go to the production team and maybe refer a friend. We're hitting the halfway mark here.
Sure. Go ahead.
Yeah. Maybe we'll get that lined up. But while they're getting that lined up, Tony, just a quick check here. Markets are holding up as we head into these final 15 minutes of trading today. I do see that came on the screen, guys. Thanks. S&P 0.9%, NASDAQ up 1.66. Your Russell up 1.3. You can go back to refer a friend. We'll hit it now. tastytrade.com/refer a friend. Referral and referrer. They each get $100, Tony. I can't refer you, though, which is unfortunate. Otherwise, we'd have a nice little gig here. I'd wear my Groucho Marx mask and mustache, Bobby Valentine, right? Which, if you're in New York this summer, by the way, the Mets are doing a Bobby Valentine Day giveaway.
Oh, wow.
For the fake mustaches.
Very nice.
Yeah, just embrace the team lore. It's a good thing.
Why not? Hey, will you do me a favor? When you look at the high option volume list, will you go into instead of high option volume, just the S&P 500 for a quick second? Because I think you're going to find this interesting. With the S&P is up 1%, 60 some odd handles. And by the way, we were able to close our SPX trade on that little dip down when the S&Ps went from up 60 to about up 54. So end up closing it for around 440. I think we sold it at 485. I think it's trading closer to 585 right now. I believe we sold it at 520 20 or something like that. So it was a small profit, even on a big 1% move today. At least the SPX 0-day worked out small. No, go to a list, please, of
sorry.
That's okay. Of the companies in the S&P 500. And by the way, I just realized something while you're doing that. You're probably the reason why my son has lines on his chart. Is that true?
That's possible. I've been.
You did that to my son? Look what they did. Look what they did to my son. Look what they did to my son. You remember who said that? What movie?
It's Look What They Did to My Boy.
Oh.
So, do you know what movie it is?
The Godfather. Yes. Look what they did to my boy.
Yeah. So, all right. I'm in your watch list here, Tony. Highest IVR on the board right now. This is the S&P 500. So all the companies within it. There's one name in here that I really like, which is Corning. But you're seeing some interesting names as well that have stuck around, and because they're part of the AI trade, like an Oracle with its 87.8 IVR. Are you thinking that this is a good environment to maybe bottom pick in some of these?
I've been bottom picking Oracle now for the last month or so. I think I'm violently unchanged on all of those trades too, and it really cost me some more gray hairs. So Oracle is one where I will probably put it in my Japanese yen pile of last things to trade if I have to. No, I want we just go to the S&P 500 list of like a high option volume list in the S&P 500, just a net change. You'll notice that, with even the S&P's up 62, you don't have just about every S&P stock higher. It's really about, I don't know, 300, 200, just eyeing it, maybe 150 higher. I'm sorry, 150 lower and 350 higher. You've got some names, Royal Caribbean, which you could imagine is going to be lower by around $13 with all the things that are going on around the world in the water. But you got, Ulta, CME Group, which I'm surprised. CME Group down around $5 and change. Lockheed Martin, down $5. I got a lot of people talking about, kind of the war trade, which you had on, I believe, a little bit earlier. And it's just a skosh off of its highs. But it's interesting that over the last 3 days, it's gone down LMT and not higher with everything that's going on in the Middle East. Classic, at least for me, of buy the rumor, sell the news. And you bought the rumor. Hopefully you'll sell the news if you haven't or already. But it's just interesting. When we were down around 80 or 90 handles on that big move lower, I put up the S&P 500, and I think there was only 2 or 3 stocks that were green. So it's still got some room to go. Like, not all the participants are going higher right now. You still got, if you're a bull, you still got some room to go. And if you're a bear, you could say, well, this isn't enough because it's not really broad based. It's big names like, or big moves in coin going up $27 and AppLovin going up $40. MU up 20, which to your point, going up $20. I mean, MU had a $20 range today. I think it opened pretty much unchanged or lower, right?
Hey, we're basically back to where we were. We opened up on Monday.
Yeah. Tesla up $15 or $16 now, over $400, 407. That's one that's been stair-stepping down no matter what the market has been doing. So
we get to do the fun narrative now that oil prices are high. People will buy electric vehicles.
Is that yeah, that's all such bull crap, but yeah, sure.
Yeah, just wait for it on CNBC. You'll hear it.
Yeah, I'm sure. Oh my God, I'm getting emails. They're telling me I'm a disgrace. It's my boy, not my son.
Tony, one of the fascinating things about the stocks that are down today, they seem to be things that require the goods to float on water, which there's a few headlines that UAE, for example, or rather Qatar, they've announced that they're going to shut down their LNG production. For traders who usually operate in the stock realm, for me as a futures trader, knowing a little bit about how these operations work, these aren't like turning on or off your faucet at home. It's going to take 2 weeks just to restart the production when Qatar decides to turn back on those switches, and then another 2 weeks to get that gas to port to the market. So you're talking about a month now delay from whenever they decide to restart production. And so if there's not going to be shipping to a number of these countries, I don't know. In 2020, didn't we say 15 days to stop the spread and like trade will calm down and we'll just pick it right back up? But that had so many significant effects for a number of years. I think that we should have very loosely held opinions in this market right now. And if you have the stomach to trade it day to day, it's probably a better way to go about it than how I typically do, which is like, let's think 60 to 90 days in the future.
That's your game. I like the cerebral thought about it. That's your game. You like to play that kind of longer term why kind of thing. I'm too impulsive, man. I wasn't even divorced yet, and I was getting married. So I'm impulsive, man. So for me, I got to look at what's happening right now in the overall market, and I'm more annoyed that we just sold off about 8 or 10 handles because that SPX trade that I held all day long is now going to be a full winner. So, man, you got to have stronger hands than me to trade those SPX when they don't go your way.
It's funny that you mentioned that marriage thing. I'm rewatching, following Jamal's lead and rewatching Mad Men right now.
It's a good one.
People say that you are the Don Draper of Tasty Life.
I haven't heard that, but I'm gonna take it. I think I'm a little kinder than him. I mean, he was kind of a prick.
He wasn't nice, but you don't want to be like the Burt Cooper of Stacey.
No, I don't want to be the Burt Cooper. No. No, I'll take it. I'll take it as a compliment too. I'll run with it.
Yeah. Tony, 8 minutes left to go in the trading day here. We haven't touched on bonds, which bonds themselves have had a buy the rumor, sell the news type of reaction to all this. How do you trade this right now with a 7.2 IVR sitting at the long end of the curve? It feels like, given the broader market and all the action elsewhere, this probably falls to the bottom of the pecking order in terms of places to look to place capital right now.
Yeah, I mean, you got an IV rank of 7 now. I think it was 10 or 12 or 14 at one point, which was still anemic in my mind. You have to trade them directionally, and I think you have to trade them small, and you have to have conviction. I think you have to kind of wait for the move, and they seem to be. I mean, obviously, you can say that they're in a very tight, wide range here from the lows there to the highs there, but really 117, 116 and change. I mean, I think that's about the mean for the last, I don't know, since the beginning of the year, maybe December till now. I mean, I don't see them as any, and I can't, and you play the macro view much better than I do. I can't give you they're not cutting, they are cutting, they're going to cut, they might cut, scenario whether rates are going to go higher or lower. It was interesting. Vanetta brought up that, I forget who the company was now. Maybe it was Open. Who's allowing like under 5% mortgages, and the rate is around 6%. Now I don't know if that's telling you something, or they know something, or anything else like that, but it is interesting.
Interesting.
Or you could say that there's 1% or more of fat in mortgages that people like you, I, and everybody else who goes and gets a mortgage is getting ripped off for. Because you can't, unless they made some humongous play when rates were 3% and held it all this time and have had a little bit of an arb here, and they're going to, try to, get something with a 5%, try to attract some customers or something. It means that there's a full point of, bullcrap fees when we go get a mortgage. That's what it means.
Yeah, well, mortgage companies factor in refinance risk in the mortgage rate, right? So above a certain level, they're like, well, if this thing comes down, they're going to refinance it. If you're at like a 3% mortgage already, they're like, what's the refinance risk? It's going to got a 2.8. They're going to go through all that paperwork for it. But at like 6%, you go down to 5.5, you go to 5, you go to 4.5. Like that makes a big difference in terms of the monthly payment.
Mm-hmm.
And maybe I should be looking at properties then, because a 4% mortgage would be lower than what I'm at right now.
No, 5%. It's like 4.99, under 5%, and
that's still less than where I am.
I just got an email that some people have found 5.5 for 30 years, so maybe it's coming down a little bit. I do not know.
Maybe it is coming down. Today actually on Futures Power Hour, we did a directionally neutral trade here in notes. It has a 19 IVR. One thing I like about the notes right now relative to the bonds, first off, it's a better product for retail traders. Half the buying power requirement, half the tick value of ZB. It's also giving you more than double the IVR you see on the screen. So I went out to 51 days. Actually, I'm still trying to get it filled right now, doing the 110, 110 and a half, 114 and a half, 115 short iron condor here. The rationale being that's the yearly high-low range right now. And we're sitting basically halfway there. It's not a great, risk to reward. I'm risking 4 to make 1, but north of a 60% probability of profit. If things calm down, then bonds calm down and everything calms down, right? The volatility dissipates. Maybe we grind back to the upside like we were before the war in Iran. Otherwise, it's something to do right now in bonds. If you have to choose one of the two products, ZN better than ZB, from my view, if you're in the future space.
Oh, totally agree with you, and especially for the retail, as you mentioned, 100% agree. I cannot make an argument to support why you would want to look at ZB over ZN if you were a retail trader. Not at this moment.
Could you help me, Dr. Batista? My head hurts from looking at gold the past few days. I was told that gold was supposed to go up when we went to war.
Yeah, it had a little bit of meme stock kind of attitude towards it, and when they act like that, it gets me a little queasy. I sold volatility today for my option trades today in gold. I did it in GLD. It was a much smaller product, not as good markets, by the way, as you get in /GC. But /GC is just too big of a product, I thought, for most people. I sold a strangle out at the 1 standard deviation in gold with 44 days to go, and I think I'm under 535. So that'd be I'm sorry, that'd be in GLD. Sorry, under 425 and over 535 are my break even. So it would have to make new highs and get back down towards recent lows in the next 40 some odd days. The spread's unchanged. It's probably been a 20-cent loser all day, and now volatility seems to be coming in a little bit. The IV rank is 70. It was around 74 when I put it on, and you got $9.50, I believe, in credit when I sold it. So I don't know. That's the way I'm trying to play gold, without a direction, and just try to sell a little bit of premium in there, and thinking that maybe some people are holding some positions that they don't like in premium wise, and they're waiting for some sort of pop in the price of GLD or the price of gold to get out, and hopefully they're not going to get that, and maybe keep a little bit of pressure on IV, and I'll be able to make a couple of bucks. So I tried it. I don't know how. I'm not that confident, but I feel good.
Tony, you mentioned at the start of the show, we got to talk about oil. So I suppose that's a good way to go out the show. It still has a 110 IVR, the 1 standard deviation expected move, if you look on either end right now. And I added another short iron condor on today. You can go out to about $94 right now at 43 days to expiration and sell calls out there that are trading near 260. So I did another layer here, 92, 94 on the short call side. And then the short put side today, it's 58, 56. I have $16 to $18 on either end of oil right now. This thing works out, even if oil keeps going up. If it doesn't go up another $20 in the next, typical tasty cycle, this could be a winner. So I don't think we should take for granted what the 110 IVR in oil looks like. There was a silly report today that Goldman's sending around to folks that they have faith that flow through the Strait of Hormuz will resume within 4 to 5 days and be at 100% once more within a few weeks.
Yeah.
Okay.
I saw you put that out there in the DMs for the company, and it's encouraging. I hope it happens. But you got to be pretty. As an American, I think you have to be fairly happy the way things are going in a horrible situation like war.
Yeah, we're on a path right now, and hopefully we limit casualties the best we can, and the S&P goes to maybe 7,000.
There you go.
Be not so callous about this, but this is a trading show, and we have more to talk about. So we're going to go to overtime after this. Tony, thanks for standing in for your son. I won't say that you're better than him, but that's my boy. That's my boy, as they would say.
It's good and better. It doesn't make it. It's not good and bad. So it's good and better.
We'll see everyone on the other side of a quick commercial break here. Thanks.
we built Tasty Trade's web platform for today's traders. See it, click it, trade it. Research with fundamentals, endless forecasts, and more. Drill into data, find opportunity, and track the action with hundreds of indicators. Track your options profit and loss history over time per symbol. Note your progress and plan your tactics with a trading journal. See probabilities, max profit, and Greeks in one click. Fund your account and start trading right in the app. The tools, the data, the knowledge. See it, click it, trade it. Join the club. Tasty Trade.
Feel like your wardrobe is missing something? Like style, purpose, and maybe a dancing dog? Can I pet that dog? The new Tasty Trade and tastylive web store is now live. New merch, bold designs. Did we mention all net proceeds go to one tail at a time? Invest in the real bull market, dogs. Go to tastytrade.threadless.com. Grab some gear and help some pups. You get merch, they get a home.
Global markets never sleep. Explore them with Forex, now available on Tasty Trade. Get in on over 80 Forex pairs, 24 hours a day, 5 days a week, with the Forex platform that adapts to your style and speed. FX marks the spot. Trade it on Tasty Trade.
Stocks are higher since the war in Iran started. It's Wednesday, March 4th, 2026. This is Overtime. I'm your host, Chris Vecchio in New York, Ilya Spivak's in San Francisco. We're here for the next 30 minutes to take you through this trading session as the futures market winds down. On the platform, thanks for watching. Come over to YouTube. Tell us what you're trading. We're watching the chat. We're getting funny emails today, Ilya, about how we can circumvent the whole petrodollar status and gold being used as an alternative payment system because, of course, we can get the gold over to Saudi Arabia on camels, as viewers have noted. I appreciate the cheeky joke. But I do have a theory to toss out to you, Ilya, about maybe gold's underperformance recently.
Yes.
I was chewing on it with one of the producers today, and he said it was interesting, which is nice because usually he says my ideas are dumb. So we turn our attention to a stock market today where ultimately things are trading higher and the Mag 7 is leading, even if we find ourselves still stuck in a multi-month trading range here. S&P sells off a little bit into the end of the session, up just under 0.7%. NASDAQ up under 1.5%. You find your dollar peeling back as risk appetite improves, with Bitcoin and Ethereum up substantially throughout the day. Ethereum nearly 9% on the day. Other than that, though, oil broadly stable. There were points during the session where it was actually negative, Ilya, on the day. So,
but only a little bit.
Calming down, you know, we're destroying the Iranian Navy. Pete Hegseth is posting dope videos of submarines shooting torpedoes at frigates and whatnot, and the market's loving it.
I mean,
what are the concerns?
I have a little bit of a different interpretation for what's going on here today. Wouldn't go so far.
This is a YouTube show. We're entertainers, Ilya. Damn it.
I wouldn't go so far as to say the market's loving it. The market certainly stopped freaking out, at least temporarily. And really, it all came down to what we heard yesterday. The president said that we're going to make sure that flows of oil through Hormuz, the Strait of Hormuz, continue. This is, of course, the critical bit. We had a 12% meltdown in South Korea overnight. That was the worst decline since 2008. And by your math, I think maybe the worst ever, maybe even worse than 2008. So
my math?
Well,
math is like universal language.
When I was looking at it, it hadn't been bigger than 2008. But then I think over the course of the subsequent hours, it became that.
Okay.
I write the APAC note, you catch up at the end of Europe and fix my numbers. So as I was looking at it, I mean, it's very easy to understand why this is going on. And it's the global knock-on effect of all of this on energy costs and the inflation implications therein. So it makes sense, I think, that we got a bit of a pause in the story today because, number one, we don't know if this whole letting traffic through Hormuz thing is going to work. But if we're destroying the Iranian Navy, which would be the thing that would disrupt that, then perhaps we can actually make good on this statement. We'll see. But more importantly, we got some interestingly mixed economic data this morning that maybe doesn't quite light the inflation fire on the pre-war economy as intensely as it could. And so, to my mind, the consolidation that we're seeing here today, despite the fact, by the way, that yields are higher again, so it's not like these inflation fears are going away. It's not like oil is falling. It's basically flat on the day after a volatile day. It's not like the dollar is running away. It's pulled back a little after 2 blistering days of rally. It's not like gold is up by anything meaningful on the day. It's actually down a little bit on the day. So we're still looking at very much the same narrative. It's just nothing is really going very far because we're waiting for the inflation story to crystallize. And the data this morning, be it the S&P Global numbers or the ISM numbers, they gave the markets enough fog, I think, on the economic backdrop to say, okay, let's not freak out about inflation right immediately this second. Let's see if this Hormuz story really does unspool some of these fears and revisit.
Ilya, one of the headlines that we got today that was that Qatar is shutting down its LNG facilities for the foreseeable future, temporary halt in production.
We heard that earlier this week. It was temporary, and today made permanent. This is a huge LNG terminal, and this is going to have an impact.
It's going to have an impact. Turnaround time from when they decide to restart to actually getting gas back out of the ground is about 2 weeks, and then to get it to markets 2 weeks after that. So a month, we'll call it, from whenever they decide to restart production. Natural gas prices are down 4.3% here today, however. So there's a little bit of a mismatch in the narrative versus the news and the price action.
Mm-hmm.
We know this is coming to a certain degree. It was possible that this would occur. European gas prices are down as well. So it's not like the market is looking at the news flow.
They've had quite the jump. I mean, the markets have anticipated this to some extent. This was priced in to a degree.
I was looking at the amount of missiles that Iran has launched each day and the amount of drones that they've launched each day, not just at U.S. assets, but ostensibly U.S. assets and allies in the region, Bahrain, Saudi Arabia. It's getting lower. Today, or rather day 5 of the war, there were 45 ballistic missiles fired from Iran. Day 1, there was over 230. Is the market coming around to the mindset that this is contained, not as bad as one would have feared, given the rhetoric of the Iranian regime about their military capacity, the fact that China's not involved, Russia's not involved? It does seem like there's a sense of, okay, this is not spiraling on day 6.
I mean, we got to be careful here because it's not so much that I think people were worried about Iranian military capacity. It had been degraded significantly over the summer last year. Those strikes last year were already a significant knockback. In fact, one might argue that one of the sort of core principles of the Trump team's strategy here isn't to go after strong adversaries. It's to go after adversaries that are weak. And by any stretch of the imagination, Iran is weak. Its arsenal, its launchers were set back substantially last year. Its proxies have been taken apart. Hezbollah is a non-factor. Hamas is in ruins. So this, if ever there was a time, I think what the president's team would argue is this was the time. It's a similar kind of thing with Venezuela. Venezuela was weak. And so there was room to do this. At least that, I think, is what the argument would be. So I think when you look at this, it's not so much that's the issue. I think the larger concern here is, number one, what happens with the knock-on effects, because crude coming out of Iran, if it starts coming out again relatively soon after this, is not going to be coming out at sanctions, pennies on the dollar prices. I think the larger issue, and this is why I think the markets are doing what they're doing, is they're focused on the inflationary aspect of all of this, because that's not going to go away as a consequence of the bombs stopping to fall.
Why hasn't there been more downside in stocks yet?
I mean, it depends where you look. The stocks under the surface of these indices stuck in their range have had quite a bit of churn, depending on where you look. I mean, private equity names look awful. Software names look awful. Other names look great. So
software names, by the way, leading the market today, up 1.9%.
Got to find bargains somewhere. People that want to buy do have to buy something. Might as well buy this than something.
The AI apocalypse is staved off. Iran's just going to bomb all of the Amazon data centers in the Middle East.
We got it, baby. We've solved it.
The AI Ayatollah, right?
There you go. By the way, if ever there was a plot for a great James Bond movie, there we go.
Amazon, which owns MGM Studios, which owns James Bond, is going to make a movie about James Bond stopping the bombings of AWS data centers.
See what I did there?
The future kind of sucks.
So the whole situation, I think, at this point hinges on what this will mean for China getting energy at a price that doesn't destabilize global markets. I think that's the story. And it's been the story since before the US attacked, because all of these various shifting tectonic plates in the outlook for oil, they began to move from there is a glut as far as the eye can see to wait a second, we now have a legitimate inflation risk from energy. That started at the beginning of the year, because the catalysts for it started to come together late last year. This war is an accelerant. It's not the impetus onto itself, which means that if you solve the war, you don't solve the problem. You solve the pace at which it's developing to some extent. But the problem remains.
Are there any bargains in Chinese equities right now then? I've been looking through some of the ETFs, the
You have to
volatility.
believe that there's demand in China in order to look for bargains in Chinese equities, and there isn't any.
You know, we only have 15 minutes left here. What's going on?
That was the short answer. We just got PMI data this week showing their economy shrank again.
Gold responded, as I think many people would expect, right out of the gate on Sunday night, trading higher.
Yeah.
It's now pinned near 51.52, which is where we were prior to the market breaking out last Thursday, Friday. So we haven't totally seized up yet. Silver likewise hasn't totally seized up yet either. When we consider the technicals here, it was trying to get into that feeling better zone, but that's exactly where the market stopped, right near 87, and then it bounced from 90.
Very similar to gold, by the way. It's kind of grinding through the immediate range and now holding the underside of it back as resistance, but there's not really conviction either way. I'm nominally short, but only because on the short-term charts, it looks like it's trying, but I will be back long in a heartbeat.
Well, I got
My view is constructive.
I got a narrative question for you, a narrative violation question here. One of the narratives that you and I have been harping on, for better or for worse, for the past year has been de-dollarization. But
yes,
if it's not
and the lack thereof.
But even if it wasn't an aggressive effort, I'm of the view, and maybe it differs from you, so I can't speak for both of us, but I'm of the view that what companies are doing is it's not that they've been outright selling down US dollar denominated assets. It's that when they have money to recycle into the system, they're not putting it into dollar denominated assets. They've been allocating at the margins to things like gold or foreign currencies.
That was certainly the adjustment. I think we agree. That was the adjustment that happened in the first 6 months of last year, largely around all this tariff uncertainty and people going, you know what? There's too much risk premium that's baked into dollars here. We're just not going to recycle into US markets. We're going to recycle elsewhere, mainly gold, a non-sovereign instrument that stands aside from this whole kerfuffle.
A non-sovereign instrument that is not easily transported by air.
Right.
Which makes me think a lot of the conversation around gold becoming a medium of exchange outside of the fiat system, where we run down the list all the time. Why is the dollar the king? Do you trust the Chinese government controlling your currency vis-a-vis the renminbi? Yeah. No. Do you trust?
Well, and is there liquidity anywhere else? No.
No, and that's like the underlying concern. I mean, you could make the case that the yen could possibly serve that role with their bond markets, or maybe even Europe because of the Italian bond market and Germany.
Only kinda.
Only kinda, and then
those markets are tiny.
Yeah, then there are the concerns, like the British Empire is dead, so like you don't want the pound. The euro could break apart at any moment, so do you really trust it?
Well, just then the volumes are not there.
Yeah,
those governments don't issue enough risk-free assets for there to be a liquid market. Part of the reason that our deficit is actually a tremendous asset for us is we issue a tremendous amount of bonds, which makes our market very liquid, which then attracts capital into it.
So you have real reasons, like Ilya, what just he said. You have nonsensical reasons, like what I'm saying. Either way, if it's the answer's a mix of everything, there's a whole bunch of reasons why. Like these economies just aren't large. So you have the dollar as your world reserve currency, or gold, perhaps. But if you're using gold as a medium of exchange or a store of value, you do have to transport it.
Yes.
And if you're breaking away from a petrodollar system, Ilya, the idea here that we've heard from so many folks in the Eastern European, maybe Russian world, and people of those proclivities, like a zero hedge, Iran and China and Russia are all going to get away from the dollar and transact in local currencies. And if not that, gold. China's going to give Iran gold for oil. Russia's going to get
I have a Chinese ghost city to sell you if you believe that nonsense.
Well, let's just say this is what's happening. China's trying to create a gold-backed yuan settlement system that can operate on the
They're trying for sure. Yes.
Is the biggest development out of Iran this week not the disruption to the Strait of Hormuz, but to the recalibration of the idea that the dollar is no longer the king currency? And I know you're not necessarily on board with the whole de-dollarization thing, but from a global
I think it's utter nonsense.
We're the U.S. Navy flexing its muscles and being like, hey, you guys want your oil to flow? You need our protection. You want gold to come in here? You're not putting it on camels. I'm sorry. That was a funny but ridiculous email, right? It's not coming on land. It's going to have to come in by boat. You want to get your settled oil in you want to settle your oil trades in gold? Good luck without our help.
Well, in some ways, there's some symmetry here, and I think you make an excellent point. Lots of people make a fuss, I would argue rightly, about China's many incursions into places like the South China Sea and its immediate near abroad because it has a giant navy, except it can't project that navy. So its big navy has to operate basically off the Chinese coast. So it's flexing its power in its immediate vicinity. And lots has been made about, oh, well, here we go. Can we defend Guam? Is all of this enough to defend Taiwan? Whatever. But the U.S. controls the oceans. And in fact, that was the post-World War II bargain that made us who we are, that gave us the prosperity in many ways that we have. We said, we don't want territory in the bargain. We just want a war. We don't want territory. We don't want reparations. We just want to set the global commercial rules and run them. And we have done tremendously well at it, and we have the military power to do it. I think in some ways what this Iranian exercise shows us is that this administration is not so much saying we don't want to control the seas or we don't care about controlling the seas. We're insular.
Gotta watch Master and Commander again.
I think instead it's saying we control the seas with guns. We don't need multilateral institutions or your permission. And that's a message for China probably more than anything.
This has to be a message for China, and I'm still trying to wrap my head around on day 6 of this war. How come China hasn't done anything to help?
Well, because there's not much they can do. Why would they want to tether themselves to the wrong side here? Iran's not going to win this war.
China is so.
They might win the peace. We've seen that happen before.
I'm just of the mind that if I were China, even doing something like sending a ship to just sit idly in the Strait of Hormuz to be like, hey, listen, Iran's not going to be firing ballistic missiles in this direction, risking hitting us. The spice will flow. Oil's coming. The ships can go. Like, we're helping secure global trade. That would be
that may happen.
But that would be a significant
it would have to happen with the
forward.
coordination of the United States, because the last thing China wants is a shootout with the U.S. It does not have the kind of Navy to do these things. It can't project that far. It can't refuel that far. This is, by the way, why we need bases overseas and allies, because for us to project power right now in the Persian Gulf, we need the Europeans and our bases in Europe, because we can project power that far because we have allies and bases and refueling and supplies, blah, 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 blah. So maybe we don't need Greenland after all. Just saying.
Never did. 6874 here. Ilya, there was a point today where we were trading basically button on the nose, and we're only 5 points off that level right now. Let's scroll back out to the day. Let's go here. The trading range thus far, year to date, highs that we had late January, lows that we had this week. That's going to give you, roughly speaking, 6880.
Mm-hmm.
We find ourselves trading directly between those two levels. Directionally neutral seems to be working at the index level right now. It's a stock picker's market otherwise. We've been saying this for a few days, with the dispersion trade being a key theme of this show and others, and the morning notes of recent. If you watch the Tasty Report, if you don't, why aren't you? You should be. Ilya, we just got a note from Citadel today that the dispersion trading, as it were, it's a 97th percentile event right now. You look beneath the covers of the indexes and you're getting a lot of different stories impacting each different sector. So the correlation between the average stock and the S&P 500 and the S&P 500 itself is at very, very low levels. On one hand, that's backwards looking, right? That tells us what we've been going through. And usually on the other side of these extreme events, directional beta tends to work a little bit more. So what are you looking for in the news, in the volatility, and the price action to give you a clear signal that you're ready to choose a side with a little bit more gusto when it comes to directional beta?
I mean, at this point, when it comes to the major indexes, nothing has changed in them, so nothing has changed for me. About the only thing I did today was I put on some Bitcoin through IBIT, because that seems to be breaking out, and I don't put that within the context of any of this, because Bitcoin has been dropping like a rock despite whatever's happening on risk sentiment, and today seems to be rebounding despite whatever happens on risk sentiment. So it seems to have a narrative unto
Jane
itself.
Street, Ilya, Jane Street, ever since they got sued a few weeks ago, there's no more 10 a.m. crush. Obviously, that's it.
Could be. But I'm a simpleton. I look at a range here and go, looks like a breakout. Let's buy a call spread, see what happens. So
people were selling South Korean stocks. The money's got to go somewhere.
It's got to go somewhere. So I bought me a call spread here. I'm not looking for the moon and the stars, just to get back to 50. That's the upper end of this thing. 42 to 50 on IBIT. And we'll see. But other than that, I mean, looking at gold, again, I'm a little bit short only as a tactical consideration. I don't like it. I'd rather be long. I think that's the real story, but I'm not going to fight the price action, so I'm waiting. As far as the indexes, nothing has changed since October of last year. And so the question becomes, at what stage is it reasonable to expect that money coming out and rotating out of mega cap tech can actually find a place to rotate into without sinking the index?
Hey, Kospi has its worst day since the global financial crisis, and American markets respond with Mag 7 that actually is outperforming the NASDAQ here ever so slightly today, Ilya.
Well,
if this is a
that's
2022
a new
episode,
thing.
if this is a 2022 episode, you know, the mega cap tech, despite being down for much of 2022, and 2022 was a bad year for all stocks.
Yes.
They did do better than everything else. So they were a safe haven with their gigantic cash moats and, you know, big balance sheets that could
and if the market
tides
starts to come off, I would expect you'd see a change in the dynamics here. So far, XLK, for example, is down for the year. MAGS is down for the year. So far, since the beginning of calendar 2026. So
the best trade on the board isn't in stocks right now, Ilya. It's an oil vol.
Yeah, I agree.
108 IVR. I don't know if you noticed this today. I certainly did. And I put it on right now. In fact, if you went out to the market, you could sell the 93, 95 and go all the way down to the 58, 56. And you could sell that iron condor where oil would have to move $17, $18 in either direction over the next 43 days. And you could get a 3-to-1 effective risk to reward, risking $1,500 to make $500.
Mm-hmm.
I've been more than happy in recent months to go $5 wide on either side of current price to do a short iron condor to get a 3-to-1 type of trade. And you're telling me we can go $17, $18 wide? I mean, I think that the noise aside, if what we were discussing yesterday on the show about shipping lanes reopening and no Saudi shut-in and U.S. munitions restraints ultimately becoming a gravity factor that prevents this from becoming a more substantial war. And to that point, Ilya, they want to invoke the Defense Production Act. That signals to the American public it's not going to be a short war. So the munitions problem is not just a reality one, it's a political one perhaps too. Selling oil vol on the other side of a 25 or 30-day window to me makes a good deal of sense. So that's what I'm doing here. I've been layering in multiple short iron condors here in oil around 43 days. So this thing better stay. Calm down. Otherwise, I'm going to have a bit of an issue on my hands. But Ilya, before we head out the door, what are we talking about on Macro Money today?
We're going to be talking about the slew of economic numbers that came out today and how they impact this calculus. I think when the dust settled after what the president said yesterday, it really became a story of, okay, so the U.S. is going to ensure that oil passes Hormuz and China doesn't have to destabilize the market any more than they already have. And so, okay, maybe. Now let's see where the economy was heading into this, because, of course, everything we heard from the Fed going into this war was rates are sticky. We don't want to cut them. We are concerned about inflation. The labor market seems to be anchoring and doing okay after what we did. We don't need to do any more. Obviously, stocks haven't really gone anywhere since October last year when the Fed chastised markets for over-extrapolating rate cuts. That's the story. It remains the story. This war increasingly doesn't look like a separate story. It looks like it's the same one. It's just another episode in the will the markets get the rate cuts that they want, or will the Fed prevail on them that they don't need them and won't have them. So that's what we are going to have to balance here. And as we jump from war headlines, part of the story is, well, where is the U.S. economy? And how much of an oil rise do we need for this inflation issue to be an even bigger issue? Or is the baseline for the economy a little bit friendlier and we don't need to be as worried?
Oh, yeah. Some fun news today about Stephen Mirren. His post at the Federal Reserve has been, Trump officially nominated Kevin Warsh to take his spot. So the administration is acknowledging that Powell may not be leaving and that Mirren can't stay if they want to get Warsh in the mix as a FOMC governor so that he could eventually become chair. Hey, maybe we're not getting a rate cut in June, Ilya. We're done for today. Overtime out of time for this Wednesday. We'll be back tomorrow, same time, same place, 3 Eastern, 4 Eastern, 3 Central. So for Ilya Spivak, I've been Chris Vecchio. Good luck trading, but be sure to stick around. Ilya's here with Macro Money up next.
The market doesn't stop. So why should you? Diversify your portfolio with stocks, options, futures, crypto, and more from Tasty Trade. Focus on the markets that matter to you. See the odds before you trade using curve analysis, IV rank, and more tools. Get industry insights that help you find your next trade right where you need it. Tasty Trade. Download today.
Stocks go up and stocks go down. Markets move. Beta is a way to measure the movement of a specific stock relative to the market as a whole. In simple terms, it tells us if the underlying has more volatility of price movement relative to the S&P 500. Beta of 1 is our control here, SPY being the underlying. If the beta of a stock is less than 1, it would mean the stock typically moves less than the SPY. If the beta of the stock is greater than 1, it means the stock tends to move with greater volatility than the SPY.
Why do you want high IV rank when you sell options? Because you get more money when you open your trade. People get all tweaky when they don't know how a stock is going to act. They'll pay more for guarantees that are written into options contracts. And if they're getting super scared about it, they'll pay a lot more for the options. If you're selling those options, that means there's more credit you might keep at the end of the trade. Since IV rank measures today's IV against where it's been in the past, high IV rank tells you if people want to throw more money at you now. So look for high IV rank when you sell options. Pretty simple.
Ready to take your trading skills to the next level? Dive into the world of stocks, options, and futures with Tasty.
We built Tasty Trade's web platform for today's traders. Drill into data, find opportunity, and track the action with hundreds of indicators. Fund your account and start trading right in the app. Join the club. Tasty Trade.
The markets are waiting for the next shoe to drop. That's the story here after another day of seesaw volatility on Wall Street and across the broader markets. I'm Ilya Spivak, head of Global Macro here at tastylive, and this is Macro Money. We're going to be looking at what the markets did today. We had some economic data enter the mix alongside the fast and furious war in the Middle East headlines to contend with. And the markets ultimately got left wondering what it all means. So we're going to take apart what the price action said. We're going to try to take apart what the data is suggesting here, and see if we can't find what the connective tissue is that tells us what the likely next move is going to be. So let's start here with a look at the S&P 500, which ultimately goes nowhere. We are still flirting with these levels that prevailed at the start of the week when we had that gap lower on the news that the U.S. and Israel struck Iran. So here was that gap right here. We've since just oscillated at the bottom of this range. We're not going up. We're not going down. We're waiting to see what happens. Even crude oil, which of course has had a much wilder time against this backdrop, today is again hovering at this $75 level and waiting to see what happens. That, of course, would have been much hairier were we not to get an announcement from U.S. President Trump yesterday saying that we are going to ensure, that is, the U.S. is going to ensure safe passage for energy through the Strait of Hormuz. And since then, we've seen the U.S. really take the focus to destroying Iran's navy. So the situation may be stabilizing because, of course, that we've had this surge in oil has been very unnerving for the markets. And really the main driver, seemingly, of how the markets are seeing the pass-through from this war into the markets themselves and into the economy more generally. And increasingly, especially over the past, let's call it 24 to 48 hours, it's become a story about inflation and what this surge in energy prices will mean. We had markets, for example, in South Korea in absolute meltdown mode overnight. They lost something on the order of 12%. That was the largest decline, at least since the 2008 global financial crisis, if not ever, depending on sort of how you round and what you look at as a benchmark. But the impetus there, the rise in energy costs. And so when we look at what is occurring here and sort of how we get this pause in the story, it is the implications of what's happening for inflation that really seems to be the driving narrative. Witness what's going on in gold. One might think gold would do very well, as it usually does, in geopolitical instability types of situations. Not the case here. Yesterday we had a blistering sell-off. Today we try to rebound from it and ultimately end up coming up short. Ultimately, gold doesn't go anywhere, largely. And why? Ostensibly because the markets are looking at this surge in oil and saying, well, how in the world are we supposed to have rate cuts? How in the world are interest rates going to come down if this is the inflationary impetus? And of course, gold yields nothing, so the prospect of higher interest rates is difficult to ignore. We can see what those interest rates are doing here. One of the more convincing moves in markets today and throughout the week has been the blistering run-up in interest rates. This is the 10-year bond. You can see here, it's not really breaking its range, but it is certainly probing the floor here and has a much more convincing move on it today than gold or stocks or crude oil, for that matter. It's a similar story for the U.S. dollar. There's a little bit of a pullback here, but the velocity and the commitment of this rally over the preceding 2 days seems to speak to strength and to the kind of strength that reflects building appeal from the yield side of things. It's difficult to chalk all of this up to the dollar's appeal as a liquidity haven at times of risk aversion, though, of course, it is that because we haven't had that much risk aversion. The stock market is basically trapped in a range. Were we to get a massive sell-off and this were what we'd be seeing, one could say, well, the dollar is behaving as liquidity havens behave. Well, it's rallying without that tailwind. Meanwhile, gold is falling, yields are rising. The read-through, again, seems to be that what the markets have arrived at is that what this war boils down to is an inflationary impetus through the transmission mechanism that is crude oil. And what that means is some sort of threat to sentiment because it might constrain Fed rate cuts. We've said before, of course, to fill out the narrative here, that the general tendency seems to be that it takes about a month for a meaningful move in oil to show up or start showing up in CPI. So the expectation here would be that this run up back to 75 is what we should start looking for in CPI here. And if it ends up being sticky, the uplift could be sticky too, taking the Fed away from its target. You can see here we're hovering just above 2% on CPI. We're further away on PCE, the Fed's favored gauge. In fact, core PCE hit 3% for the first time in years in December. So we're a little bit further away there. But being generous on CPI, we're hovering just above the 2% objective. And what this move in oil would imply is that the next move for inflation is going to be in the wrong direction. And of course, we can see here from this study that Bloomberg put together from earlier today that what this war has done is it has ballooned geopolitical risk as a premium in oil prices. And as long as this continues, and by the way, since the beginning of the year, we've seen this build. But needless to say, much more so here. And so when we consider then what this is, that's the read through. This is a story about what this war means ultimately, and interestingly enough, for the Fed. Here's the scenario breakdown that the Bloomberg economists doing this study came up with. They have basically 4 versions of this story. And the real question, of course, is, are we going to get back to basically where we were, so around $65 a barrel, or what we have here as a scenario for where we're going? Now, of course, at the current level, we're already flirting with about here. And that's really the interesting question. Because if we start to settle around here, and there's good arguments for this to happen even if the shooting stops, then we have some real implications for inflation and to some extent for growth as well. And of course, if we get the extreme scenario, which Bloomberg seems to think is relatively low likelihood, then we could go even higher. But let's consider how we end up stuck at $80 a barrel. Well, we've talked a lot about why crude oil began rallying, not in the beginning of this war, but as we can see here clearly, since the beginning of the year. And that's because in the tail end of 2025, we started to get a lot of overlapping influences here, suggesting that the broadly accepted forecast for a supply glut isn't going to work out quite as expected. We had simultaneously the decapitation of the regime in Venezuela, the beginnings of the unrest in Iran with a popular uprising, which the government then responded to brutally by killing as many as 30,000 people by most reports. And then we have the hounding of Russian shadow fleet tankers on the seas by the US and then by other powers joining in, notably France and, interestingly enough, India, which was a key beneficiary along with China of pennies on the dollar crude busting sanctions. So what all of this came together to signal was that, in particular, China, the world's largest importer of oil and the beneficiary of cheap crude, because it was buying them from this shadow fleet as it ferried that oil from Iran, from Venezuela, and of course from Russia at steep discounts, because they weren't supposed to be buying it because there's sanctions on the crude. So the question was, okay, can China still buy below market rate crude as a consequence of just this? And then when the war happens, that threat obviously is magnified many times over because, among other things, tensions in the Strait of Hormuz mean China can't go after backup supplies because a lot of the ones that exist in size exist elsewhere in the Persian Gulf. be it Saudi or some of the other Gulf producers, or Iraq, where it has to come out through the Gulf. So we are looking at a situation where really the story before the war was that U.S. actions and the actions of the street in Tehran and elsewhere in Iran were threatening China's ability to get cheap energy in size. After the war, that ability has been hampered several times over. Even if the pledge that the president made to keep the strait open is going to be ultimately enforceable, even if the shooting stops with some sort of settlement, that settlement almost certainly is going to include some degree of sanctions relief and some amount of the stopping of selling of Iranian oil at below market rates to China. And of course, all the other issues remain, including the hounding of Russian tankers. So there is a world here in which getting to $80 a barrel becomes a relatively easy new normal, if only because the world's largest importer can no longer count on paying pennies on the dollar for their crude as a function of this reorientation. Now, this Bloomberg study is telling us that if we were to get stuck at $80 oil, that would be an uplift of on U.S. inflation of about 0.3%. Not the worst, but also meaningful. If we were to get to $108 oil, that uplift to inflation would be closer to 0.8%. Obviously, taking the Fed, at least on most of its measures, closer to something like a 3 and change, maybe even approaching 4% inflation, depending on where you look. So the situation here, even in the relatively modest scenario, is an inflationary situation at a time when the market doesn't want an inflationary situation. And that's really the essence of it. Now, against this backdrop, we saw some interesting economic data to tell us, war aside, where the U.S. economy is on these measures. The S&P Global PMI data came out with something perhaps helpful to those waiting for Fed rate cuts. A significant decline in the pace of U.S. economic activity from S&P Global, the weakest, in fact, rate of growth in 10 months. As ever, this is in the logic of PMIs. So above 50 is growth, below 50 is contraction. The further you go above 50, the faster the growth. The further you go below 50, the faster the contraction. And what we have here is a situation where there's growth, certainly, we're above 50, but the weakest growth in 10 months. Moreover, under the surface in these numbers, we can see the price components are relatively elevated. S&P saying that increases in both costs and selling prices were little changed in this data and well above series averages. We can see here that seems to portend some uplift to CPI once this higher frequency data starts to be discernible there. But that's not all. The rival PMI numbers out of the Institute for Supply Management had almost the inverse story. The headline growth data was white hot. The service sector coming in with the strongest growth since August of 2022. So back here. Business activity surging. Strongest since September 2024. New orders, sharpest rise in 17 months. Even employment growth accelerated. To give the Fed its due, it's been saying most recently that the cuts that they did last year trying to help the labor market are perhaps sufficient because the labor market seems to be doing better. Well, the ISM PMI data certainly seems to agree. The service sector is by far the biggest employer of Americans. And we have here the strongest growth rate in a year. So for employment in the service sector. So on one hand, very good for the economy, it seems, but also the kind of thing that might get you thinking about inflation. Now, in this particular report, we didn't get that inflation. The underlying inflation component in the data was the lowest since March of last year, though still above 60, which is consistent with cost pressures persisting. And there is perhaps some sequencing here. It takes a little bit of time for the economy to be this hot before that starts to knock over into prices. So maybe we just haven't seen that yet. In any case, the markets still want their rate cuts. They've got 44 basis points that they're pricing in for this year, 19 basis points for next year. So they're 6 basis points shy of 2 cuts for this year, 6 basis points shy of a third cut to follow next year, which puts them on the side of 75 basis points cumulatively between now and next year, the end of next year. Now, 62 basis points obviously is not 75, so it hasn't been fully discounted, but the cumulative likelihood here is better than even odds. Well, way better than even, as a matter of fact, north of 70% that we're going to get 2 cuts this year, north of 70% approaching 80 that we're going to get a third one next year. So putting all of this together, it looks like 3 cuts are the likelier than not perspective from the markets, which of course is 1 extra cut beyond what the Fed projected in December. And listening to Fed rhetoric since then, if anything, they're looking to do less, not more. The minutes from the January FOMC were hawkish. The comments from Fed officials before and after those minutes, hawkish. Even the usual suspects that were arguing for cuts going back to the middle of last year. Policymakers like Chris Waller, Stephen Meehan, they've changed their tune somewhat and moderated away from easing. And of course, that's been a problem for stock markets because they really haven't gone anywhere since the Fed chastised the dovish expectations that traders were holding on to. Fed Chair Powell came out in late October after that month's FOMC meeting and gave the market a talking to at the press conference following the conclave and basically told them, you're over extrapolating. We're not saying nearly what you think we're saying. We're not nearly as dovish as you want to believe we are. Quit it. And since then, the S&P has been stuck. And that 7,000 level has been as a ceiling. Meanwhile, Fed policy expectations have been basically anchored. We can see here we're kind of hovering on 3 rate cuts to 2 rate cuts for the next year and some change. And that's really it. The markets want some confirmation that this is going to happen. And until then, sentiment is stuck. Now, we've argued that the reason for this is trade policy uncertainty. This is why the markets want cuts when, in fact, the economy doesn't seem to necessarily beckon them. And we can see here from the World Trade Policy Uncertainty Index why this has been incredibly volatile, despite the come down in the averages from the Liberation Day extremes of last year when the president first unveiled his reciprocal tariffs. This is way more volatile than even the first Trump term, certainly more volatile than the heat of COVID, which one would think would be a source of tremendous uncertainty around global trade, considering the entire global supply chain was basically put on pause. And the reason, of course, that the markets are concerned about this trade volatility is a familiar one. The story in stock markets and for broader sentiment has been optimism around tech, mainly the narrative around AI and the transformational potential therein. Well, as we've said on this show many times before, the supply chain for AI demands frictionless global trade. This is why the markets want these cuts. They are not getting frictionless global trade. And so what they want is a cheap money backstop in case something goes haywire. Well, it's not easy to get that cheap money backstop when crude oil is surging and threatening to bake in anywhere, as we see, between 0.3 and 0.8% extra in inflation into CPI. So this then becomes the essence of the issue. It's not so much war in Iran as it is that war in Iran fitting into a narrative where the markets want rate cuts, where the Fed seems to be resistant, and where events have conspired to make the Fed more right on the issue and the markets left disappointed, which, as we can see from how we've behaved since October, is a coiled spring waiting to break somewhere. And if that story in inflation and in oil ends with the markets not getting their way, well, then there's a strong possibility, it seems, that the break is downward. So with that in mind, a little bit of update on positioning here. I am still a little touch short gold. It hasn't really gone anywhere since yesterday, so the trade is down a touch, but not really anything meaningful. We're still waiting for this thing to find momentum. As we saw in the charts earlier, it's still trying to figure out whether it wants follow through on yesterday's sell-off, and jury's out on that for now. Similarly with the Aussie dollar, short a little bit there from yesterday. Again, looking to see what happens. It got a little bit of a bounce today, thanks to the slight improvement in risk sentiment within the range. But we'll see if that doesn't prove temporary. The story there, again, just waiting for the price action to have conviction. Still short the pound and the euro, both of which took a little bit of a step in the wrong direction today, but overall are still very much pointed in favor of the dollar. We, of course, saw the dollar breaking out higher as we talked earlier. Probably the biggest change to the portfolio today, a little bit of a long side exposure to Bitcoin, which seemed to break higher out of its consolidation range, doing this via a 72-day call spread in IBIT. Lots of liquidity there, lots of possibility then for 2-to-1 or better risk reward. And so that's what we set up here. And still short overall risk via the S&P and the NASDAQ ETFs, rather, doing all of this through owning put verticals. The timeline here on the NASDAQ one is getting maybe a little bit closer to put up or shut up mode, but still some time here. And of course, plenty of time on the S&P, and still a ton of time in these call spreads on oil, which I have had now for quite some time. I started buying oil at the beginning of the year. I've been sitting in this position now for 54 days, and there's still 44 days left on it. So I'm going to continue sitting while oil continues to figure how it is going to proceed. But so far, no reason to jump ship, at least in my mind. And that is macro money for today. As ever, we are here Monday through Thursday. That's right after overtime, a show that I co-host with Chris Vecchio, looking at the Wall Street close and where things might go therefrom. I am likewise commenting at Ilya Spivak on the platform formerly known as Twitter and on Blue Sky, and writing for the news and insights portion of tastylive.com. If you're watching this on YouTube, like and subscribe. Macro Money is back tomorrow. Happy trading.